Can y'all hear me? We're going to get started here in 1 minute. Okay. So we're going to get right into it here in a second. Get pre-market going. How's everyone doing this morning at home? DMAC just started popping here. Flavor of the week, obviously, are these micro floats. These guys actually have an 8K this morning. Let's see here. Check this 8K quickly. It's another SPAC. That's been the flavor of the week, y'all. Obviously with EDTX yesterday, GGAA, total madness. So at least there's an 8K on DMAC this morning. Float's tiny. Got to hit the daily chart. For those who are joining us from home, I'm here with some of my Wolfpack students, and we're here in Dallas just doing a live masterclass. So I'm not going to spend, we're going to do some Q&A during different times during this day. We're going to be streaming all day. So we'll be opening up for Q&A at different points throughout the day. And that is when we should really ask questions. If I can catch your guys' questions while they're kind of popping up, we'll do. If not, just save it for Q&A. So we're going to do some quick pre-market prep here. The story of the week has been the SPAC plays. Obviously, yesterday, 15 to 80 on EDTX was wild. The morning was kind of slow, and then we had EDTX with their little midday move here. Nice gap up this morning even. You know, it held decently after hours and then into pre-market. So little gap going on there. The best sympathy play yesterday was GGAA, which we were looking at here live during right up in here. Very simple. And I was explaining to my people here yesterday how these things work and why I was watching this. Very simple, finding sympathy plays. We'll talk about it a lot today too. But when you have a stock like EDTX run from 15 or $10 to $80 intraday, it's going to spark some sort of sympathy play most of the time. GGAA hit the scan on low volume, and it was also a $15 SPAC. So it was kind of simple. The pullback, you know, we were talking about it yesterday. We'll get more into it today. But awesome move. That being said, these things, guys, these SPAC plays are just very dangerous. If you're not getting awesome entries, they are the most dangerous things that you can long if you're chasing, okay? If you're chasing this into the 30s, 40s, 50s. GGAA got halted by NASDAQ for more information, which happens at times when stocks run for no reason. And that was the main issue I had, you know, yesterday. We had all these stocks running for no, and it's not that there's no reason. They're sympathy plays. EDTX went, so GGAA went. CCAI went yesterday. If you look, 11 to 30. Oh, they didn't quite get going. Rose was another one yesterday. Rose went 11 to 20 yesterday. So Very interesting. No, I didn't. I missed GGAA. And then the problem with these sympathy plays, and I was trying to explain them as well, when they're illiquid, they're already halting up. They could easily halt down, and all of them go back to where they came from, for the most part outside of EDTX. You can see Rose gapping a little bit this morning, probably also, again, in sympathy to EDTX gapping this morning. And if GGAA didn't get halted by NASDAQ, we would have seen GGA gapping this morning, right? Most likely. So these SPAC plays have been where it's at. I see another one popping on another micro float on the scan PRFX. This one popped earlier this week. Sorry. PRFX, 4 days ago was the reverse split. Okay, yeah, these guys were a reverse split pump a few days ago, went to 26. Possible first green day on PRFX at the moment. Possible first green day bounce here on PRFX will be worth a watch. Ultimately, risk idea would be something like 6 here. I'd keep that in mind, like off lows. But I'd want to see 7 hold if this were to have any strength today. That's what I would want to see hold. So I may have eyes on PRFX this morning for potential first green day. Again, we got EDTX gapping up again. These are tough to play, guys, and they're really, really risky, okay? They're really, really risky. Of course, there's a lot of money to be made. There's a lot of money to be lost, okay? Anyone FOMOing in thinking that this is going to go higher or have higher lows or anything outside of EDTX, which is holding up nicely, most of them have gotten really beaten up. So, got to keep that in mind. Let's go through the scan some more. So, DMAC. DMAC, our top percent gainer at the moment. What did they say on this 8K? Not much, it looks like. Nothing too crazy. Yeah, Fat P was another. We had a handful of stocks yesterday and Fat P didn't quite get going, 10 to 1280. So Fat P didn't quite get going. CCAI didn't quite get going. Still might be worth a watch today. I'm just not very comfortable with playing micro float SPACs unless I get really, really amazing entries. For me, I'm just always waiting for a big pool. BRLI is another. This is one I was trying to load up near lows a bit yesterday, and then I took the order off, but now BRLI is gapping up. This might be one of the better looking ones this morning. Sorry, one sec. Let me sync my tabs. BRLA kind of tried to go yesterday. It's a really funky looking chart, but all the SPAC charts are. They're all very illiquid up until when they're not. And then they can move a lot without a lot of volume because of how small these micro floats are, okay? Other issue I had yesterday, which I was mentioning, was obviously I just got off of a month of not trading, essentially, being with my dad in Phoenix and being at the hospital and whatnot. So definitely some ring rust. And when we get something like a sympathy play like GGAA, which is normally not quite bread and butter, it's a little bit higher price than I normally like to play these things. But if it's $15, $10, $15 stocks that are spiking to $50, and I'm looking for $10, $15 stocks. We talk about this all the time. Being in the right place, understanding where the volume will go when we have big runners is super key to what I do. So really today, just looking at my scan right now, we're just kind of going through the scan. AIMD's up there for some reason. Not quite the right price range. So though normally I'm looking for stocks usually 10 and under, and I don't discriminate in that range. When it's only $10 stocks and over that are running, then I have to adjust. I either have to adjust and try to take advantage of what's going on there, or I sit on my hands and don't do anything until I see cheaper runners again. Does that make sense? Those are the two ways. The safest way that I know of to have longevity is to just ignore what you don't understand. Okay? Just ignore it. I mean, or watch and don't play. But I try to, for the most part, if it's something I'm uncomfortable with, size down if I'm going to play it, you know? And the cool part about these SPAC plays is that when I'm looking to play them, I'm not looking to take big size. I don't want big size. I can't necessarily have big size if it's too illiquid. But you don't need big size to make really good money when stocks are moving 20, 30 bucks intraday in the span of 10, 20, 30 minutes. So I try to keep that in mind as well. But we were talking about it yesterday as well. It's super easy to get caught up in looking at something like EDTX, going back and doing your little math yesterday and saying if I had this many shares at 15, how much money you would have made if you sold it at 80, which is just very, very, very unrealistic. And, you know, most people, you have people who are chasing 40, 50, 60 bucks on the 70, 80 probably even. So it's really good to see though. EDTX, I'm not going to play it. It's just out of my range. I'll kind of keep eyes on it because if it goes parabolic for some reason and goes to like 100 or 200 or 300 today or something crazy like that, even if it pushes highs and goes through like 100, 150 bucks, we'll see probably like BRLI pop really hard. What's WAVS? Here's another SPAC right here. WAVS, you can see already pre-market went 11 to 1850, you know? So you don't see me looking at $1 and $2 stocks right now. I mean, they're on the scan. There are some, but we're seeing basically all SPACs on my scan, right? BRLI, LUNR. METX is kind of a lower float bottom bouncer to get away from the $10 stocks. I want to just make sure I'm going through my scan properly. Love the bottom bouncers. Purchase of 200 units of Antminer. Oh, they're Bitcoin. Might be worth a watch on METX. Markets are open. Let's go. I'm going to move my scan. Actually, no, we won't. Let's check out RXRX too. I didn't want to forget about that one. The only issue I have with this is that I needed to, for me, when I look at a chart like RXRX, I'm going to do this, and I'm also going to okay. Sorry, I'll just moving some stuff around real quick. What did? DMAC? Halted where? Up? Down. Okay. WAVS halted up. And these plays are tough, guys. Like, they are all going to halt. Yeah, damn it. I should have had some of that. Sucks. Sucks. Huh? I God, that sucks. So sometimes we were talking about the sympathy plays, like they can go into the next day. Like when we have a handful, and I was looking at, BRLI, some of the ones that didn't quite get going, even Fat P, something like this, which actually got a little bit more volume than we got on BRLI yesterday. Huh? Oh crap, you guys. Sorry. Let me get my screen up, y'all. What halted? Yeah, so I mean, first Green Day bounce there on PRFX. Nice to see. Okay. What just happened? Hopefully not for me. Yeah, PRFX has halted. DMAC halted down. Um, PRFX first Green Day. I don't mess with these after they halt, guys, for the most part, unless I get a pull and I have a lot of conviction. Once they've halted 1, 2 times, that's kind of it for me. PRFX, EDTX, what are they doing? They halted up. DMAC halted down, but I'll be watching that potentially. WAVS, like we said, halted up. What's ARBB? Not sure what that is. Another SPAC group. BRLI halt up. My whole game, when this starts to happen and people are getting manic and just chasing and everyone's chasing, is to kind of do the opposite and stay calm. CCAI also still worth a watch this morning. Normally these charts are super ugly, and it is tough when you get charts that are just have never really been liquid. But break down or out? That would be nice. Still sitting on these 9,000 shares for now. Would love a red-green push here because that would be also kind of towards this breakout area. On Q's nice. Trying to break out here. Still sitting on my 9s. This will be a great swing if it can keep going. Just wish I had more size. The POAI swing still working for now. Red day today, though. Kind of first red day, but it's been a liquid and it's gone red almost every single day, so I haven't been too concerned. BFRG is just still kind of sitting around, not doing much. But so my swings are working well still. EDTX pushing back to 71. You know why? It's weird that they would halt GGAA and not halt EDTX and or any of the others. So it's kind of that is the issue. When you have stocks running on zero catalyst and they run too much, sometimes the SEC will NASDAQ will step in. Let me get the stream back up for on the TV behind me, guys. BRLI just halted down. So here's the problem, guys. Like, you take a position, say we took BRLI. Say I took it yesterday, all right? In the 11s where I was trying to get it. The problem is these things get into this halt thing. Halt up, halt down. Could halt down again, then halt up, then could squeeze. You know, like it's not trading. These stocks don't trade. They just halt. And kind of interesting. Usually, so what we've been seeing usually is like, at least yesterday, were halts up on the main plays, and then big halts up, and then gaps up, and then gap ups, and then maybe halt down. But usually the first halt down, it gaps down. So we'll see if this is going to hold low a day area and then try to push or something. But it is very, very tricky. And don't beat yourself up if you're not making money on these. And pat yourself on the back if you're not chasing these things, because it takes discipline to watch stocks moving like this and not partake. I would love to partake. It's just about entries for me. It's about getting a good enough entry to where if I have to walk away for 5 minutes, I don't come back to a $5 gap down or $10 pull or something crazy. Or halt from the SEC or from NASDAQ. Let's get back to DMAC really quick. DMAC halted down and halted down, okay, on DMAC. WAVS, same thing. Look, halt up, halt down. Everyone right now are trying to chase these things this morning. Very tricky. LUNR, decent higher low there. You know, when we get morning spike patterns, this area back towards low a day is the entry for me. And that cuts across like $10 stocks, $5 stocks, $1 stocks. It doesn't matter what it is. Hey, could you hit me that code again? Could you tap that screen and hit me that code? Press the top right button, WebEx. Oh, not that one. Hit the X again. Right below it. Yeah. Does it say, give you a code there? Let me see. What is it? AXU? Okay. VAA. Check this PRFX first green day is nice, you know, just straight spike out the gate, really. Give you a few minutes to pull the trigger, which has been the difficult part of the markets for me over the last week. Month and a half, really, actually, since just before what happened to my dad. And we've been getting morning spikes, man. And these stocks have not been setting up for 5 or 10 minutes. They've either been morning spikes or they've been morning fades. We haven't been getting gap and crap reversals so much. For quite a while, for months and months, we haven't really seen too many clean gap and crap reversals. So I've been kind of laying off the pattern and trying to adjust. It is really hard to not be chasey on these plays, and I don't like chasing at all. Which is why yesterday, when we saw BRLI start to go from like 11 to 12, I tried to put orders down here. I canceled them. I shouldn't have canceled them. I would have gotten filled, you know. Did they really? Boom. So it is a perfect example, you know. This stuff, yeah, it's bright and shiny, you know, and it looks like you can make millions there, but it's so risky, man. It's so risky. There's no rhyme or reason. There's no PRs, okay? And stocks are, you know, just going nuts. I'm surprised that they're doing this because they're really, I don't know who, maybe they hired someone new because it's always different. You know, there are times where these things run like this. What about Top when it went to 25 or when HKD, why was that not suspended? You know what I mean? Like day 2 or day 3 of the huge run. So it seems like they're kind of selective on their timing as to when they're doing this. Maybe it's because it's these SPACs or something like that. But you would think like low float Chinese scam pumps, when those are running 1,000% on the week, or 500, 400% intraday, like on TOP, that those would have been suspended. But that's not the case, and they can be. And I always keep that in mind. And that's why I try not to be greedy. And I definitely don't play these things once they've gone 100, 200, 300%. I'm not looking to buy the dip. I'm not looking to play day two. I'm not looking for anything. You have to protect yourself. You really do. You have to protect yourself. The last thing you want to do, if you're trading if you're trading EDTX at $63 right now and you have a small account, you're all in to buy any shares most of the time. And now all of your money, if you were trying to play it for some reason, is just sitting. And when this opens up in however many days that it's going to open up in, it's going to open up at like 20 or 10 or whatever. It's going to be ugly as hell. Okay. Same with GGAA. That's why the entry for me and the plays for me are early. When we were looking at GGA, this is the play, and I would not have been in it till 50. I said 25 was the number I liked on it. And that's great. If you can do something like that, I don't mind. It's that home run mentality that gets you killed when you're trading, period. It fucks us up so bad when you're thinking that this trade is the trade, the life-changing trade. Every single time I've done that, or told my wife in particular, it does not work. Specifically when I tell my wife this is the trade or the biggest trade of my career coming, never. Not one time has it worked, so I don't tell her shit. I don't. She's jinxes it when I tell her. She knows that too now. So if I start to tell her, she's like, just don't. I'm like, yeah, you're probably right. All right, let's keep our eyes out. And like, now that we've seen both of those halt, it will likely really kill the momentum on the rest of these SPACs, guys. Okay? So if you're sitting around like, oh, I'm going to dip by this SPAC or that SPAC, sure, they can go. Anything can squeeze at any time if shorts are stepping in. And shorts will be aggressive probably on these sympathies today, I'd imagine. At some point, they're going to have to cover too and stuff like that. So they could bounce. May see some bounce in some of these things. Nicola keeps going, huh? I thought about the breakout yesterday a little bit. These charts, guys, these are market-driven charts, okay? We're seeing a lot of these charts that have been grinding up and breaking out now, okay? So breakouts are kind of in play to me. Y'all know it's my least favorite strategy, at least to teach. Not my favorite strategy to play. But I play breakouts when they are working, okay? Because breakouts are awesome when they're working, especially if and it's macro-driven breakouts right now, actually. Market-driven breakouts are what I'm seeing for the most part. So a lot of tickers I'm getting to are starting to already get extended at times, and it kind of gets tough to play. But that's why stocks like this, like QBTS right now, that I've just been kind of swinging, that is the whole point of that, is that first of all, it's in a sector that has gained a lot of strength this year and recognition. And second of all, it's got one of these other charts that has this breakout looking thing going on, with volume, most importantly, with volume. Oh, why is it not working? Sorry, guys. I thought my screen was up. Hey, could you do that again so I can try again? Yeah, that. Yep. There you go, you guys. Okay. Yeah, it's so nice. That's probably the play of the day. Anyone hit it in the Discord? Anyone hit the PRFX? I feel like that's a B Hannah play. So you guys got to keep that in mind, y'all. You know, with GGAA getting what happened. Look at BRLI, guys. Look at that. Halt down 11. Okay, and this is where often the biggest runners of the year I'm not in. They're just illiquid. They do stuff like this, and they can just be really dangerous situations. I haven't made my money over time by swinging for the fences on crazy shit like this. Okay, this is straight. We were talking yesterday. We talked in depth about some of the differences between gambling and trading from my vast amount of experience with both. This is where it feels like gambling to me. When it feels like just straight gambling, I don't have set risk reward. You know, outside of that GGAA trade yesterday, that one trade as a sympathy for me, all the rest of this has been just straight gambly. And I don't like my trading to look like that. If I can't say, here's where I'm risking, here's my reward, this is how much I'm risking, and then have more to the trade than that, then I'm not doing it, you know? So happy. Didn't make money, didn't lose money. You know, PRFX was the best setup this morning, in my opinion. Is it? Oh, money. Let's go. It's a great looking breakout chart right there. Could get stuff too. Kind of a funky one, but I'll take it. 268. Nice. Very interesting chart. Thoughts on AI being stifled during the current market strength? Yeah, I mean, it's not completely stifled. It's still sitting at $40 a share right now. Okay. It's still sitting right out by these highs. I wouldn't read too much into it. This one is just kind of doing its thing at the moment. It's been trading big volume all year. I'm really butthurt about it. I'm really butthurt about AI not buying, not necessarily the dip to 16, but the 20 break is where this day right here, this 20 break was so money. You know, that level was super key. That was the swing level to me. That's the level I wanted when it started fading from here after that short hit piece. So it's just not volatile at the moment. That's all for AI. Really, really, really nice first green day on PRFX. Pretty perfect first green day and pattern there. Big, huge parabolic, gap down, 2 days of fade, gap up. Very simple, you know. Drug today did a split today, so keep eyes on them. 1 for 5, so their float's like 3 something now, I think. AIMD trying to hold a buck. BRLA halted up off of 1150. It looks like. Did they? Again, doesn't really matter to me. All the way back to lows. You know, every time these things do this. Crazy SPAC plays. It'd be different if there was like, if they had catalysts and stuff like that, it would be different. And if they put out a catalyst, then NASDAQ doesn't halt them, you know? If they put out a catalyst, then NASDAQ's not going to halt them. But they didn't. I haven't been playing these bankruptcy bounces like BBBYQ. I haven't been playing them. You know, the nicest bounce was like this 5-cent bounce, I guess you could say, to 30. That was a sweet bounce. But now it's just been kind of grinding and being non-volatile on BBBY. And I don't know any. So the bankruptcy proceedings and what they're doing in the background is going to determine a lot of what happens to obviously Bed Bath & Beyond. And I'm not familiar with the situation, so I don't really care about it at the moment. The bankruptcy bounces I find to be the strongest just post bankruptcy, you know, like the first couple weeks, where if short sellers were short, they're going to be covering into the, you know, the bottom of the stock and stuff like that prior to being delisted or whatever else is going on. So all in the span of the last 24 hours, you see the beauty of small cap. You know, these things can get wild, but you also see the complete absolute danger there, you know, specifically if, like, imagine if you're someone who bought EDTX at 15 and you were holding it today, you know what I mean? And you're like, I'm fucking rich, you know, like, well, we'll see what happens in a month from now or 2 weeks from now or whenever they reopen. Then we'll see how rich you are. You know what I mean? Or if you're broke, because it can gap way, way, way down. And if you're buying it 30, 40, if you're buying it today at all, if you bought EDTX today at all, and people were buying it today, obviously, you know, anyone who bought it today is going to wake up to the fattest gap down they could imagine. And it's not okay, you know? And like I said, anyone who's buying it, you got to put down some chinga to get $60 shares if you're, you know, usually a small cap trader. It's a big difference. So that sucks. But it's a good lesson for everyone. Waves is trying to bounce. And for me at this point, I just don't care about the SPACs. Like, we've had the main runner and this main sympathy both get T12 halted. Both of them. If any of these go, they're probably going to get T12 halted too, you know? But then I also think to myself, like, if I'm a short seller, I'm going to be so aggressive on these things today. Like, where maybe I wouldn't have even been yesterday. Or maybe I would have, but maybe today I'm thinking, okay, I'm going to lay off these SPACs and not short them or whatever. But when you see EDTX come in with that T12, if I'm a short seller, I'm thinking, all right, let's short the fuck out of all of these things, you know, if I can get shares and whatnot. So isn't freak dilutive? We'll go through it together real fast. Super freak. Super freak. All right. Oh, lordy lord. Fat ATM, no baby shelf limitations. They just have a fat ATM. Really fat. So I love dilution tracker, y'all. If you're not using it and you're someone who likes to go through fundamentals at all, or at least just double check if there's dilution or not, which you all should be doing if you're trying to long small cap in particular, but anything, you should have a decent idea of what their fundamentals look like. I love dilution tracker. It's been super helpful and cut down so much time for me. Even this visual representation. Okay. These bars are the current outstanding shares. Why does it keep doing that, man? That's a pain in the butt, huh? You mind clicking that thing again? Yeah. Hold on one sec. Let me get sorry y'all at home. I'm trying to what's the address? It's like web share or something. Oh, actually, yeah. Thank you. Okay, now I'm ready. SXB? Yeah. VAA. Got it. Boom. Okay. So you can see just a visual representation of like how much they have to dilute. And it's an ATM, so it's not to say that they're just like going to dump it all, but you know that at any point, literally at any point, they are dumping. You're just buying new shares that they're just poofing in thin air, you know? Anyways, let's see here. So I'll ignore them. Just because a stock has an ATM doesn't mean I'm not going to trade it. It's just a part of the process. It's just one piece of the cake. You know what I mean? If I'm going through process and they have an amazing catalyst and amazing volume and a chart that I love and a market that I love and all that good stuff, I'll trade stocks with ATMs. You know, if I'm thinking and I'm seeing other tickers also with ATMs or dilutive tickers that are still moving and getting enough volume to get through it, or if the amount of dilution isn't that bad and they're doing enough volume where I think they're going to overcome it regardless, I'll still trade. You know, it's just good to know. Dilution's important. It's good to know where they're dumping, when they're dumping, how they can dump, how many shares they can dump. If you know that, then you know just at least the areas in the chart that you need to watch out for. And when it's an ATM, well, you got to watch out all the time. You know, it makes me kind of paranoid that, you know, even the shares I could be buying are just shares that they're just producing into thin air at the moment. So for my Alpha Wolves who are at home, just use the YouTube chat for questions for now. I'm going to keep the Discord down for now, and we'll just stay in one spot with everybody, so I don't have to switch back and forth. Some people aren't in the Discord. If you're not, it's free. You know, we have a free Discord version as well for y'all. So some of you signed up on the site and then didn't end up in the Discord for whatever reason. So I think there's just a link you got to click. Or you can email Tanner. at rwtrades.com. You're welcome, Tanner. I just like giving him more work. Okay. So let me just kind of stick to the script here. Keep track of time of day, guys. For me, it's very important to, it's easy to just kind of forget where you are in the day. We're half an hour into the day. Okay. So volume, all of the, the charts by now have pretty much set up levels. Okay. Your high a day, your low a day, that become very important. Just nothing real outside of pure FX this morning that stood out to me. It looks like they've halted down now for the first time. And now they've just opened and gapped down. We'll see if they can do a higher low. But this is on a first green day. This is like more than enough for me on what happened on PRFX. Does that make sense? It's more than enough for me because I don't look at charts like this and see any of this at all. I look at charts like this and I see a couple bucks and just take the predictable bounce. Okay. Take the predictable first green day bounce and just run away. That is my MO most of the time on first green days, which is a pattern I haven't been playing for quite a while, which is this first green day bounce day. But it's a great, reliable pattern, in my opinion. And the two ways to play it are to try to load on a red day, okay, when it's like first, second red day going all the way back to where it came from, which is somewhat riskier in the fact that you don't know if the first green day is going to be tomorrow or if it's going to be another gap down tomorrow or whatever else it may be. But I've had decent success when I'm gunning for this pattern, and I'm going to start when we have big runners, always watch for the first green day. Okay. I'll start kind of working this scenario. You either play the first green day gap up or you try to anticipate the first green day gap up. It's easier to play the first green day gap up. You can sometimes get better results and less risk by playing on a red day, if that makes sense, or a consolidation day if there's a red day and then a consolidation day. Okay, like if this day was here and it was just a little candle here and I could use this low of 760 on yesterday, does that make sense? That would be kind of towards a third green day surge kind of pattern though. This is more literally just a first green day bounce. So I try to keep my expectations on a first green day bounce. Okay, this is the first green day, obviously. But once you've gotten backside and you've had 2 or 3 red days, that first then subsequent green day, always throughout my career, I've always been quick to take it off because I realize bag holders, okay, lots of bag holders. It's going to retrace at some point a little bit, but generally speaking, there are going to be a lot of bag holders here who are just waiting for any opportunity to lessen their loss. Okay, it was only a few days ago that this happened. So there are a ton of people who are still just sitting at 14, 16, 18, 20, and whatever else. Keep that in mind. So first green day pattern, I just make sure those expectations are set nice and low, but you can get a decent bounce depending on how much range there was, especially on the first green day, the actual first green day, this one, which there was a lot of range. But now you've gotten off lows, 100% bounce already off of lows, okay? I always like to look at these charts and think to myself, someone's long from 6 in this thing and probably a decent amount of shares, and someone's long from 7 and 8 and 9. You know what I mean? Lots of people. Short sellers will be chomping at the bit to get back on this thing at some point. And this level is key that it topped out at if you look at the chart, okay? It's not a random level 12. It's actually pretty goddamn key. If you just on the 15-minute time frame, if you look at the 15-minute chart, this spiked 4 to 26 and then went from 12 to 20, which makes this 12 area to me an important level of support. Okay, just because it bounces, say it bounced like a buck and then pulled, I wouldn't necessarily count that as much of a spot of support or resistance, an important area, a key level. Wouldn't look at it the same, okay? When I'm looking at key levels, just technical analysis wise and looking at range and stuff like that, when I'm looking at levels that are important, always the time frame goes up, okay? So I want to see a bigger time frame, less noise. And then I'm looking for where the stock reacted to the most, if that makes sense. Where the biggest moves were created from and where they were stuffed at. Does that make sense? That to me is going to be those are going to be the most blatant levels that shorts are going to use, and that we should use as well to determine potential reward or potential risk both ways. Does that make sense? So I consider, 12 to be key yesterday. Obviously 20 got stuffed, and from 20 it goes back down to 6. So you got 12, you got 20. All of the rest of those levels in between are just kind of noise to me. And I didn't go back and do this prior to the market open, but had I gone back and done this, you could put a line there for sure. You could say that is a decent target for a bounce on a first green day on a ticker like this. So that would be kind of, to me, like my max win if I could get there, and I'd probably be taking it off at 10 and 11 too, just in case it doesn't get there. So that's the idea on first green day pattern, which I haven't played very much over the last, I'd say, 2 years. I kind of got away from that pattern, but when you get parabolics, it's an amazing pattern. I have a lot of students who do really well just playing this pattern. They will miss out on the parabolics a lot, just like we all do. They're tough to catch at times. But after they go parabolic, you put it on your watch list and you patiently wait for the next few days for it to shake out, for it to finish its action, and then look for the first green day bounce. And it's kind of nice because you realize, okay, I missed this parabolic, but it's not dead completely in terms of there still may be 1 or 2 opportunities for me to take advantage of this ticker. And then that's it, because usually after that first green day bounce, it's done. Just from the parabolic perspective, when we get these parabolics. Yesterday or even in pre-market, where would you feel safe? This would be a pre-market thing probably, and I would be risking probably $7. And anywhere that I could get it towards 7 would be the idea for me. Because it's already gapping from basically $6 yesterday, $5.70. So no matter what, even at 7, it's still a decent gap up there. But if it starts to head back towards 6 and it's going to go red again, like just end up being that's all it was, then I need to protect myself. So I wouldn't necessarily, would be the kind of the best level, I would say, would be like the 560s, like that low from yesterday, should possibly hold if it's gapping up. But I wouldn't want to see it there once it's already gapped up and got up to 9. I wouldn't want to see it all the way back there come market open or something like that where it's just opening up at 6. So nice first green day. Risk would be 7 pretty much no matter what there for me. Only exception is, it doesn't have to be. If I'm playing something where I feel like it's too risky, I can just cut the shit, guys. Okay? And that's something you have to keep in mind. 99% of the time, I like to stick to my plan because my plans are good. I have great risk. I have great reward. And I like to stick to that plan. Okay. Size out into my various levels as they work. But if I'm doing something where I'm uncomfortable, you can just take the position off. People forget that sometimes. You forget that, I could just sell it right now, anytime you want. You don't have to be sitting in a trade. So if I'm trading something like PRFX and I don't necessarily want to risk $1 today, or I don't have the conviction to put any money down to risk that kind of dollar, and I want to play like the first candle or 2 candles of the day, I can cut it if it goes against me. I can put an arbitrary percentage risk on a trade as well. I don't mind doing that. I would rather have some kind of 2%, 3% max loss idea on a trade I'm not comfortable with than just give myself some really wide, crazy risk or something random. But if I do give myself a wide risk, size comes down. It's just that very basic math principle just to protect myself. Okay, tickers. Yeah, front side can be scary, but it's only scary when you're trying to play it and you're chasing it. That's when it's scary because you're putting yourself in scary positions. The way I like to play first green days with risk reward in mind and trying to play off low a day, even on morning spikes, I wait for it to pull all the way back to low a day if I can. It's not scary. It's not, because I know my risk is 5, 10 cents, 15 cents to potentially make $1 a share. You know, everyone in the industry for trading, at least for me, you know, when I was learning, everyone's like kind of just spits out the same thing, which you should have at least 1 to 3 risk reward on your trades, which is great. But if I can get 1 to 10 or 1 to 20 or 1 to 50, like, why wouldn't I? You know, especially trading small cap, which I trade. You know, I have more money than a lot of these companies have in their banks. Some of you do. You know, most of these companies have no money. I'm serious. That's a fact. So, and we know because we look through their fundamentals. You know, they're in debt and they just owe money and they're not profitable and they're blowing them $5 million a month, especially like the biotechs and the one drug biotechs and stuff like that. But when you keep that in mind, like, I'm not chasing this stuff. Yeah, I see. Not quite, but nice view app hold on PRFX. But again, 12 and 12 will have been shorted. If you're a short seller, you're shorting 12, because that level I was talking about that I would like to use as potential reward, probably max reward for me on something like this, is also a level that shorts are going to be like, I'm shorting this. We'll probably see a gap up over it now. So we may see squeeze here. Cool. Could get stuff too. We don't know. Yeah, on a lot of level 2s, it'll actually have it. You can actually just scroll down and see what the hold levels are at all times. It just depends on who your broker is. Huh? On scans? I don't think so. I don't think it does it on scans. I know, like Trade Zero's platform, they'll show, you know, it'll show where that halt level is and stuff like that as well. A lot of them do. Okay, so PRFX, nice. But just not much else going on at the moment. QBTS breakout's failing right now. Little fake breakout for now. That's why I hate breakouts, by the way, guys. That's why I would much, much, much rather always be positioned for a breakout as opposed to buying a breakout. And if you look at like some of my friends who are good breakout buyers, people like Dom, I'd say, and Huddy, and those cats. And then I have some other, you know, there are some other people who pretty much everyone buys breakouts. So, and if you watch what if you watch what they do, they're not even buying breakouts. They're positioning themselves for breakouts. So like, it is way less stressful. A breakout like QBTS, when I'm in from 220, is way less stressful than trying to buy the breakout at 270, right? If I had it where I wanted to have it in the ones originally, it'd be even better. I'm just chilling. You know, the breakout doesn't, I just hope it breaks out. And if it doesn't, I can still give it time to chop around, and I don't care because I'm not going to lose. I mean, this could, of course, go to 2 today. I'm not saying it couldn't on something like QBTS. But I'm not long from 2,672 right now, down 14 cents, 16 cents a share, saying, damn, you know, this is annoying, because it's annoying when a breakout like this does that and then gets below the breakout levels and below yesterday's high and stuff like that at 263. That's annoying. You know, I hate playing breakouts, even when they work. Because they're tough. And this is the reason they're tough. It may not materialize till tomorrow. It may fade back to 2 first and then try to break out again. And you just don't know. But I would much rather, when it comes to breakouts, be positioning myself, essentially swinging with the idea of anticipating a breakout. Then I don't have to play it on the breakout day. Which is a different game in and of itself, that you're swing trading at that point. Okay. Which is a totally different game. But then come breakout day, you're not in the crowd trying to figure out how to get in with everyone. In fact, you should be selling. I actually did mean to take off 2,000 shares earlier into strength, and I just got sidetracked with y'all. But that's all I would have taken off. Could have just locked it. I'm seeing like 5 in my head there, like in this weird, just on the chart, seeing like a kind of, it's just what I see. What are the markets doing though? And you can see they are also reacting a bit to Ion Q, I think. If you see Ion Q's chart at the moment, they've been somewhat simping, somewhat, between QBTS. If you look at these two charts, right? You guys see that? Or do you not see that? A little bit. Both with the breakout day, so I'm not too concerned. Big float too. I think Ion Q as well and QBTS. They're not low floats that are going to be like just jumping dollars yet. They aren't jumping dollars yet. How long into the trading session? Scatatito asked. Scatatito. How long into the trading session do I still consider playing a bounce off low a day? It changes, man. You guys know 15 to 30 minutes is like that golden spot when they're working, and I love them. But lately, if you're playing that bounce, it gets rejected at high a day or VWAP and then goes lower. So I really adjust how long into the trading session I'm going to sit by when the runners are coming, right? It's like some days it's just midday runners, which means I got to hold off on those morning reversals, or if I'm playing them, I have to scalp them, right? Because I know they're going to go lower, most likely at some point. So if they give me range, I can still play it, but just I got to sell a VWAP or I got to sell at low a day and not expect anything else. And then I switch to the 5 or 15 minute chart and then try to find the same pattern, but on a bigger time frame. Does that make sense? The same pattern has been materializing just on a much bigger time frame, 5, 15, 30 minute time frame. So that's what I'll do if I'm trying to take advantage of the fact that it's just midday runners, then I'm going to sit around and I'm going to sit on my hands in the morning a little bit more. You know, it's super important. You got to keep up. You got to adapt, which is why when I took the last month off, I haven't traded this week. This is my first week back, and I'm not going to be, I don't give away money for fun. You know, I don't willy-nilly give away money. I try not to. There are times where I force myself to, small size, just press buttons because I haven't for a while, and I need to make sure that I'm still executing and making sure that when the time comes, I can press buttons. Like GGAA yesterday to me is a perfect example of not being sharp or willing to press buttons on a definitely perfect sympathy play / kind of breakout that we were looking at 15, the $15 breakout yesterday. And then I just froze up post halt because it halted. This is when we saw it. Let's see. Right here. Okay, it halted. And that is when we got our eyes on it. And it's kind of tough because you're like, what do? Do you just buy it out the gate post halt? No, that's gambling. Where are you risking? Like, that's gambling. To me, I was trying to explain risk is 12. Like on a chart like this, when you're trying to play a sympathy, and we're going to go over this one more time because it's very important. Oftentimes, 99% of the time, when we have something like EDTX running and I go to find the sympathy play, I go to my scan, I put on percent change 5 minutes here, you know, to try to catch whatever is moving the most over the last 5 minutes. I will go filter by float. If it's low floats and I need to do that, I will go find whatever I need to find, right? Whatever's going to move next, whatever the closest thing to GGA or to EDTX was. EDTX is a SPAC. I got to go find myself a SPAC. EDTX went from 15 to, at the time when we were looking at this, like 50 or 60 or something like that. I need to go find a $15 SPAC right now. That is literally how simple that was yesterday to find GGAA. Micro float SPAC at $10 to $15. If you can find that, then that is, you're in the ballpark of where the volume from EDTX is going to go. So we have our eyes on it here. I could have had my eyes on it earlier for sure. I'm sure it was hitting my scan if I would have been paying attention and we weren't doing lessons and stuff like that here. But the idea is that it's illiquid, and one person buying or selling 5, 10,000 shares can make the stock go from 14 to 13, you know, or 14 to 12.50. And the spread at the time was wide, 50, 75 cents. So the idea that I tried to use, and this is from doing this so much over time, Every time I get to a sympathy, almost without fail, it's going to be a chart that looks like this. Forget the time frame. The chart's going to be a liquid. Not a lot of people are there, but there will have been some sort of volume perk. You know, we were talking about it yesterday. If there was no volume on GGAA, it never would have hit my scan. We never would have seen it, right? Until it was already up 100% or 200%. But because right now it's at 250, which is a very low amount of dollar volume. It's not even 250,000 shares. It's 250,000 in dollar volume. So you have to understand, one seller, two sellers, three sellers can send this back to 12. And that's what I want on a sympathy play. You know, I want to get filled as low as I can because I want to mitigate risk in the event that it doesn't materialize. You're never 100% sure when there's just a little bit of volume if you're going to get a lot of volume. I've had a really good track record of finding the next one and volume coming in, you know, over time, just like GGAA yesterday. And I do it in my chat all the time. Like, here's the one, here's the sympathy. And then sure enough, it may be the next day. It may be 5 seconds later. It may be 10 minutes later, but most of the time it will materialize. But before it materializes, it's going to be an illiquid stock that you may have a potential to, like, look at this, $15.50, $15, $12.50. I would rather get filled $13.12. Okay. Post halt, it opened up here at 16 and pulled all the way back to the 13s really fast. That is the opportunity for me. And it seems super scary, and it is scary. But that's what I want. I want to be able to get it as low on the simp chart as I can. This cuts across every strategy, you know. Look at the strategy, look at what it is. Look at the danger you're putting yourself in. And of course I can't get a lot of shares when it's a liquid. That's the other problem with this. But I would rather have a little bit of shares than no shares of something that's moving $20, $30 in a day, you know. You don't need a lot of shares to make a lot of money on these things. But you don't need a lot of shares to lose a lot of money if you're a chaser. So I don't chase them either. I don't play them. You know, people get confused sometimes or think I'm not trading. This is trading to me. The trading to me is not trading. The successful traders know when to not trade. And when everyone else is getting excited about something, they know when it's not their bread and butter or that's something that's dangerous. I know how to play these things, and it's to get filled as low as possible on the sympathy plays if I can. And then small size. And if it materializes, it does. I can still make 3-5 grand, you know, 15, 20 if I want to take 1,000 or 2,000 shares, which would be like max for me on something like this due to liquidity and stuff. So.
When do you cut your position if by chance sympathy play never manifests? When do you give up? So you said like.
Good question. Great question. No, most times I'm basing it off of the leader, right? So if the leader is holding up, yeah, I'm pretty comfortable with the sympathy plays, you know, most of the time. It's when the leader pulls really hard, and this is where you have to be very, very, very careful, okay? So say EDTX yesterday, which was running. We can even pull it up. It's all good. Actually, let's do that. Okay, so EDTX is the big brother. We'll bring in little sister, Gaga. And these are what the charts look like, okay? I just want to get the time frame right so we can kind of get them to be somewhat even. Hold on, sorry. So just from a timing, this is what I want to illustrate to you how sympathy plays work, okay? Because Gaga was a perfect A+ sympathy play in my opinion. So EDTX took off 10 a.m. They halted up by 10:30. They were halting up to 20. All right. Here's 10 a.m. on Gaga, right? Here's 10 to 10:30 on GA. Almost no volume whatsoever. Almost zero volume here because it wasn't tradable. Okay, just no volume. Then a little bit of a volume perk here. right before 11 o'clock. At 11 o'clock, EDTX was gapping up to 26. It had spiked to 26 by 11 o'clock. So look at 10:45, 10:50. Like towards 11 o'clock, you got a tiny little perk on GA. There's that little perk we were talking about, right? Not random. Someone smart or some pumper, one of the two.
Still not a lot of volume. I mean, I think I looked at those.
No, not. Yeah, no. It's not a lot of volume. It's a tiny. It's not a tiny bit. I mean, 6,000 shares at $15 is still a decent chunk of change, as opposed to as a 50-cent stock or 10-cent stock. So it's not no volume. It's enough to end up on my low volume scan. That's for sure. Cause it did, but we took eyes off of it. Okay. So then it didn't really materialize till what? 11:45 or so. At 11:45, EDTX was halting up to $50. You know what I mean? So that's kind of the idea. And then GA went. So you can see there's that little lag there. As this is going 200, 300%, up to like running $5, $10, $15, $20, $30, that is usually the time. Once a stock's up 150% or so, or just shit ton of range and everyone's kind of knowing about it, I have zero FOMO because I know I wasn't going to catch EDTX most of the time anyways. It's high. Like if you look at the beginning of EDTX's move yesterday, this is what it looks like. Okay. It went 14 to 16 to 14 and then just ripped. Like there's no entry to be had there to me because this wasn't really liquid. I'd have not too much of a reason to play this unless SPACs were running the previous day, which I think they kind of were too. So, that's the idea. Okay. And then let's bring in GA. And then I think the next best one was what? Rose was the next best one yesterday. Okay. And we're going to talk about this again, how sympathy plays work, especially when we get these big days like yesterday, which means big runner EDTX. They go to 80. GGAA, I said 25 because I was trying to be chill, but they went to 50. Awesome. Okay. They broke out of these days and then actually broke out of these days too. So pretty phenomenal move on GGAA, but then you get Rose. Rose only goes 10 to 20. That's all Rose did. So it becomes one of those things where the first sympathy play, if you can get to that, is always the best one. Almost always. Unless you have a macro, okay? Unless you have a macro catalyst that like COVID or like the Ukraine-Russia thing or even AI this year where it's going to produce longer term stuff, okay? BDRXB. And a recent split first green day. Yep, you're right. This was exactly right. Damn. Good call, dude. Missed that for sure. I'm not really looking at my scan right now. I'm trying to teach. But here's the other thing to keep in mind, okay? When a stock has a sympathy play, and here's another great example of a different kind of sympathy play. These are both reverse splits, okay? They're both biotechs. Look at the charts, guys. Reverse split. They fade for 4 or 5 days. Then they pop 4 to 26, okay? That was 7.5. That split was on 7.3. BDRX split on 7.5, but on the same day, PFRX went from 4 to 26. This week's been crazy. Week's been crazy. I really wish I was trading last week too, so I was ready for this week. 4 to 950. 4 to 950 on BDRX on that day. 2 red days, even though BDRX tried to go green. They didn't go quite as parabolic as PRFX did, and they didn't have quite as much volume. Not that it was a ton, but nice first green day here too. Let's go through the same kind of process.
I think the GUR yesterday, same thing, 2 red days, and then a first green day.
GUR.
Yeah, GUR.
So that is a really amazing first green day on PRFX, man. It's up 150% right now. So this is what we're seeing right now is the squeeze I was talking about of shorts playing $12 because of the key level at $12. Does that make sense? Now we're seeing people who are shorting first green day bounce being squeezed. And we're really getting into areas where I'm not playing it. I likely, if I was playing this first green day, how I play them I would not be in past 12. That would have been the trade for me. And I would be happy with it, because more often than not, it's not going to. Sometimes these will like to retrace back to like maybe 16 will be it. Could be 20. Maybe it goes to 100. Who the hell knows? I don't really care. Okay. All I care about this pattern is just this right here. That's all I personally care about. Most of the time on a first green day, after these stocks retrace 100% of their gains, they're not going to then retrace 100% back to the upside most of the time. Even though we've been seeing it quite a bit more lately this year than I have in a long time. If you think about like some of the Chinese stocks that were running earlier this year or a couple months ago, some of those spiked huge, went all the way back to where they came from, and then spiked even bigger or spiked huge again. So I'm not like full of FOMO, but it would have been nice. So the point that I was trying to make right now is when you have a good sympathy play and parabolic runners, when you get a first green day on the parabolic runner, oftentimes you're also going to get a first green day on that sympathy. And it's not going to be as much usually as well, since it didn't run as much in the first place. But that's the beauty. If you guys understand how this stuff works, sympathy plays and sector momentum have been where I have made most of my money over time. Because I don't have to catch the big runners all the time. I don't ever have to catch the big runners, actually, because there'll always be one or two subsequent runners from a big runner. Those are the ones I have focused on over time. I've understood they're not going to necessarily run as far, but depending on how far the leader runs, it's going to determine how far the sympathies run. And when the leader bounces, generally speaking, the sympathy plays bounce. And the other really cool thing about this is over time, okay, say PRFX pops, and it's not necessarily perfect, but say PRFX pops in 2 months. BDRX still may pop that day too. Once stocks attach themselves to each other and everyone knows that, once the stocks attach themselves to each other like that, specifically if they're in the same sector, okay, and then the sector gets hot, but it will happen with sympathy plays too. If it has a really strong sympathy play, and like say 2 months from now PRFX goes ballistic, I'm immediately should be looking at BDRX potentially, right? Same thing happens, in every sector, or whenever you have a massive runner, it's going to spur a couple other runners. I try to find those, and then I try to focus on those. And then you can focus on the first green day on the original runner after it's faded, and then you can focus on the first green day on the sympathy plays, and understand like these are places to take money throughout the year that you can more easily take money, okay? Predictable spots of bounce. And then if your expectations are correct, you're not going to get screwed when it doesn't work, because a lot of times first green day bounces are going to not work too, or not go that far. So here's the other issue, okay? The beauty about sympathy plays and sector momentum is that one lags. They're never perfect. They're never moving together, okay? It's almost kind of like a mini, I don't want to say arbitrage because that's not what it is, but it's something similar to that, where price of two instruments are moving together, but not simultaneously. So there's a lag effect. People were doing that, I think, with like Bitcoin. I think people still do it. Different exchanges will have different prices at the same time. I know Michael Good, back in the day when I met him in Italy, found out I was half Korean, asked if I was a Korean citizen because he needed an address in Korea so he could do Bitcoin arbitrage. That's literally my first conversation with that guy in person. That is what he asked me. And I'm like, yeah, I'm half Korean. And he's like, oh, that's interesting. Do you have an address there? Because I really need you. Are you? And then I'm like, why? He's like, oh, I need an address there for Bitcoin arbitrage or something. It was funny. I don't have an address in Korea. But that is that is my favorite part about these things, is that when you know that two stocks have established that they move together, but one's not and the other one is, it gives me like the best opportunity to get the best risk reward and beat the crowd to everything. Not everything, but to specific plays. Beat the crowd to GGAA. Have your eyes there first. I'm not necessarily playing it, but my eyes will be there before everybody. And just by doing that over time, you'll get more of a sense of when your eyes are there first, and you should be trying to get a position, if that makes sense. That comes with experience as well. I'm not just buying random simps every day. If a stock's up 30%, I'm not looking for another simp for that. You know, it's only specific scenarios throughout the year, maybe once a month or twice a month. Some months, all month, you know, some months, none, where I am just hitting the simps off the runners, you know. I'm always trying to be a part of the main runner, yes, because the main runner will always move the most, okay? But the sympathies are where I have made the most predictable amount of money over time. I've also lost a lot of money on sympathies because when there's not liquidity, it can go either way. So through that process, I've figured out how to play them to minimize risk when I'm doing stuff like that. I have so many different modes of trading, and any given day, any minute can turn me and change, and I'll be doing something different. You know, I can say breakouts are the worst fucking strategy in the whole world yesterday, and next week, because I've been seeing them work all week, I'm like, I love them. Don't love them, but I am playing them. I know how to play them. I'm going to try to play them, right? That's just the way things go. So we really have to be on our feet, and we have to adapt, and it's tough, but when I get scenarios like this, it's much easier. When I know this stock's gonna move, it's just a matter of when. It gives me way more conviction. The highest conviction I have. On the same token, okay, on the same token is when the leader gets smacked, let's see what BDRX does post-halt. That's what I want to see, okay? We have a situation where we have leader and sympathy play. Leader has halted up a couple times, but now they've halted down big. And our sympathy play has halted up for the second time. All right. Unhalt PRFX. PRFX halted up. PRFX is holding up for now. They didn't gap down out of that halt down. And that's the other part of the halts. You just don't know during the halt where they're going to take it. You just don't know where they are going to open the stock up. You don't know where it's going to open. Like, it's tough, guys. I know Madaz. I like him a lot, by the way. But he loves shit like this. You know, and it's crazy. He likes the halts, like at least back in the day. I don't know what he does now, but back in the day, I remember seeing he had a couple strategies like the halt gap down. I forget what the names were, but he had like some names for when they gap down and clear out and then go higher and some other stuff like that. I look at these as mini market opens every time they halt. Market open, and you guys know I hate playing the first minute of the market. So I hate playing halts, man. I don't like to get in post halt, or there are times where I am, certainly. But most of the time, once it's halted 5 times, 10 times today, it's not for me. I just like to be controlled. And if I can't control the trade, I find it's best to not trade. All right, let's see. What else should we get into? What time is it now? So we're an hour and 15 minutes into the day, yeah? What do I think about Hive? I think it moves with Bitcoin. As long as Bitcoin's strong, if BTC goes up, Hive should go up. Freaking crazy. That's what I think. Look at that. This is the old HVBTF. What were they called? HV. Someone remind me when they were OTC. I think it's extended, but it's moving with Bitcoin, so that's what I think. If we're talking Mara, if we're talking any Bitcoin stock for the moment, look at Mara, look at Riot, right? Look at Hive. They're the same chart. Okay, so they're moving on Bitcoin and they're moving on Bitcoin price, which Bitcoin, I haven't been keeping up lately, but the last time I was watching it, was moving with the markets, you know, and the markets have been moving up. So you know, this is what the markets have looked like all year. This has been pretty much the year. If you look at the year in SPY, a good year for SPY so far. So subsequently, we're seeing charts like this. That's all I think. Bitcoin, and that's the thing. I don't care too much about news on Bitcoin stocks and stuff like that. Just because they're moving with Bitcoin. Okay, so if Bitcoin goes parabolic, these go parabolic. I'm super late to these swings. I mean, this has been going for a long time. It's also one of those charts that's probably attractive to short sellers who this is randomly hitting their chart and they don't care what the fuck this company does and they're just going to short it because it's too extended. There are a lot of people who don't give a shit. They don't even know what the company does. They are just looking at, they just know this ticker is called HIVE and it's up too much. You know what I mean? So not too much other than I feel super late to a party like that and I'm not going to chase it. Okay? I don't see a reason to chase it or do anything. If y'all have questions at home, just shoot. I'm using the YouTube chat today instead of the Discord chat for now, so I only have 2 screens as opposed to my normal amount. Let's get back to these scans again. Just happened. Use this one. Whatever. Big pull on QBTS. That looks like a failed breakout to me. CJET going a little bit higher. Recent IPO that ran for a few days. Super liquid, already up a ton. You know, I get to charts like this and I just fucking ignore them, guys. Simple. For the most part. Oh, it's just there. We haven't seen any trading at all. You know, we haven't seen any trading at all. There's BDRX finally pulling. They halted up one more time, didn't they? Or did they not? Yeah, 1, 2, 3, it looks like. And now they're trying to kind of do the same thing that PRFX just did, which is this bounce off of VWAP or something like that. That was a really nice push on PRFX. All right. So kind of anticlimactic for now. Freak pushed back towards pre-market highs, and now they're all the way back to lows. AIMD just had a buck. CJET kind of interesting, but nothing there for me for now. Nothing to trade. Yeah, guys, if you guys are in the Northeast, I'm going to be in NYC next week. We're going to have a good group there. It's a sick WeWork just overlooking like Brooklyn Bridge and stuff. And got a couple cool activities planned. So I'll be in NYC next week. Just go there. I put it in chat, and just go to events, I believe. Be in NYC next week, and then Miami. And then I'm not doing boot camps for a little while because I've been running so many this year, and got to spend time with my dad back in Phoenix. Elox is on my scan again. Got to spend some time in Phoenix when I have time with my dad, helping him rehab and stuff like that. So I won't be doing many more. Probably end of the year, I'll run a couple. But NYC next week, and then beginning of August, we're doing Miami. That one's going to be lit. Got a couple surprise guests coming to that. Trying to get a few peeps to NYC as well. And then if you're a fan of soccer or the Premier League and you're in New York, I'm going to be going to Arsenal on that Saturday. They're playing in Jersey. I just got to buy some tickets. So if anyone wants to go, holler at me. Or I'll go alone. There's one ticket left. They have these field seats like right on the field, like right on the sideline. I've never seen seats like that. They're like $2,500 a pop. 4Gs on resale. I almost copped one yesterday. It'd be cool. You want to go, Simon? Let's do it, dude. Then I don't have to go alone, which I don't mind at all. But okay, so generally speaking, I have about 45 minutes left in me until I'm like, okay, about midday. Maybe an hour, Once we get to midday, I really try to not trade. The only exception is when we're seeing midday runners specifically. And then I'm specifically trying to sit on my hands until about now. And now is when I'm starting to try to engage and kind of see where my levels are to try to find what is going to run midday, right? So we just have to adjust. It's not just one pattern and I just do it every morning. It's all bullshit. There are patterns that I like to trade specifically, but it doesn't work like that. There's not going to be trades every day. And if it's midday runners, then the game is sit on my hands till midday. Start watching 5-minute time frames instead of 1-minute time frames. Put on 15-minute charts even, 15-minute candles. Just little hacks to like not get caught up in 1-minute candle action. Yeah, I was supposed to be in San Francisco a couple weeks ago and had to cancel, obviously, due to my dad being in the hospital. So Elox held support really nicely. This 790, 727 area, this area right here, just from a longer term perspective, this is a chart that's looks to me like it wants to go back to 350 when you look at the chart itself. Every time it gets a 10, it likes to go to 350. That's just what it's done. And now it's gone 10 to 7. It's kind of holding. You can see last time it went to 10. It took a little while for them. They ended up popping and doing some things and ended up at 350. So I look at this, though, and I say it was a shit ton more volume this time. You know, a shit ton more volume, and they just couldn't break out. So mixed feelings. I would give 720s a shot for a swing and have nice tight risk, so take a tiny loss if I wanted to play it. If I'm watching this going forward, which I'm already kind of late on that, so kind of funky chart, but it's holding up. That's what I'm trying to say. It's not dead. It's not dead. I don't think that a $10, this $11 area, 10.50, 11 breakout like Monday is out of the question, or Tuesday or something random like that, especially with the ease at which this thing can move. So that's one to keep an eye on. ELOCs going forward too. PRFX is holding up just really nicely for a first green day. I don't have too much else on here that's got me excited at all. Let's see real quick. SPY overall markets have dumped a little bit over the last hour or so. Nothing crazy, but so we're only going to do live trading for a little bit longer, and then we'll switch to lessons and talk psychology and some other things today. Okay. Questions at home. Just shoot while we're here. What about you guys? Any questions on any tickers or anything this morning? We obviously no trades and really funky, wild action. It's been the week of micro floats, though. You know, I wouldn't be surprised to just see micro floats popping and dropping next week too. What's up?
When it comes to the spread, let's say you're playing a sympathy play, and you said they're like sketchy. They look sketchy when you pull up the chart and stuff. But when it comes to the spread, are there like criteria on that you disregard, or like you see a bigger spread and you don't play because of that, or can you talk a little bit about the spread?
Well, when they're liquid and higher priced, the spread's always going to get wacky. My MO is if it's a big spread, put myself on the ask or on the bid. Put myself on the bid.
And do you try to get it as low as possible to support, or
I'm always trying to do that. My game's always been, no matter what my strategy is, and I find the risk level, enter as close to it as I can. Just from that mathematical perspective where I can just take more shares and risk the same damn amount. It's a twofold thing, and it takes patience, and it takes a lot of patience, and sometimes the patience can come back to bite me because it's not going to get there. Like if I'm not taking shares in certain spots, that's why I take starters in the first place. That's the whole point of a starter for me, is usually because I have conviction in a trade. I want to take part in it, but I don't have the belief in watching price action that it's going to get close enough to my risk level, or get even down towards my risk level to where I want it to be to take a ton of shares. You know what I mean? So it's all case by case scenario. But when it's a liquid, the game is be really patient and try to get filled as low as possible on the bid. When it's a liquid and there's not volume, you can do that. You have to be patient when it's a liquid. You have to. Only because you're putting yourself at so much, like this. Like if we look, GGA was a great example because we were watching this live as a simp yesterday, as the main simp after our first huge parabolic, right? So when we get to a chart like this, and it's 13 to 15, the MO is 13s. If I can get 13s here, I'm in a way better spot if it does not materialize. And every single trade that you take has to be taken with the idea that this is not going to materialize. Now, I like to have conviction in what I'm doing, but the first spot I come from is what happens if this doesn't materialize, okay? Well, if I'm just kind of chasing it in a high a day or 1450 or 1350 or 1390, 12, like two buyers, it goes to 1250. That's worst case scenario. Worst case scenario, the main play that I'm trying to play a sympathy off of, the EDTX halts way down or gets halted by NASDAQ. It could have happened yesterday. It could have happened yesterday while GGA was halting up. You know what I mean? So I like to look at those scenarios. What's the worst case scenario at the spot where I get to the chart? So, even if we're up in here, I'm thinking try to get to as close to, try to mitigate risk always as much as you can. And the two ways are less size if it's too high up from my risk level, or more patience and let it get to my risk level. I like even something like this, I would rather put orders out in the 12s and 13s, not get filled and it runs, if that makes sense, then get filled in the 15s and then it gets slapped to 11 and no volume ever comes. Okay. That being said, if this pattern was liquid yesterday and this was already trading like 2 million shares and doing this kind of thing, then it's a totally different scenario. Then if it's liquid and it's pushing and I don't believe it's getting close, then I'll pick different risk levels and do something different. I'm not saying always I'm getting filled. Strength of conviction will determine a lot too. Okay. So if I have a ton of conviction, I'm watching price action, I already know this is already kind of going, then I can change it to momentum trading mode too. This is positional. If it's a liquid, I'm trying to be as positional as possible. In the morning, gap and crap reversals, when I'm watching it fade and I'm trying to find a low and then playing the highs, that's positional. I'm trying to be patient, get the exact risk reward I want, because I know it's going to kind of allow that scenario to happen, that patience to enter. If I'm trading momentum, if I'm trading breakouts for the most part, if I'm trading like your everyday cup and handle patterns, which I don't really trade, your ascending wedges, your trend breaks, and your all of that kind of stuff, then it's going to be chasey. It's not going to be as controlled just by nature, which is why I always gravitate towards buying weakness, because I get to control it. When it's a liquid, my MO, and I've done it so many ways, is to be patient. Just be patient. Get filled as low as possible in case it does not materialize, because you're anticipating something. Granted, it's hit my scan, so it's not random. I'm still anticipating. The volume has not come, But also in my experience, like it comes oftentimes. But here's the problem, is that this may be the simp, but you chase it at 14 and get stopped at 12 or something stupid. You know what I mean? I can't tell you how many times that happened to me trying to play sympathy plays where I think I found the sympathy play and the volume comes in. Like this would have hit my scan by now over here because of the price of the stock and how many shares it had already traded. This would have hit my low volume scan. So if I had my eyes on it here, there's a chance I may have been chasing it at 13 or 14. You know what I mean? And when you're doing that, you're getting stopped out at 12, hopefully. You know, you would have gotten stopped out or just kind of taken it off. Which is why I always say once I get to these things, the game is be the most patient person there. And I'll try to fill it depending on liquidity, 100 shares at a time, 50 shares at a time too. Higher price stocks, 100, 200 shares at a time, because when they're illiquid and you throw 1,000 or 2,000 or 5,000 shares on a bid, oftentimes you're not getting filled. And then those people who have been waiting there watching that spread, that 75-cent spread, are hitting the ask, right? And now it's gone because it's already done the halt up. So all there is to it, it's the same principle that goes across all trading for me. You know, be as patient as I can, get the best entry that I can, pick my risk level, get as close to it as I can, and I could take more shares. Even in this scenario, I can take more shares I could take like 1,000, 2,000, 3,000 shares at lows and then just cut it if it doesn't work. Still maybe lose $1,000, 3,000, like $2,000, $3,000 if it does not materialize. But even if it just gets back to high day, I'm up $6,000, $7,000. So, yeah, you know, that's the idea. And then from a more nuanced perspective, we're going to go more technical analysis and not just look at the sympathy play itself. But the stuff at 15, you should have expected anyways when you look at the daily chart. Okay. There's 15. Like that, there's a perfect double top there. And the only volume it's really traded was there outside of, you know, back in March. So to me, when we were looking at that and you and me were kind of saying breakout and stuff like that, it was, this one happened to also be a decent buy at 15, in my opinion. If I was going to be chasing, kind of buying something like this, sympathy play, breakout, micro float, had already topped out, had already triple topped, even though it was on low volume. This was a triple top here. Sorry. This was a triple top right there at 15. If you were looking also at the daily chart, they triple top there. They pulled all the way back to 12. And when they start pushing back there, yeah, it's looking like breakout there. So it was kind of a mistake on my part yesterday to just be teaching and not watching this. But yeah, let's go. Shoot.
Every single time I put in the bid, it picks up. Like automatically. Does that happen less here?
You mean when you're trading OTC?
Yeah, every single time.
It's way different. The OTC price action, the OTC, it's not even close to the same thing. OTCs and listed stocks are not even in the same ballpark, dude. Other than the fact that they both have charts, you know what I mean? And level 2.
So what is, I mean, I assume it's alpha.
I mean, their all goes everywhere. It's the market makers are so in control of OTC stocks. They just literally control everything. You know, you see those few market makers.
Yeah, it's like
they control everything. So
Look on level 2, it shows me, let's say, our BDRX right now, there's like 1,400 shares I can pick up at a specific price. Like you can look and see. And so when you put it there, you take it.
yeah, but what I'm saying is on OTC, when you put the bid in, automatically you're going
On your patient,
I
you can work on it. On your patience. For me, I look.
we'll talk about it in a sec.
Someone's wanting to sell, and if it's at a price that I want, I just take it. And it doesn't update, I get that price, and I get those shares.
No, GGAA and EDTX have both been T12 halted by NASDAQ for more information because they were spiking too big on no news. It's always a danger. You have to be really, really, really careful, y'all. What are you looking for?
shares at all.
Yeah, I would go. Well, and the other question is, so, okay, so if I'm buying the higher level at 15, obviously I'm getting less shares. Well, let's assume, so there's two scenarios. One, if I'm buying at 15 and you're buying at, say,
12.
12.
Yeah. 12, 13.
So let's just say we're getting, just hypothetically, we're getting the same amount of shares, just hypothetically, kind of based on our risk. So basically, we're going to lose the same if we get stopped out, but my risk of losing money
It's drastically greater.
greater than
Yeah.
anyway. Okay.
Anyways.
And then the other question is, so yeah, the tighter the stop, the more shares we get. So you'll get more shares, assuming that like, you do it that way. But if you take so how do you do that? Like, do you cut it so you get more shares? So you may not want it to stop out and take that full loss. So you cut it like as soon as it goes against you, or you just kind of like.
It's totally case by case, obviously. And that's why the liquidity becomes important, or the lack of, you know what I mean? That's why the size is really important, in that I can't size too heavily. Okay. This has been one of the issues with my trading career all along, is that I'm very early to a lot of things. So I get to stocks when they're liquid, oftentimes because my scan parameters are so low. For a reason, you know, by the time everyone is chasing something, I want to have already done some due diligence. I want to have already been able to go through my process before most people have seen it, because I'm not the first to see these things. Obviously, you know, whether it's a market maker or it's whoever, I'm not the first to see them. Volume comes in first, be it a little amount. It hits my scan right here. Generally speaking, where I'm getting hit is this percent change 5-minute filter. This filter, when I am looking for sympathy plays, is the gold to me, because if something pops like 10% immediately, and you know, like quickly in a minute on any sort of volume, I'm going to see that. And then at that point, I can look at it like GGA and say, oh, look, micro floats back, because that's how simple this one was. $10, $15. And then you saw every single after GGAA went, that confirmed it for all the degenerates. They're like, okay, they were just trying to take positions in every single $10 SPAC yesterday, right? And they all kind of materialized. I mean, if I took BRLA out at 11, I could have just sold it for $5 a share today, into the morning spike. But to me, it's that idea. If you can kind of look at it from the frame of at lows, there's less risk. There's less risk of the huge down candle where you're just can't get out of your position, or you're taking a way bigger loss than you wanted, or they stop market you at, you know, $2 below where your stop is, which has happened to me when I do stuff like that. When I'm playing more illiquid stocks, or stocks that micro floats in particular, you know, I've had stops with micro floats that have dropped, especially on higher price stocks, that I didn't get stopped out for like $3, like $3 a share. I'm like, what in the? So everything I do on these is because I've done it for the last 7-8 years, probably more than anyone. Look at stocks that just started their momentum, you know, the beginning of the wave, that first swell. That's where I am. I'm watching the swell, and then let's see what this wave is going to materialize or not. And the longer you do it, the better feels you get, and the better you get at seeing the swell, and then understanding all the other conditions, like if you're a surfer, and understanding that this is going to be a nice one, you know, this is going to be a great wave. So, and then sometimes you're wrong. It looks great and doesn't materialize. So it's all about protecting yourself at the end of the day. And if you're coming from that frame of mind, you're also at the end of the day giving yourself just such better risk reward ratios. You're putting yourself in positions where if the trade does not work and becomes out of your control, you're not too exposed, you know. And small cap, the stocks that move 200, 300, 500% will go all the way back down at some point most of the time. And the faster they go up, the faster they go down. So you're playing this game of, for me, the longevity has been not chasing stuff like EDTX yesterday into the 50s, or trying to dip by it. You know, even if I'm not chasing, trying to dip by off support and play that game. Nah, if I'm not in low, like by the lows and did what I was supposed to do, most of the time I just ignore it. And And if I'm get to a liquid stock, rules like this, which are try to get filled on the bid if the spread is wide, try to get filled as low as possible with that illiquid nature. Sometimes you can get amazing things will happen. Okay. Like on GGAA, for example, amazing things can happen. If you're trying to get filled towards lows, like in the 12s, and you start to get filled, it's not a lot of volume. These are only the 800 shares here, okay? 700 shares here, no shares for 5 minutes. 355 shares. It's not a lot of shares going on, all right? But if you're if the spread between there is 12 and 13 at times, or 12.50 and 13, you can get filled on the bid and then immediately have like a 50-cent spread where if it starts to go, you can even just put yourself on the ask. You could even just literally there are a lot, most of the high frequency trading rooms, like ran by the big hedge funds and stuff, operate in exactly that fashion, but they do it within like a 1 or 2 cent spread. They're in and out. They're in and they're selling on the other end of the spread to someone else like immediately. So it's, I'd just rather be on the right side of that equation when it's a liquid. Don't chase, don't buy the ask. Don't just like randomly, because to sell, if you're buying ask, is 75 cents down. You can't even sell it. You're immediately potentially 75 cents down a share if you want to sell right now. You know what I mean? So when that's the scenario, you have to be on the bid for me.
Too, because I guess, that example you said, say you're buying it at, say, 12 or you're buying it at 50, just like you did buy. In these cases where it might get bolted, your total dollar risk is most likely less.
Way less.
That's kind of interesting.
And those are the reasons why also scenarios like that, I don't like to be in them very long. If I can take $10 a share, even if it goes 100, if you're taking $10 a share ever on a small cap stock, you know what I mean? Some people don't ever get that. So you have to keep that in perspective. People, what happens is they see EDTX, they get greedy as hell. And GGAA goes to 50. Well, now BRLI, they're not selling till at least 20 or 30. You know what I mean? Meanwhile, it's to get slapped. So you have to adjust. You have to understand what's going on kind of psychologically with all these people, with the masses, as we see scenarios like yesterday, which are special scenarios. But if you can get into that frame of mind of thinking, then, and you're always thinking about every strategy and every day like that, what's everyone thinking? And like, how is it, how does this stuff work? Just the fact that just the psychology behind sympathy plays, which I've been watching for so damn long, and understand that I have to try to get the first one. I have to try my best to get the first sympathy play, the GGAA. I got to try my best because that's 9 times out of 10, maybe more than that, going to be the most fruitful sympathy play and the most predictable one and the best one, period. Okay. That's been my experience over time. So, and then once I miss that, if I miss that, like I did on GGA yesterday, and then we get to Rose and it's already gone 10 to 20, I'm really going to be careful there. I would have been a little less careful, maybe buying GGA at 15, because we saw EDTX actually go 15 to 8, like 50 there. And it's only at 15, 12 to 15. So 20, 25. That's why in my head, I'm like, that's why I put that number, even though I undershot by 100%. That's me understanding that this next play, based off of the last play, should not go as far most of the time. The probability of it going past where EDTX is going to go is very low, So that's sympathy plays, man. We've been talking a lot about it because that's all we've seen over the last 2 days. Tough ones to play, a little bit out of the price range I like to play them in. A little bit, not quite amazing. And then T12 halts, which really, really put a hamper on today's action. Okay. If they didn't halt, I'm telling you, probably we would have seen today BRLI go, $30 or at least 20. We would have seen several more actual moves today, I think. Because by the time these halted, EDTX was done. And EDTX was trying to kind of move today too. So kind of a shame that GGAA did this yesterday, because I was really hoping with this chart that what I was hoping was to watch. I was watching this for the unhauled after hours. I never went to the NASDAQ site to see why they were halted. I just thought it was just another halt. But this could have provided a nice move, a nice play today too, if EDTX was going. So, oh well. Let's go through tickers one more time. If you have any tickers at home you all want me to look at, let me know. I've got a couple questions on here too. I don't mind it. What does emo stand for? Emotional, I believe. You mean like the music and the people? Isn't that what that means, right? One of my best friends growing up was like super emo. He'd like cut himself and listen to God, I forget who. All the emo bands. I like the emo music personally. Okay. So kind of lame, you know, but that's trading. That's small cap, man. That's what happens when these things get too volatile with no catalyst. And it's hit or miss, man, because sometimes they do it, like I said, and sometimes they don't, you know. Sometimes the dude at NASDAQ's on vacation or something, and or they've been paid. I don't know how. I don't know what they're doing, you know. I don't know how they do it. Same with the halt. Sometimes you're like, that should halt, and then sometimes it just doesn't. And you're like, sometimes other stocks halt, where you're like, how the hell did that just halt? So, and then I don't know what dictates like a 10-minute halt versus a 5-minute halt, and it's just, I think they're all in shambles. I don't think they know what the hell's going on over there. SEC's looking into EDTX. Yeah, so the problem with, so like same issue with like some of the Chinese stocks, most of those Chinese stocks, which are scams. Same thing happens with SPACs. You know, a lot of SPACs are basically shell companies. Okay. A lot of SPACs are basically shell companies, and they look to do merger deals and bring private companies public through these SPAC merger deals. Okay. That's what's going on. I don't like illiquid stocks either, outside of sympathy plays. That's the only time where I'm looking at sympathy, where I'm looking at illiquid stocks, or when I know something, you know, when I know that volume is about to move from one instrument to another, from one stock to another, based off of my experience over time and understanding the dynamics of when we get parabolic runners, they breed another runner. 10 times out of 10, if a stock runs 300%, you're going to see another stock run 100% that day. It's going to be somewhat closely related to it, in some form or fashion. So that the only time I'm really playing illiquid plays are if I have a swing trade in mind that I'm trying to fill towards like support on a daily chart. Okay, because that's how I swing trade. I try to swing off daily levels and daily support, kind of key levels there and stuff like that. So there's that scenario. And the other scenario is a sympathy play. It's the only time I'm playing illiquid stocks. I hate illiquid stocks. There's no reason to play a stock with a dollar spread. Enter a stock with a dollar spread outside of that for me. If I'm trying to position myself ahead of a move that I am confident is coming. Right? Like SAI. When CXAI ran to 9 that day from 1 or whatever. When CXAI went 1 and then gapped up to 9 the next day, this day where they went to 9 is when I bought SAI, all right, and the ones. Now, look at the volume. 537,000 was the volume that day. It didn't even simp that day. It didn't even go after hours. I think it popped really hard, okay? So it's a perfect example of I would rather be buying this illiquid day. Right here, this illiquid day, because I knew it's a potential simp. And it's not that there was nothing there. It perked that day too. Look, it was like there was something there. In other words, it was an AI play. I love sympathy plays like that, where the chart is like the low is $1.20 and the simp's at, you know, whatever. And the play before, and the play that it's simping off of went from 1 to 8, right? That's why SAI, when Tanner was like, hey, look at SAI, and it's in the ones, I'm like, immediately in my head, all my best trades are like this, by the way. Buy. There's no like, of course you got to look at the chart and there's risk reward involved and stuff like that. But when the stock's trading at like $1.40 or something like that, I can let the shit go to zero with my account. I wouldn't, but all I'm trying to say is like, it's a safer place than $20, $15 or something like that. And the fact that it was a liquid, it still did 530,000 shares when prior, if you look at the previous day, 4,000, 2,000, 5,000, 2,000. So the relative volume was like massive actually. Compared to its relative volume, the volume on this day was actually massive. Okay. Now the next day it gapped up and did 44 million in volume, right? But I was placing myself the day before where I was only doing 500. So by the time anyone got to this, if you were trying to trade this on the next day where I was literally just taking profits and I was up 300, 400%, people are trying to figure out how to play it. Okay. That's the key to me to sympathy plays, is that I can place myself in positions to have gap ups of 100, 200%. And y'all are just trying to figure out how to play it. How do I buy this? And you're trying to buy the morning spike or the high day break still for some reason or whatever else it may be. And the amount of reward that's left there for you, if there's any left, is not as good, right? So I need liquidity most of the time. But if I'm at sympathy plays, there's not fucking liquidity there 99% of the time. I get there and there's not liquidity, but I've got my eyes there and I try to fill myself as low as possible. And the cool thing is most of the time, it's not a stock that's up a ton anyways. So I'm trying to position myself for explosive moves, minimizing risk. Same principle that goes behind gap and crap reversal for me on my everyday patterns, gap and crap reversal. Even if I'm playing a morning spike, even if I'm playing a breakout, it's the same principles that apply. Risk first, minimize it as much as you can. And through the process of minimizing risk, you are maximizing reward naturally, which is why I don't think about reward that much. I know if I'm I need to see range on the chart and volatility and spikeability and, the float and everything I do need to see as well. It's all part of the pie. But then once we get to the trade aspect, I'm not talking about conviction and pre-market process or any of that. I'm talking about now let's get to risk reward. How much do I risk? Where do I risk? All that good stuff. That's where the game becomes, okay, let's be as patient as I fucking can to get the best price that I can. It took a long, long, long time for me to get to that point. I fell prey to literally everything you guys fall prey to. And I still continue to. We're not immune by any means ever. As long as we're working, I continue to work on it. But
Well, what did you mean by range and specability? What's the definition between both?
well, first of all, lower floats. If it's a huge float, I can still trade them. I just adjust expectations. Like, okay, I either have to take more shares because it's going to move slow and scalp it for really big floats, or I'm swinging them. So most of the time, if it's a bigger float, I'm more of kind of swinging. The lower floats, though, something that you look at it and it can move. Okay, when I look at a chart, let me see. I guess this goes back to other process. Like if a chart has spiked recently really big, all the things I don't like on a daily, if those things are there, when I say spikeability, that's what my process is built upon, finding stocks that can spike. Obviously you get to a micro float. I know volume comes in, unless they're doing something really weird fundamentally, they're going to move a lot. If you see a low float that doesn't move a lot, question it most of the time.
I see what you're saying. Yep.
Right? So even, everything we played this week, these tickers, these micro floats move the most, the fastest always, no matter what. And because of that, I'm rarely trading floats lower than 1 million shares. Like these sub million share floats and stuff like that. It's just because of the illiquid nature And because of the fact that those gaps are $3 to $4, it's tough. It just is. What I mean gaps, I mean range, like the morning range when they start to pop. They're tough, man. So I'm certainly not beating myself up over missing them. The most important part about these boot camps, because the markets change so much week to week and what we're trying to do and the patterns change so much, is not so much the patterns of this week. It's very important to understand this because you will see this again. You will see this exact scenario of what just happened. Massive SPAC or low float, micro float runner followed by subsequent sympathies. If it were just a reverse split, okay, so like PRFX example, set off BDRX because they were both reverse splits, right? In this case, it's these SPACs. Tomorrow, it could be like anything, okay? Any stock from any sector. If some AI play tomorrow goes berserk, if AI, for example, or NVIDIA or something has a massive week next week or something like that, it'll set more of those plays off. And that's all I'll be looking for next week, which is a totally different bag of stocks. And now instead of looking at really illiquid SPACs that have traded no volume for the last year, or for the last 6 months or however long they've been trading, now I'm looking at, if it's AI next week that I got to trade, now I'm looking at a whole sector of stocks that have been trading heavily all year. So it's a totally different scenario. You know, we're looking at like AI. If we just go through these dailies, AI, shit ton of volume since January. SoundHound, I think I'm down on my position right now. Yeah, I'll add to this at some point. But SoundHound, look at the volume, you know, and it's these stocks have a shit ton of volume in action. They're way different. Okay. I personally prefer when we have, this is kind of a longer term macro. Like I've been talking about this shit all year, the AI stuff and the AI tickers all year because they've been getting volume all year, but they've been kind of bound. Stocks like SOUN, and I mean, they've been dilutive. BFRG, which is pulling a little bit now, that, you know, hasn't really materialized either. So we'll kind of see what happens. CXAI was another that's kind of pulling today. Markets are pulling, I think. Imagine the Qs are down or pulling a bit. No, they're holding. So just kind of some weakness in the sector right now, and that's just is what it is. But it could be anything, like I said. If next week it's like a biotech, a random low float biotech, or if next week's like 30 million float biotechs that are running, you're going to see me looking at those. And whether or not I trade them is a different story. Whether or not I can find good risk reward opportunities and good trades, there's a totally different story. But that's the long game. What's NTRB? We've been watching that, right? Much older split. Anyways.
What's the meaning behind your boxes that keep like the white, green, red? That keep happening?
This means down. It means it's gone down.
Okay.
And down, if it's red, it's gone up. That's all. Just down and up. Ooh.
If the float's too high, then
This thing's getting real freaking naughty. Dodgeball. All right. So a good example of ATM, but it can still go. It's not at the end of the world, you know, but also an example of I don't care because it's got an ATM. That being said, these guys, bottom bouncers, are one of the only exceptions where if I can get a low enough price, the dilution doesn't matter as much to me. If I'm getting like 8-10 cents on some of these things, I can get 100% bounce before it gets back to warrants that they inevitably did at 25 or 50 cents when they're like the super cheap ones. I love bottom bouncers for small accounts and when they're in play, and they've kind of been in play all year. I've been ignoring them a bit more, but let's do, just as a matter of exercise, because I haven't checked this in a while. Let's filter to $1 and take off the restrictions completely. So just all dollar, every stock up to $1. And then let me pull off the OTCs. Shit. We have 536 stocks under a buck right now, which is pretty good, you know? That's a lot. 2022, 2021, by mid 2021, 0 under a buck. Is that crazy? That's fucking crazy. I was losing my mind because we had 0 under a buck and very few under $2. Like every stock had gone. There weren't any cheap stocks. Now it's 1 to like 4 or 5 reverse splits a day. Each day, a new low float's born. You know, those, you know, obviously the strategy from back in 17, it's still alive. It's changed a lot, but they went away. It went away completely, the reverse split, you know, twofold. Someone released it on YouTube for free to everyone, which is okay, whatever. That's life. But that went viral too. It ended up like, you know, it ended up getting a ton of views. I should have put it on YouTube for free is what I should have done. But I worked fucking hard I worked so many days and nights to get to that strategy. It's not even explicable how many hours it took to get to that for me, that it didn't feel right to just give it away for free, man, you know? In retrospect, I would have rather been the one to put it out there like that, but whatever. They've changed a lot, specifically since back then. And, so twofold, we had no stocks under $1, so they didn't have to do reverse splits anymore. And then it became a strategy where everyone's like, just buy the reverse split. When they do a split, people started buying them instead of letting them fade, which was the magic behind that fucking strategy in the first place. Idiots. Pissed me off so much. It's my fault. I should have never told anyone ever. Someone would have, you know, I'm not the only one who knew about it, I'm sure, but I should have done it. Anyways, they fucked it up for everyone. Everyone did, because the game was let it go to $1. They got to hold a buck for 10 days. So they got to put out a PR. So I could literally predict PRs on dollar stocks. There's nothing more magical than when a dollar stock goes to 2 and you know the PR is coming. You don't know which day it is. Day 5, day 6, day 7, day 8, day 9, day 10. But that's magical, you know. That's like, to me, because when I started trading these things, I remember watching the news come out and like, God, if I only could predict this. Like, if I only knew a PR was coming out and I could float it, that's illegal. But if I had insider information or something, which is illegal, but it was essentially that, and it still is. They still do it. They still split and they still pump. It's just not as easy as it used to be. It was like, split, I'd put it on a watch list. I wouldn't fuck with it till like day 5 or day 6, unless they put a PR out earlier in the week, and then I'd just buy it in the morning. And they wouldn't run like 200% pre-market on the PR. They'd gap like 20%. These splits, I had time, I could buy them. But the best was the one loads. You know, the second any of those got to $1.10, I was starting to load as many as I could to risk a buck. It was just magical. But post these videos coming out and everyone else knowing about it, now it's not going to $1 anymore. It would start to stop at like 250 or 275. And then they'd start stopping at like 3 instead. It just kept the marks, the low points of these reverse splits would just get higher and higher and higher as people were trying to anticipate it. So, and they're low floats and they're illiquid in the beginning stages of these stocks. So, such a pain in the butt. But they're still playable. They still create new low floats, 2 to 5 a day. We've been seeing splits all year, right? And that's because we have, like right now, if you go back to the scan, we've got 500 stocks here, all right here. And I'm sure there are more if I were to search around different stock types and stuff like that, that are in risk of being delisted. There's 500 companies right now here. It's a lot of companies if you think about it. 535. You know, most of these have probably already gotten a letter from the SEC or from NASDAQ saying that they need to maintain compliance by getting over $1 and so on and so forth. So I love it. Small cap's back. It's been back. We're going to keep getting low floats all year. We're going to get squeezed all year, I think, still. I think it's been an awesome year of trading. It's been my best year since, it's been the best start of a year, first half of a year for me for a long time, you know, for years, since 2020. And even the start of 2020 sucked for me, actually. Since 2021, since the start of 2021, when we were just destroying OTCs. Crazy. I didn't even scrape the surface on those. All right. So that's what we got. We got a bunch of stocks under $1, you know, which I love to see personally. What do I think about the turtle trader strategy? I have never heard about that. What is that, like scalping? It's like when you got a turtle head poking out. Got a turtle head poking out. What do we have here? Kind of looks like a baby. Watching that the other day. Fat bastard. All right. Let's see if there's any more questions in chat. I think we had a few more. Someone explain it. Someone Google turtle trader strategy in here. Let me know what it is. It sounds about right. So it's exactly what it sounds like. Yeah, it's scalping. That's what that is. I love that idea for breakouts, only because they will break out real quick most of the time. You know, if you get it. I don't love the idea for myself because I'm not a scalper, but it's safer than just buying and holding breakouts, you know, most of the time. It's just not for me. It's not for me. Only times I scalp where I get scalpy are scalpers markets where there's just literally nothing, you know, and I need to grind out, and I don't personally need to, but you know, and back in the day, if I was just on the grind or if I just want to trade day to day and it's slow, then yeah, you can scalp. The turtle head strategy. I've never heard that one. The just the tip strategy. They might as well call it that. Okay, I missed a couple questions, it looks like. Do I ever play options or I stay in my wheelhouse? I've played options a few times. I like them. I just haven't spent the time to get to know them intimately enough to where I'm comfortable like playing them all the time. It is definitely something. Options are the first instrument that I'm going to start using a little bit more going forward, I think. Once in a while, at least. I just like to stay and do what I know every day. But I plan on expanding too. I mean, the same principles that make you successful in one area of trading easily translate, in my opinion, to other areas or in other instruments.
Would you ever do futures?
I don't know much about them, but yes, I wanted to look into futures. Forex is the one that kind of sketches me the most, I think, just based on my research, and Forex is blowing up. I don't know if you guys know this, but Forex is, I mean, it's always been a kind of a big market, but on social media, it's been blowing up. And all the funded, it's just a really, really sketchy thing. All the funded accounts and stuff like that are almost like Ponzi schemes. You know, it's like it's kind of crazy, you know, and really, so if you look at how the funded accounts work, and this has not changed over time, people think it's like a new thing happening. It's just more popular, but this has been frowned upon by, you know, a lot of the community, at least back in the day, since I started, which is like Forex is a scam. And I don't believe Forex is a scam. Okay. It's a trading instrument. People are making and losing money there, but it's the funded account thing and I don't know, something about it. They prey on the fact that they want you to lose. Like, you pay to take that test to get funded. People pay to take that test. They fail it all the time. That's like how they make money. You know what I mean? So it's kind of crazy. It actually, I don't know. It's kind of a crazy thing to me, but.
What about trading a SPY?
Hit or miss. I think there are times too. That's what I think. I think when it's not volatile and whatever, I don't know. I don't. Yeah, I don't know. I think it's a game that, you know, real big boys play. And when I say the real big boys, I mean the people who know what it's going to do and stuff. You know what I mean? Even they don't, but it's just, so I don't have experience trading it that much, so I can't really say. The patterns feel more random to me, but that's probably because I haven't spent time. You know, maybe someone who spends all day, every day looking at SPY, I can tell you they, for a fact, will get way more from watching the price action than I would. The same way someone who only trades SPY couldn't do what I do at all. I can tell you I could do more of what someone does trading SPY, though, if I wanted to trade SPY, than they could do what I do, which is find stocks. In my opinion, a lot of people who just trade SPY and stuff are just, I don't want to say lazy, but they just don't want to do extra work to like find other instruments that are more volatile. I think SPY's been a great instrument this year though, and last year. You know, I'm not hating on anyone who does anything. I'm just telling you what my experience is. And that's it for me. I don't care what you trade. You know what I mean? If you can make money trading anything, I'll trade anything if I can make money trading. So, and the same principles always apply. So it doesn't really matter. But I do plan to expand. And last year was the first year that made me think, especially like you should, just in case small cap ever has another year like that again, which they will. There have always been months like that, and it was just the year. And the only reason that, not the only reason, but the main reason that last year happened is because 2020 and 2021 was the craziest fucking market we've ever seen in our lives. You know, the craziest bull market ever. Trading got more popular than ever. Everyone were getting stimmy checks and buying stocks, you know, or Prada or whatever. Casinos were closed. Yeah, what do you think all those people did? All my old friends.
Online gambling?
All my old Chinese slot machine lady friends.
Online gambling?
Online gambling, yeah. But a lot of them went to trading too. Did you guys watch that Netflix documentary about like the apes?
Yeah.
I couldn't get through the first 10 seconds of that thing because I didn't like that whole movement personally. I thought it was great. Traders were coming in, but I thought the whole buy and hold shitty companies thing was stupid. To stick it to the man and stick it to, you know, the hedge funds. The hedge funds are fine. The hedge funds are fine, and you're still broke as fuck because all you did is buy AMC. You know, to me, that was the whole stupidity of the whole thing. I get the movement, and I totally agree the shit's corrupt. You know, I totally agree that like government officials should not be trading stocks that they have information on when they know exactly what the macros are that are going to drive everything. You know, if I knew the macros that they knew, fuck yeah, I'd be doing, you know, some crazy shit.
What do you think of the future, like with AI and stuff like that? Do you think more people will be trading against bots and stuff, or
We're already trading all against bots
I know
all the
it's gonna
time.
be I don't want to say worse, but is it going to be more difficult?
Who knows? I don't know. I've seen it so much now from like the lows and highs of everything. And with technology changing, and who knows? I don't really care. I just have to fit myself into the equation profitably. You know what I mean? Whatever comes, that's always my goal. Adjust, figure it out, figure out how to buy low and sell high every day. If I can do that, then it doesn't matter what the markets throw at me, you know? My mistake in 2022 was I fished too much. I'm serious. My escape into my problem in 2022 was not just the markets. I looked back at my body of work and I looked back at the markets that year, and I could have still been profitable in 2022. If instead of saying, oh, fuck these stupid markets, there's no runners today, and going fishing, I was trying to figure out how to maximize each day and make a little bit of money each day. But you know, coming off the back of 2021, it was tough to adjust in 2020. It was tough to go from making $5, $10, $20,000 a day at times to just like $100 or $500. You know, it's just stupid. It felt stupid to me, which is a psychological mistake on my part, which was a stupid. The answer all along last year was just work harder, make sure I'm getting into the data, adjust my game, adjust, make it, you know, and then teach how to what I was doing. But instead I was just like, and there's a lot of truth to it. There were no runners, you know, but I still could have adjusted better and tried when there were a little bit harder and stuff like that. It was depressing. It's a depressing ass year for everyone. And that was an excuse to me as well. All my friends who are all sick traders too are all struggling, so it's okay for me to struggle, which is true to a certain extent, but only to a certain extent. Yeah. Big Boy said he's funded, and it's true. Yeah, that's what I learned about when I was, because I was looking at, when I started, I was looking at funded accounts not for Forex. Like there were a couple places where you could go get funded for your stock trading account. There still are, and they have prop firms and stuff like that. And from all the research I did, you know, all of these funded accounts and stuff, that's all in what's it called, islands out there. They're all in the Caribbeans and stuff like that. They're all it's just sketch. Your money can go quick, put it that way. I think some of them you're not even trading real accounts, it's just paper trading. Yeah, that happened with what's their name back in the day, Sure Trader. Yeah. If you put money in your Sure Trader, you were just paper trading. Yeah. And guess what they banked on? The fact that 90% of traders lose. So it gave them enough cash to pay the winners. It's brilliant. Brilliant scam. But you'll notice they're all offshore. All these places, they're all offshore. And like I said, I don't know enough about actually Forex to have an opinion on it. I know it's an instrument that actually successful people do trade though. So like I said, trading's trading. I mean, I got one of my best friend's dads growing up was really wealthy, and he had a bunch of gold bars and a safe and like all this. He had a nice house and stuff. And I always wondered what he did. And kind of early on, I found out he was trading cattle. I'm like, what the fuck does that mean? Well, he was trading cattle futures. He's a trader. He is a trader, and he's a really good cattle futures trader. And that's all the fucking guy trades. That's all he's traded for like 20, 30 years or whatever now. So, and I've had a discussion with him in the past, and trading is trading. We had the things I tell you, we had the same discussion. Like there's no difference other than the instrument itself, learning the instrument and how it works and all the ins and outs of what you are trading. I know the ins and outs of small cap. I love small cap. I still, to this day, believe it is, for people with smaller capital, the best. I mean, from a volatility standpoint, I understand options. I understand that options are kind of like penny stocks when you're trading like the end day expiration options, and it gets crazy as shit. I understand, like when SPY goes and people are trading crazy SPY out of the money options and stuff, they can make a shit ton of money. But conversely, they also have time limits in which to work with, and like they've a lot of risk involved too. So I'm not saying it's the only way, but in terms of stocks, small cap are every single day the biggest percent gainers. Period. And obviously, it's easier for when a stock goes 1 to 150. That's 50%. You know, $100 stock has to move $50 for a 50% move. So that they're not necessarily, they're going to be stocks with more range, but you're talking about big cap stocks and stuff like that. Small cap, not only are they the most volatile from a percentage standpoint, but I can also get more shares of them and then take advantage of that when they move, that I can actually afford to buy 1,000 shares of this company. And when it moves 10 cents, I can make $100. Or if it moves $1, I make $1,000, as opposed to, you know, not being able to do that with higher price stocks. So that's always been the idea for me. And now I'm not stuck here because I can move if I want, but it's what I know best. It's where I'm comfortable. I'm one of the players that is not the sheep. You know, I'm not the noob. I'm not the person who doesn't know what they're doing. I'm not the person getting dumped on. I'm not the person buying into short sellers unless I have good conviction in a squeeze for certain reasons. I'm the guy who's in harmony with the price action and tries to put myself on the right equations. I'm the guy who understands how the institutional investors work in small cap and how they dump and how they like to dump, and how to try my best to not put myself in positions where they're dumping on me. But actually, I look at it as if I were one of them, and where would I be selling? And then how would I buy it to make sure that I can make a shit ton of money by selling her, or any money at all, you know, at certain levels. So that's the idea there in terms of why I stick to small cap. You know, and all the traders I talk to are really good at one thing. All the good traders, you know, Jack would be an exception, I think. Well, he trades other stuff too. And everyone, all traders are kind of experimenting and doing other things, but most traders I know, they get really good at doing one thing, and then they just take money from it whenever they can. Someone asked if I ever did a Wine Wednesday with the Clover Boys. I don't like wine that much. I mean, I do like wine. It just fucks me up. I don't know if it's like my Korean genes or something like that, but like, I get really red when I drink wine, and then I get really bad headaches. I'm a bourbon guy. I drink bourbon and beer, and seltzers. Do you guys remember when White Claws came out? Yeah, but it was like kind of like frowned upon for dudes to drink it because it was like a girl drink at first. It's definitely not a girl drink. You know, I know because they said, because it's like the #1 selling drink at golf courses now. So,
Oh, really?
yes. Oh, they're delicious. I went on there was about a month where I was drinking like 3 a night, and because they were really good. Just drinking like water. Summer in Arizona.
It's the lowest calorie alcoholic drink per calories per alcohol.
It's
So
dangerous.
highest alcohol content
Yep.
is the lowest.
It's super dangerous. It's like water to me. White Claws? It's like seltzer water with alcohol. Yeah, and flavored.
They've become famous. They're like in rap songs and stuff now.
They're good. Okay. Someone asked the optimal range of float rotation for longs and shorts. I don't keep track of that stat. I don't really. I know I can look at it, look at the float, look at the volume, and see how many times it rotated. But I haven't found any edge personally, and that if it rotates this many times, then it does this. You know, there's no for me personally. I know when it's doing a lot of float rotation, it's doing a lot of volume, but I don't have a magic number there. How do I assess whether shorts might still be involved in a multi-day stock, since we often see blow-off moves that exhaust shorts, and that safety bid is gone to buy dips? Multi-day stock, first green day, shorts will be there. I'm assuming shorts are everywhere. You know, obviously there are key levels. I know where shorts, the good shorts in particular, like to short more often than not. But key levels of resistance, you can bet your ass there are going to be shorts that are going to be risking that resistance level or somewhere near that. In terms of multi-days, if it goes all the way back to where it came from, I assume most shorts have covered most of the time. But then it's not to say it's not going to be reshorted the next day and the next day and the next day. You know, there are some massive short sellers who only hit backside of moves, who only hit like that next red day. And when it pops and then it drops and then like, you know, starts to downtrend, they're hitting every lower high and just like beating the shit out of these stocks. Okay. Yeah. Yeah, I got you, Jeff. I'm going to do my best to get as many up as I can. How many times a year do I do this class, and do I ever come to Florida? I'll be in Miami next month, beginning of next month. Just hit rwtrades.com and go to events, and that has the next New York City next week, and then Miami the week, not the week after, but beginning of August. I have been doing them once or twice a month this year. I've been doing a lot this year, and I had to cancel the last two because of my dad being hospitalized. So I'm going to slow down a little bit the second half. These next two boot camps are going to be the last two for a few months, most likely. And then I'll probably do one or two more in like September or October, November, something like that.
Are you gonna do a skiing one?
We'll do a Wolfpack meetup this year. Probably not skiing. Well, we may. I'm definitely want to go snowboarding. So I'm down to do a meetup somewhere in the snow. We could do a boot camp in the snow. So we'll figure that out when the winter comes. But I wanted to do maybe the next couple months, figure out a Wolfpack meetup, and we'll just rent a mansion like we did in Austin, and whoever wants to come get together, spend a few days having fun and just exchanging ideas, and I think that'd be cool. Oh God, my wife would not like that. That sounds really fun, but she's not in charge. I'm in charge. I wear the pants in this relationship. That's not true. What's that? Hopperstone Mason said, do I have a percentage of how important the macro picture is to my trading? Like, is it 50-50 with price action? No. Price action is... it's hard to like put percentages on this. It depends. Okay. It's always changing. It depends what the macro event is. The macro is always first though, guys. The macro guides me into tomorrow, and then it guides all my actions, and it guides how risk averse I'm going to be, or if I'm looking to take on risk. And that's why, like, process-wise, if you've seen any of my material, I start macro always, okay? My whole process of trading always starts macro. What are the markets doing? You know, the state of affairs, current events, the big picture of humans and human psychology, or, you know, war, pandemic, anything hot, you know, hot topics and stuff like that. But same when I get to a chart, first thing I do when I get to, you know, once I've gone through process on that is to go to the daily chart. And I start at the daily chart and whittle my way down to the minute chart. Okay. So macro precedes everything for me. And then obviously the price action of the day will change how I feel about tomorrow, because the price action will change how the macro conditions look to me. Okay. Alpha Guide's dropping Monday, officially. The Trading Alpha Guide, yeah. The new guide will be dropping Monday. For those who took pre-sale on it, it'll be available for you. And then the pre-sale perk people who got like the one-on-one Discord call with me, and some of the other goodies, the guide launch party / boot camp. We're going to do something kind of like a boot camp / party here in Dallas as well. all that stuff you'll get instructions for next week. But I'm excited about it, man. How would I grow a 3K account with the current market conditions? Same way I'd grow a 3K account in any market condition. You know, single at a time, risk reward, maximizing it to the best of my ability. I wouldn't change anything. I started a 5K account in December. I need to get that one launched back up so I can finish my goal, because by February I had gotten it to I forget what the number was, 15, 16 or 17,000 in 2 months. So it was I was pretty close at that point. I was able to already, once you get to 15, 16, you're able to take different size. Like, it changes the equation. And then for me, my experience was it kind of snowballs from there. So I'm going to put that 17, I think it was 17.5. I'll go back and look. It's been months. We'll go back and look at those accounts. I meant to take all those trades and turn it into a lesson as well, in terms of, because that was PDT trading. It was only like 25 or 30 trades. That being said, that's with my experience. So when I have a 5K account, I use the 5K. Not all the time, I'm not always using it, but I'm using my capital, understanding I can use this $5,000 and I can risk $50. Okay. So that's kind of the idea behind it. I don't suggest you using all the size at your disposal if you don't know what you're doing, because if you're using $5,000 in your account and if you have 5K in your account and you're taking, say, 1,000 shares of $5 stock, okay, $5,000 in your account, you could take 1,000 shares of a $5 stock. Well, you live and die with that percentage gain, and your entire account does as well. You know what I mean? So I'm okay with that because of what I know. But, you have to find an acceptable risk amount that's going to give you longevity too. The whole thing about growing a 3K account now is way different than it was growing a 3K account when I was new. It's not the same thing. You know what I mean? It's just a way, way, way different thing. You have to learn so much if you're new. I'm going to start like a second half of the year, a small account challenge in the pack or something. And I'll put myself under PDT again, and do that. I think that was the plan, before kind of my dad went down. It was, every year starting an account with 5, seeing how many times I can get it to 25. And then once I get to 25, go back to 5, just cash out the 20 and start back over. I think it'd be a fun experiment and kind of show people that it's not an excuse. You need to learn more about trading. You know what I mean? You need to get more day trades. Shit. I have a whole section in the new guide strictly on PDT, all about PDT, because it's a serious issue that affects trading, no doubt. Minimum volume I filter for on my scans is 0, obviously. Like, so when I just looked at $1 stocks, I was trying to find all the $1 stocks. I put it at 0 so I can see everything. And when pre-market starts, I'm at 50K. All right. I have like nothing, and I'm at 50K dollar volume. But you guys probably can't see that. As the day progresses, I'll go to, this is what I pretty much leave it on 250. If you're newer, it's too many fucking stocks to look at, in my opinion. Like, it's a lot of stocks, and you'll just kind of get paralysis from that. Analysis paralysis. There's only 60 here at 250,000 though, that are up 5%. So all you really need to do is go in and filter by, increase volume, it'll decrease the amount of tickers. Now we're at $1 million volume. I only got 37 of them, right? That'll kind of narrow it down. But when I'm looking for sympathy plays, I need to make sure to go take that volume and bring it back down so I can see what I need to see first again. Right? So I'm always tinkering. I don't have multiple scans. I just have this one. I've not missed anything. I'm the first to see everything that runs most of the time, just with this one scan alone. So I don't think there's, other than the experience and it's the understanding of the markets that gives me my understanding of my scan. All right. I used to look at my scan and just be like, oh my God, that's so many, like where do I go, or what do I even look at? And so I get that. But now it's not that. It's all noise to me. Because I have specific things that I am looking for. You know, when you know what you're looking for and they come up on the scan, it's much easier to obviously trade. We haven't taken a break, huh? We've gone, yeah, we're almost 4 hours, no break. So if y'all want to get a water, get a coffee, we're going to order food today together and we're going to stay here. So if y'all want to stay with me all day online, I'm just going to be here all day. We'll order some food, but yeah, we'll take a quick break in the room right now. I'm going to get a coffee too, and we'll resume in 5 minutes and we'll get back to questions. We'll open up some Q&A here in a second and stuff as well. But the guide stuff, the upcoming boot camps, I think we have to update the amount of seats. I don't think there are that many seats left for New York or Miami, but I'll look at it. Trading Alpha Guide drops Monday, and it's going to be, right now it's 75% off for the pre-sale. So if you want to cop that before it drops, I would do that because I think it's probably the best guide, at least long wise for listed plays that I've ever seen. I haven't seen that many good ones, like on long listed plays, and just trading in particular. You know, it's a heavy dose of psychology. It's gonna be good. I'm stoked. What else? I think we're running a special for people who are attending the stream for joining Wolfpack, for anyone who wants to join the group. It's the best Discord out there. It's not the noisiest, but the people care about each other the most. You know, everyone's looking out for each other. I'm there every day, obviously not last month with my dad being down, but I try to be there, unlike a lot of people, as much as I can, you know, to answer questions. I try to talk to my students one-on-one on Discord when they need help. Just because, to me, what I've found over time is that trading, due to the psychological nature, is not the type of thing where you make one video and the masses can get good at it. Or I don't consider that like mentorship, you know? I don't consider, hey, just watch me on my stream or video mentorship. Because everything's so personal. And when I get to know people and I get to know traders and kind of what makes them tick in their lives and what makes them tick with their trading, it makes it way easier for me to get the big picture and help them psychologically or strategically or whatever else it may be, because everyone's so individual, you know? Now I may say things that resonate with people at times, like, and they're just watching, and I love that. That's why I do this. But for mentorship, you know, I try to make it like I wanted it to always be for me, which is like have a mentor who I actually can call my mentor because I have his fucking number. You know what I mean? How do you call someone a mentor when you're just paying and just watching their shit all day and like they don't even know who the fuck you are? I don't know. That was always kind of my idea of what mentorship meant. You know what I mean? So I don't know. That's been the idea for me, for Wolfpack, for my lifetime members in particular. Like, I got my cell. We chat on Discord. If they have emergencies, they hit me up. You know, if they're going to have a baby and they don't know what to do with their trading, they hit me up. I get a lot of funny calls. Not funny, but I love it. I feel honored when I get, you know, a lot of these, you guys even in here who are watching have become my friends. So all my friends are traders now. I have one friend from, maybe two from back in the day from high school and soccer left, and the rest are just traders. So trader therapy. We do trader therapy every Friday. That's the absolute best. Yeah, no, it is. It's the best. I turn into a shrink, literally a shrink for everyone, but also for myself. You know, we start out with me talking about my mental defects, my mental mistakes for the week, where I'm struggling psychologically, you know. And then I talk about how I'll go about fixing it, or if I don't have a fix, I'll ask the group, like, what the fuck do you guys think? You know? And then one at a time, people come up on stage and hopefully on video, and we get to have that chat together. Same sort of thing, and they get deep. And
You even bring traders on. Remember when we had Jack, and Jack was having struggles with like $50,000 loss. What?
yeah.
Struggling with like $100 loss. Remember that?
I do. I remember. So Yeah, a lot of things go on. It's an awesome room. We're turning it into something super special, and would love to have more of you with us. What's up?
Do you filter out people, Roland? Like, do you take everybody, or
Not everybody, but we give everyone a shot. They want to try it out. You know, it's a different environment than you guys are in a lot of chats too, I'm sure, and it's just kind of different. We try not to just make it noise and pumping. It's
I think you have best traders out there. I just said that.
it's traders helping traders. You know what I mean? And then
It's not like a broy kind of.
no, no.
Yeah.
Well, it's a good mix of people too. We've got we got a lot of females. We got all ages, ethnicities, and backgrounds, and I love it. You know, War Eagle Trader crossed 1 million not too long ago, and you know, he was told by several other mentors he's like too old.
How old is he?
He's not even that old. He's like in his 60s, I think. He looks like he's like 40 to me. He looks phenomenal. But then we have Sandra, who's been doing really well, you know, a mother, and who was like working corporate in DC. Like she was like at a consulate in DC or something. She gave it up to day trade.
I gotta talk to him.
Sandra. Yeah.
Cool,
Yeah.
I lived in DC.
Really?
Yeah.
Yeah,
Like,
Sandra
4 years,
did.
I just moved
Really?
to Austin like 2 years ago. Yeah.
That's crazy. So it's an awesome group, but get in there. We're midday now. We've been midday. I try not to trade midday. Fridays in general, guys, I'm not a big fan of afternoon trading. I've always enjoyed the fact that I can just not trade Friday afternoons and go into my weekend without worrying about anything. The only exception to that is when markets are hot or if we have sector momentum. The only time you'll really see me are big constant runners where you're going to see me swinging over the weekend. I enjoy my weekends and the peace of mind.
What group are you talking about? The chat? Or, were you talking about the chat?
What about it? Yeah, the Wolf Pack.
We do a group picture later, Roland.
What's that?
We do a group picture.
Yeah, definitely. We'll get a picture.
I have an idea. If you want to pitch, I want to pitch it to you already.
What's that?
I have an idea of a group picture,
Let's do it.
like a Vanity Fair kind of setup on the couch with all our computers. You could be in the middle. Me and Heather on the side. And then
Oh, that's perfect. I love that. Yeah, that's
Kinda
great.
like that would be a really good, right? Like kind of like this setup. Like, well, it can't be the same kind of, you know. We're so doing that. Just let me be the director for like 5 minutes.
I'll let you.
But everyone's just have to participate. Like something like this, like over there, like random. You know.
Yeah, that'd be funny.
Roland being in the middle, bring all our computers,
Right?
we'll be the most hit TikTok they'll have on it.
You put it in Discord? In the chat.
And then we'll put it in the Discord,
Yeah.
this guy with his Harley shirt,
Yeah.
his tattoos and stuff.
That'd be crack Rocky. Just kidding. Good old crack. How you guys doing at home, Wolfpack people? You good? Nice. Okay. Questions at home? Anyone? Yeah, Kevin, next week, dude. I'll be in NYC next Thursday and Friday. It's on my site. These are the next 3. So we got Dallas now, obviously. These numbers are wrong. I don't know why they're not updated. But New York and then Miami a couple weeks after that. Awesome, Colorado. Look forward to seeing you, man. Unless you're a lady. Then I look forward to seeing you, lady. What's up, Omar? How's it going, brother? Monday, Tony. Trading Alpha Monday, my friend. Regarding the AI sympathies, I've been playing AI sympathies all year. Soundhound, BFRG, CXAI earlier in the year. You know, is there a discount code for those who purchased the first guide and went to my boot camp? Yeah, there is, and you can email, or sorry. I think Tanner put it up, or maybe it's in the description for the video. I forget. I'll have someone throw it in. I'll have Tanner if you can throw the code in chat, that'd be sweet. Just throw it in occasionally so people who are just joining can. We'll have Tanner in here. Everyone thank Tanner, by the way. He's the one who's been moderating, and he's kind of my right-hand man. Let's see. How do I feel about swinging puts off the 450 SPY in the next week with the upcoming Fed interest rate? No opinion there. You know, I'm not try not to give opinions that I don't have. So, I'm sure there are people who know more than me about what SPY how it will react or not. I have opinions. Don't get me wrong. I just try not to share them if I don't have a solid opinion. You know what I mean? That's the one thing. If I don't have answers, I try to not give bullshit answers. One of those things. I'll just say I just don't know. We'll put all relevant codes and stuff in the description for you guys. If y'all don't have one of these at home, I know it's not a sex toy. It is not. It's not for my booty, I promise. Oh, so good. Yeah.
But like when I import the trades, I just go here.
Am I waiting for RXRX to break out? I mean, I don't have it, so I'm not waiting for it to. But my synopsis on day one after it was all done, especially yesterday, was that we're probably gonna see this.
Yeah.
We're probably gonna see this head towards 20 next week, in my opinion. I could be wrong. I think it does. I think we'll see a breakout next week of at least this 15 level. That's my opinion.
I uploaded
Really strong catalyst, really big volume. News with AI. The only thing that could damper really would be the markets, in my opinion. Hell yeah, Kelvin. I'll see you in New York next week, buddy. Can't wait to see you guys again. I love my New York crew. You guys have questions at home? Just shoot away. What are you guys doing? What do we got? What should we have for lunch? Pizza today? Do some pizza? Huh? It just, I don't know what happened. No, we never ordered it. We never ordered pizza. I went out to call my wife, and then I was going to order pizza, and then I came back and forgot, and then it was like time to leave. I don't really eat during the trading day, so yeah, it's and then recently, and not recently, but kind of over the last couple of years, I've been seeing stuff about how fasting and not eating all day is good for you. It actually keeps you younger, apparently. It sparks off some biological anti-aging chemicals and stuff like your body. Same with cold plunge and extreme heat. Does it? What's that? Yeah. Water, coffee, and crack. Right.
Yeah, I usually go to the gym after the market closes. If I get a big lunch, like it just saps my appetite.
So the thing that BB might do, try and find a little bit, shares are going to get canceled. That's my biggest fear. Is when they get canceled. I don't know.
Overstock just purchased all their intellectual property, so Overstock is rebranding their entire company to that application.
HTX still done.
Looks like it's actually going to be Overstock.
You know if the shares are going to
No, I don't.
my only fear, I don't know.
Yeah, kind of the main stocks on watch for me from kind of a multi-day move would be RXRX, ELOX too, potentially for next week.
Oh, so they kind of like recreate the ticker or something.
Yeah. So the problem with that is if you're in it.
What other questions we have? Are pre-market levels important to me? They're very important to me. They don't hold as much weight as once the market opens, obviously, because they've not got sorry, hold on. Specifically, they're more important to me when we're talking about first green day gappers, okay? First green day gappers. That's when I'll look at those levels, and specifically if it's trading decent pre-market volume, okay? And I will use those levels when I'm watching fades, morning fades for dip buys, as potential levels where support's going to form or a turn may happen. This is, I forget what it's called, but it's a cane. This is called the muscle hook. Let me see. I don't know if you can see that. It says muscle hook. I got it at Target or something like that. They have it in the workout section. It is just a hook with like these little knobs on it for your butthole and your back for both. Okay.
Yeah, it was like, and it was exactly what I laid out. Like, I didn't even take my own. I was in Mexico. Because it did. Like, where
What's up, Tool Girl? This thing's money though, man. You know, between this and standing desk at my house, the sitting really gets to me.
I was like,
But
that's
I had a trainer. I first saw one of these like 20 years ago. I had a soccer trainer.
June 26th.
Well, he was a strength and conditioning coach when I was between 16 and 18 years old that I'd go to a couple times a week. And he would just walk around with this cane. It didn't have these knobs on it, but he had this cane and he'd just walk around telling people how many sit-ups to do and shit,
like
what to lift.
less than a week later, or 3 days later, at 40. And yeah, the guy in the Discord.
It helps a lot, these things, just to let you know.
30 grand.
You can get like knots out. And then, yeah, like I said, it's got multiple usages. Okay.
Take it on June 22nd because it tested that low June 14th. Yeah, actually.
When am I coming back to Nashville? Soon, hopefully. I loved it. That was fun. That was a cool boot camp. Arian said, in regards to historical resistance days, is there a limit to what volume ratio you prefer? Hey, could you guys just half the volume? You're good. You're good. Is there a limit to what volume historical resistance days? So like relative volume. For example, intraday volumes 3 times historical and stock is gapping. Yeah, it makes total sense. So you're talking about in regards to the relative volume. So I don't have any specific metrics, but most of the tickers that I trade don't trade very much volume on a daily basis anyways. Okay. So for example, here's let's go to SAI, which was an amazing trade for me. One of my best trades this year. And I'm buying it on this day, obviously. And you're saying historical, but yeah. So historically, you go back and these guys don't trade a lot of volume. Maybe once in a while, 20,000 shares, 1,000 shares, 5,000 shares. Even when they were moving around back here, not very many shares. So on this day when they're doing 500,000, and keep this in mind too for pre-market, okay? Oh, you guys can't hear anyone in the background? Nice. Yeah, that's because this mic is not designed to pick them up. But so say we get to a ticker pre-market, all right? Say this is SAI and they don't really trade volume and they're gapping up on like 100,000 shares today. That's significant to me, And if a stock has never traded big volume, maybe they've never traded 1 million shares. If you go back and look, all right, and now they're trading. Maybe they trade 5,000 shares a day. The most they've ever traded was 100,000, and they're doing 100,000 volume pre-market. Then you already know something's out of the ordinary, and you already know that this ticker is about to possibly trade its all-time high volume, right? Arsenal's playing in LA soon too. Thought about going there. They're playing Barcelona. What do I think about buying PRFX at the moment? Open as it breaks out. Yeah, no, I already talked about this earlier today, and this is going to be back on YouTube, I think, and it'll be on my site as well for those who want to rewatch, or if you're coming late and you want to go catch the rest of it from this morning. I already kind of spoke about a lot of these scenarios, but it's just a first green day bounce for me, so I'm not looking at it for anything, really. I'm looking at it for the initial part of the move, taking the predictable part of the first green day bounce and then bailing, because it's really hard to say where these things are going to go on first green days, So this initial morning spike would have been all I'd be really looking for there. Only you, Himini. Yeah, I'm going to try to hit Chicago later in the year. I got a bunch of students there, and but for those who can't make it to boot camps and you're not in Wolfpack, you know, I stream every day. I do live webinars every single morning. We do pre-market prep live, and then we do live trading. And then we do power hour prep every day, you know, like an hour and a half. Well, most days, hour and a half before power hour comes, because the afternoon setups are different and things set up differently into the afternoons, you know. It's just a cool place to be, man. And in terms of access to me, I try to make myself as accessible as anyone out there, or more accessible. Cool thing is, and I tell my students all the time, it's like I have a lot of kids, so I don't have a life outside of my house. I don't have a life outside of my house. I have so many kids. So there's no real traveling for me. The only time I'm traveling is to teach. I don't, you know, there's not anything to distract me really during the day. So I'm able to be around to help mentor. The reason people, I think, don't personally mentor people is because it takes a lot of time. Talking to people on the phone and trying to help people, actually help people individually, takes up a lot of time for me. And I get it. You know, if I was like a single dude, I wouldn't want to spend all day teaching either. I just have nothing else to do, y'all. I'm kidding. I love it, but I'm just home a lot. It's the good thing, and it's what it is. Yeah, next time I do an LA boot camp, I will be in Orange County. That's normally where I go when I do that. I'll be in Newport or something usually. Somewhere around that area, or Laguna is where I like to go. I don't like going in LA personally. Was trading hard in the beginning. Trading was really hard for a really long time. And not only was it hard then, it's still really fucking hard today. Trading never is easy. Okay, so there are times where everything's flowing in my trading and the markets, everything is really perfect. Okay. And in other words, there are times where trading feels really easy to me. Okay. Really easy. And there are times where I'm like, what the hell's going on? You know, that's trading. Don't let anyone ever fucking tell you differently than that. No one gets this game and just keeps it forever without putting in hard work, you know, throughout the entire process, and adapting and adjusting and growing. So trading's never easy. That's what I'll say. People make it look easy, and it can be easy at times, but you have to get to that level. And then once you get to that level, you got to keep it. And the markets will always humble you, and the markets will always change and baffle you. So, and then you have to adapt and adjust and use the skills that got you to be successful in the first place to be successful again. You know, trading is fucking hard, guys. But it's also super rewarding. And mostly it's hard to learn, you know, the process. That's that initial learning curve, which anyone can do, takes a lot of work. It takes a lot of work. It takes a lot of work to have to do a little bit of work each day to be a trader. You know what I mean? And then if you really want to trade, you got to keep working really hard. So there's no, God, it's not easy. And anyone claiming it is, you know, this is the issue I have with like algorithms, the algorithm marketing and alert marketing and signal rooms. And I get it. They sell. That's why people do that, because most people are lazy. They're either lazy and they don't want to actually learn how, and they just want to be fed things that they can buy to try to make money off of. It's very naive. And it doesn't work most of the time. Or like me, I didn't want to be lazy. I really wanted to learn how to trade, but I also figured I could pad my account, you know, while I'm learning to trade. I could like copy Tim's trades or something like that. You know, it didn't work at all. And the truth is, once you realize like if trades are being alerted to hundreds, thousands of people, and then those people are acting upon those alerts and giving you volume, it's not a viable strategy to teach. That's my 2 cents. Okay. If every time I traded and there's just thousands of people chasing it and like a Atlas room or something like that, obviously they were just purely a pump room. But a lot of the other services that are alert services, it doesn't make sense from the most basic perspective that is a strategy that you would want to learn or learn from that person, that strategy. Okay. Because you are not alerting your trades when you are not getting abnormal amounts of volume when you buy a stock at all. You get zero help, right? So from the most basic perspective, you can't replicate that strategy, nor even come close, nor is it one that you should be replicating. Does that make sense? Let me know if that makes sense, everyone. That's the problem. Alert rooms and services where you're just getting texts, algorithms that claim you don't have to do anything. You don't have to all you have to do is trade this ticker like from the algorithm, and all our computer does all the work for you. That's meant to sucker in the same people that want to buy the alerts. Same thing. You're welcome, Mary. Hardest thing to do in trading is that I'm not cutting losses where I'm supposed to. That's a big problem, man. It's one I've struggled with very, very rarely. The first thing I did when I came into trading was cut losses quickly. That's the first rule I learned, and I've taken that to heart. That's ingrained in me, man. I had no problem cutting losses early. And because of that, I have no problem pulling the trigger when I know I'm protecting myself. You got to get down to the root cause of that. Most of the time, from my experience dealing with traders, it's fear, some sort of fear. Come on, trader therapy tomorrow, dude. We can talk. Literally talk to each other. Vitaly asks, is the old DVD still applicable? Are there any new changes? Yeah, a lot of new changes, man. A lot of new changes to the old strategies, a lot of new strategies, and then a huge shift, just many massive shifts. 1 second, I'm going to close this door. I guess they probably can't hear those people. Big, huge macro shifts in our space and in small cap. But everything's built upon that last guide, like the beginner stuff and kind of the terminology we use and some of the other stuff I don't rehash on because I didn't want to waste time. The new guide is essentially just an update to the old guide. Not just an update. There's obviously a ton of new stuff, but I'm not rehashing stuff from the old guide. In other words, I wanted it to be more of a 2-piece set than a 1-piece set, if that makes sense. I'm going to refill my coffee, and I'll be back in 2 minutes or 30 seconds. Yeah. Yeah, there are a ton of reasons people don't cut losses. I've heard them all. But it's all a variation of fear, you know. Um, Fear, sometimes pride, you know. A lot of new traders have this thing about being right that does not work for trading, you know. The being right or wrong thing does not work for trading, in terms of ego, right? George said, my problem is keeping an objective mind during my trading. Many times I get into this mindset where I trade what I think is going to happen and not reading the actual price action. Um, so what I try to do is rely on my trading process, and that means before the trade, right? And the development of conviction, like from the last guide, all of that stuff. Going through the fundamentals, going through the charts, and everything else that I need to do. Assessing the macro, assessing the markets. Have there been runners or not? All that great stuff, right? Put the pieces of the puzzle together. And then the objective part comes for me from creating a solid plan. Okay? Creating a solid plan, knowing exactly where and how I'm going to cut, knowing exactly where and how I'm going to take profits. Those are the two tools that I use to make sure that I am objectively trading. Now, price action is another thing. We get into a trade, maybe I have a plan, and maybe it's not going to according to plan. That's fine. I stop out if it doesn't work. But then at the end of the day, I get to go to my plans and say, were my plans good or bad? And objectively gauge why it didn't work, right? If I'm always afraid, if my mind's wandering, if I'm worried about how much money I owe, if I'm worried about my wife, what's she going to think, or my friends, or my mom, you know, whatever it is, if I'm worried about the bills, like all of those things can come in and take over. And then make you press buttons that you otherwise would not have pressed, right? So for me, that's a big deal. The plan, having a trade plan, and then sticking to said plan. 99% of the time I try to. When all that's under control, then I just trade and I get to be objective. Took me a really, really long time to remove as many emotions as I could. One at a time, man. You know, and that's what Trader Therapy with the group is about on Fridays, and the Wolf Pack is specifically that. Is to get to the root cause of why you're not cutting, okay? Because generally speaking, you pull back a few layers and there will be some sort of root cause there that you can address, just like anything psychologically. Big problem I have is trying to trade every day, looking for something that is not there. Every single person struggles with that, other than the people who struggle with the complete opposite. There are people who struggle to take trades. Much easier to work with someone who trades every day and then whittle away those bad trades than someone who doesn't trade, try to coax them into trading. I don't know if that makes sense. But I've dealt with both extremes. You know, there's one portion of people who are just deathly afraid to lose money. And there's another portion of people who are who can't stop themselves from trading. I was more in that second group. I'm a gunslinger and gambler, you know. I was talking about this yesterday during the camp. But those of you, obviously we weren't streaming yesterday, but at heart, I'm a degen gambler. Okay? I had a big gambling problem back in 2012, long time ago. Big gambling problem, guys, okay? And when I say big gambling problem, I mean at the casino gaming for 48 hours straight, you know? I'd walk out like at 11 a.m. whenever 2 days later was, and like a vampire, you know, seeing the sun for the first time, just like, ah. So I'm not going to get into the details. I've gotten into them in the past. I'm going to do a YouTube video all about it at some point. But yeah, you know, I'm self-excluded from Arizona casinos still. I can't walk in for one more year without it being considered trespassing. If I won like a jackpot or something, they'd donate to charity. Like, do I mostly go long stocks with lots of volume? Yes. And again, for those who are just joining, you can go back and check out the earlier portions of this, where I've kind of addressed that. There are only a few exceptions to that. One being sector momentum or sympathy plays. Those are the two. Anyways, yeah, I had a really bad gambling problem, guys. And so no one's more qualified to really talk about gambling versus trading than me, I feel. The process of getting good at trading cured the gambler in me. It didn't cure it. It tamed him. He's tamed. I'm not a degen gambler in the markets. I'm a disciplined, looking for max risk reward. I am trying to be the house, guys. That was the only issue I had in the casino. I could never be the house, right? You can be. You get to determine everything. How much you lose to how much you win. You know? All that good stuff once you get the game. Once you understand the game. Does trading and investing have better odds in the casino? That's not even close. You can't beat the house. You don't have good odds. Poker, is a game of skill. Also luck as well, but more skill there than a lot of the other games where you're playing against other players. But, my games are blackjack, and then ultimately slots, which are the worst. But I was counting cards and I was maximizing the probabilities and odds while I played blackjack. And still the casinos had better odds. So, yeah, I was, so quickly, it was, blackjack was my first game. I think I had just watched that movie 21. My wife was pregnant with our first kid and I was like, I got to make some more money. Okay. So I started playing blackjack and counting cards and actually having a decent success doing it. I was making a couple $100 extra a day at first, and then I'd have some $1,000 days and stuff. But ultimately, it ended up not being good. And one day I was down to $100. I went to a slot machine. I put it in the slot machine. It was $25 to press a button. It was one of those Wheel of Fortune machines. And so that was 4 pulls. The third pull, I won the jackpot, the $5,000 jackpot. They come count it out in your hand. I had 25 left in the machine, so I press a button again. And I won another $5,000 jackpot. So they're counting this cash out. They're counting the cash out in my hand. I'm like, you guys got to go get more. They checked the machine to make sure it wasn't broken. They went and got $5,000 more. And then I spent 2 weeks giving it all back, that $10,000. I had never seen $10,000 in my hand like that, So pretty dejecting. So you can understand when I got into trading. So after about 2 months of just sitting at slot machines and blackjacks all day, every day, my wife was like, we got to do something. And I'm like, yeah, we do. So I went to downtown Arizona and had them and added myself to the self-exclusion program, which they had. It was either 1 year, 5 years, 7 years, or 10 years. And I'm an extreme person. So I'm like, fuck it, let's do 10 years. I don't need to walk into a casino for at least 10 years. And that is done, I think, in like 6 months or something, maybe 8 or 9 months I can return. But it's funny. So I started trading and my wife was slightly concerned because she understood, she has always heard day trading's gambling and this and that. And I understood that too, but I also understood from reading couple things and just the little bit of research I was doing that. And then it just made sense to me mathematically that so I play blackjack. I'm going to put in $10 or $20 to make $20, right? When I'm trading, I can try to make $20 while risking 50 cents. Okay? I control my risk reward. I control that. And then the more the more I do this, the more I realize, yeah, you can be the house. You can have the odds stacked in your favor, probability, both the probability of trades working and you being profitable, but then the amount that you're risking to make however much you're making. It'd be like if I was playing blackjack and I put in $50 to win $50. You can't do that. You know what I mean? I put in 5, I lose 5. Unless you're playing some of the other gambly, like random games that they have at blackjack. But does that make sense? I can risk $10 and I can lose $5 if I want to just take it off losing $5 instead. It's way different. And then I can play setups where I know there are 60, 70, 80, 90% win rates at times. Right? Does that make sense to everyone? Arian S, do I like going long on a second day while risking a previous day support level, or do I prefer risking low a day or something? Do I disqualify any stocks after a certain pre-market percentage or volume? I like using previous day's highs if it's gapping up as a potential area of reversal on day 2 if it's going down. Okay. I'll use previous day's support as well on something like RXRX. And I'm looking for the best support level. And the best support level for me from a price action perspective is going to be the level that it bounced the most off of. Okay. So there are all sorts of little bounces and stuff throughout the day. But when I look at a ticker like RXRX, the main bounce is going to be that 10 level where it bounced all the way back towards 13. So you got a $3 bounce there. There's 11 as well here. And it kind of held on to this area for day 2. Okay. So this is an example of a day 2. It still did gap up, I believe. It was gapping up, right? Either way, day 2, this is an example of using support on day 2. Okay. Day 2 pull using day 1 support on a gap and crap that didn't quite reverse, obviously. The other scenario would have been, let's take like this day, for example. Okay. If this is day 1 and we're gapping up now day 2, potentially using 13 as risk if 13 can hold. Or 12. So I'm using now, I'm kind of switching the support and resistance around and using those levels still.
What's up? Stop trading? Yeah, we are. Oh, yeah. What's your name? Hola. What's your name? Roland. Roland? Yeah. Is it technical analysis training or what is it? No, we trade stocks. We just day trade stocks. You day trade stocks? Yep. Oh, okay. Do you have a company? Yeah, I'm actually live right now on YouTube and stuff too. Oh, you're live on YouTube. And these are students. You can chat with them. You're all cool here, right? Yeah, these are these are my students. You can chat. Okay. It's good to meet you, man. Same here.
What do I think about pre-market positions with the catalyst? If I can get an okay position, I prefer to let market shake. But when we have certain sectors running and stuff, you'll see me at my computers earlier looking for PRs. But as a general rule of thumb, I'm not trading too much pre-market or after hours unless I have edge doing that. Okay. I used to sit at my computer all day, every day. Literally all day, every day. I remember I missed a comment earlier. Someone asked about someone said, can I share my study habits? I know you used to study 23 hours a day. So I definitely didn't study 23 hours a day. But at my max, I was putting in 16, 17-hour days, 18-hour days sometimes, and getting, a few hours of sleep. All that was, it meant I traded. I was at pre-market by like 4 a.m. in Phoenix, 4:30 a.m. I would trade the open at 6:30 a.m. So that's 2 hours in the morning. I've been sitting at the markets. I would trade till 8:30. So that's 4 hours, and then I would go to work. My job, I was fortunate enough to be kind of mindless droning of a job, paperwork and stuff like that I could do in my sleep. So I would listen to podcasts or I would put YouTube videos on That's what I would do throughout the day. So I wouldn't spend a day of working unless I had to be on the phone or something where I was not also taking in information. After that, I would get in my car, I'd put on YouTube or put on video lessons, and I would drive around my block at my house multiple times till I could get through the video lesson, maybe 10 or 20 minutes. My wife would laugh because she'd be in the kitchen at our old house. It had like this window by the kitchen, and she would see me drive by multiple times. And eventually she's like, "What are you doing?" And I told her I'm like studying, you know. Then I'd spend an hour or two with my kids and eat and whatever. And I'd just sit behind the computer, more video lessons, trading tickers. I'd watch it again and again, and just whatever I could get my hands on. Started learning how to read SEC filings. So I started doing due diligence on companies. So there'd be full afternoons where I was trying to figure out what these companies do and finding the next Microsoft and stuff, which doesn't work either. But I was doing a lot of due diligence, which actually ended up paying off with some of my biggest trades ever on some biotechs that came from that period of time where I was doing a lot of due diligence on biotechs. And AUPH was the one. Love that ticker. But it's just a matter of being immersed, all right, and working smart. So if something's not, and the hard part when you don't know anything, man, about learning stock trading is the amount of information that is out there that is not relevant to what you need to accomplish what you're trying to accomplish. That's why I started teaching in the first place, because my God, I had to sift through so many things to get to a few truths that I believe to be true. But it was only by going through everything else that I was able to come to those conclusions. So what's my process of finding sympathy plays? Oh, that's an early one. And I think we've talked about that today. If you guys still need to know that, let me know. Chat with traders. I loved chat with traders. Something about Aaron Fifield's voice I liked a lot. It's very soothing. I should go on there one day. I would like to. Yeah, the boot camp in New York's right in Manhattan. It's like a stone's throw away from the New York Stock Exchange. So it's right in the financial district right there. I think that's what it's called. How long does a catalyst last, like FDA approval or earnings? Sometimes it doesn't do anything. Sometimes an FDA approval news can last for days, sometimes 2 days, sometimes 3 days. Sometimes stocks can go all year on FDA news if it's the right ticker and the right news. Keep in mind, when you see the words FDA approval or FDA news or earnings, a lot of times they still need cash and they're still going to be dumping. So I love biotechs when they're going. The question for me is, are biotechs alive and well and running? Okay. If biotechs are hot or we have hot markets, yeah, heck yeah. But then you also have to be careful, you know, like RXRX would be a great example of a ticker that maybe put out, say this was a FDA approval. Okay. Instead of the NVIDIA investment, which is also a good catalyst, but I can't tell you how many FDA approvals day ones look like this to me because they just gap too much. You have to understand there are people when FDA news comes out, all right, there are a lot of biotech traders out there. When FDA news comes out, it's phase 1, phase 2, phase 3. There are people who had been positioning themselves for that. My favorite site for biotechs is Biopharm Catalyst, I think it's called, which I've used for a long time. They have some decent date. They'll put some dates up and stuff. Let me see if I can find it. This is the site I've used for a long time for my biotech information, which is Biopharm Catalyst. They have more plans than they used to have now. They got a Discord too and all this stuff, like everyone. But you can go to the Catalyst calendar here, and it'll kind of give you the idea of when some of these are coming out. Oh, they've added earnings now and stuff too. But
need it now. I don't need it at the moment. Okay. Hey, do you know how to share the free?
Here we go. The FDA calendar and the PDUFA calendar. Oh, what? This used to be free. Sons of a bitches.
Invite you to it? Let me see. Yeah, sure.
Oh, so they've got this FDA calendar. So you can see here, they'll tell you what the phase is, what the drug is, what the price is, and then usually they'll give you a date for when the catalyst is supposed to come out. Okay.
Yeah. Yeah, yeah.
Just got to be careful. If you're trading biotechs into results and results are poor, you're screwed.
Okay, appreciate you.
Hey, we have to talk half volume. Yeah, you're good. It can't pick up too much, so we're fine. What is going to get biotechs moving finally, do I think? A biotech moving. That's all it takes, guys. Don't complicate it. For biotechs to move, we need a biotech to move. That's just how it works. We need one to squeeze really big. Yoshi asked if I'm going to upload this to YouTube. Sure. I will. No problem. So I look on the OTC market and then check if I buy or not. No, I don't use OTC markets anymore at all. That's from the old guide. So this is like an example of something that's definitely being updated for the new guide. But right now I use, let me see if I can. Right now I'm using dilution tracker. It's just much faster because I can just put the ticker in. I can just put the ticker in. Let's just look at this. And it'll give me all the information I need, right? How many warrants, where they are, where the exercise prices are, convertible notes, conversion prices. So this is what I use now instead of otcmarkets.com. Okay. Yes. Yeah, you want to get together? Yeah, that'd be cool. That'd be awesome. Thank you so much. Dilution tracker is awesome. I don't think it's too expensive. It's worth it for me for the time that it saves my process. Okay. Copy link. Paste. Mm. Okay. Come on. Okay. Let's see here. Do I have a watch list for the runners I play for shorting? No. And I don't short often. I'm going to start shorting a little bit more at some point, but you guys good? We're going to move on to some other important stuff here in a second. Where are you going? Oh, you're going to grab it? Oh, okay. Awesome. Thank you, guys. Did I watch Trading Tickers 2? I did. Only watched it once. I watched Trading Tickers 1 so many times. I love Tim Grittani. He's like my Jesus. If I was Christian. No, he's yeah, the period when my trading started to really change is when I started hearing his voice in my head during my trading because I had watched Trading Ticker so many times. I liken it to music, you know, and like learning an instrument. It's very similar to like when I was teaching myself the guitar. You know, I learned by just learning people's songs. So at first I was pretty much Jack Johnson and Bob Marley because that's like what I learned, right? Um, and because of that, anytime I played a song, it kind of sounded like Jack Johnson, you know, and I learned enough from enough people. And once I played enough, eventually I found my own like voice as a guitarist, you know. Um, the same goes for trading. It was just nice to have not this chaotic voice in my own head. I'd have Tim Grattani's voice in my head, you know, and slowly over time, it was replaced with my own thoughts and ideas. I don't know if that makes sense to anyone, but there was this gradual shift from, okay, my ideas suck. Let's work with some better ideas to form my own better ideas, if that makes sense. Same thing happened with the guitar. Like when I started writing songs for the first time, they just felt very copycatty to me, to like the other styles other people I had listened to. But after a while, you know, and writing enough, it just became my own. So yes, I've watched Trading Tickers, and he mentions me in the second one, and I just my pants. I don't know if I could say that on YouTube, but just telling you the facts, guys. All right, let's check out a couple of these. PRFX is still chilling. You know, it's just funny because Trading Tickers was like my everything, the first one. So when he mentions me in the second one, just imagine that, you know, it was just the kind of the craziest thing to me. And it was so cool. Damn it. What about Ducks? I love Ducks, man. He's a beast. Now, trying to learn what he does and trying to trade like Ducks is like impossible in my opinion. He's got his own special set of data that he uses, and he trades like 5 times a year and has the bankroll to make like $10 million every time he places a trade. So it's very different, man. You know, it's a very different. And then he's 100% pure short seller, that guy. So short selling's a different game altogether. You know, it's much more so. And I'm not saying you have to have big capital to short. You don't have to, you know, but it helps. It helps to be able to withstand some of the moves and stuff like that. And then, yeah, he plays a different game. But I have a lot of respect for him, and he's so nice. Just a nice dude too. I do a mean Ducks impression, y'all. I'm not doing it for YouTube though. You have to be in the Wolfpack to hear the Ducks impression. Unfortunately, sorry guys. Hey, that's my Tim impression. Hey, Tim Sykes here. Hey. Yeah, Sykes has a billion videos. That is the issue, and they're just very sporadic. You know, I watched all of them, so I know. But the lesson stuff is good. You know, when he's talking about the trading. Nope, can't do it. Got to join Wolfpack if you want to hear Ducks. Sorry, y'all. That's not a sales ploy. It's just that's business. I don't want it. I'll ask Ducks for permission, and then if I do another YouTube live stream, I'll do an impression of Ducks. Is Nicola a good entry here? Nicola's gone to me. Like, and something you guys have to understand about how I trade is once they've, oh, it's pulling. I see. I thought it was kept going. No, I mean, again, breakout already occurred yesterday. So yeah, I mean, I suppose from a swing standpoint, it's possible. It's possible if we get kind of a pullback to these 190s, 180s, and it looks like it's holding and consolidating or something. I wouldn't want to see it necessarily get all the way back there, especially if I was playing the breakout in the first place. But I mean, that was a pretty big breakout to 3 and a little bit of resistance on the daily. Not anything too crazy, but it's not a pattern I'm personally playing, like just a pullback here after it's already gone parabolic. My game is usually be in the parabolic, like be early, okay? My game is always when I get to a chart and it's gone from 50 cents to 3, I should have done my job somewhere within that period of time. I don't know if that makes sense to you. And the fact that it's doing blow off top volume yesterday on the breakout. And then again today, I mean, it gapped up, big, really sweet move, but possibly a bounce at some point, if we get in and just look at some of these levels from the last few days. Okay. 2, we got 2 underneath. That should kind of act as some support, 2 and 175. But I'm not a big fan of Nicola personally, just because of what happened with them a few years ago and kind of the scammy nature of the company. And, now that's not to say they can't turn it around or something, but I know back in the day they were just really scammy. So, and that's not, I mean, most penny stocks have a certain level of scamminess to them or whatever else it is. So it'll bounce at some point. It's bouncing right now. It's just not for me, I just don't see edge there for me. I don't see. The only plan would be if like a $1.50 or $1.75 hold for a bounce. That's all. Faisal asks what my meat and potato pattern I have that I hunt for. Bread and butter, you mean? Meat and potato works. I don't always have potatoes with my meat, but anyways, gap and crap reversal, man, which it hasn't been really fruitful for a couple months. So, and I talk about it a bit in the last YouTube video I dropped, and then, but essentially it's a morning gapper that pulls in the morning and allows me to find extreme risk reward if I can just get it back to high a day. I got you, Tanner. Thanks, buddy. All right. Got about 2.5 hours left to market open. Is there a pre-market gap percentage or pre-market volume that disqualifies stocks from trading them? Is there a pre-market gap percentage I prefer for day 1 and or day 2? The sweet spot for me on these gaps is like 20 to 50%. you know, 75% even 100%. I don't mind. But, you know, kind of 25 to 50% gaps, significant enough gaps. And then when I'm looking at volume, I just want to know that it's going to be liquid enough for me to enter and exit. Okay. So at the end of the day, I'm going to look at the relative volume. Okay. I'm going to look at the volume that it's been trading and what does this pre-market volume look like? Like I said, if a stock trades 5,000 shares a day and the max a stock has ever traded is like 1 million and they're doing 3 million shares pre-market, you got me? Then I know that there's something going on there that they're already trading all-time volume pre-market. All right. I already know that it's in play in some respect, whether it's going to be an all-day fader or something else that takes other work. But from simply a pre-market volume perspective, that's what I'm looking for. All right. It's got to be enough to get to my scan. So it's got to do at least $50,000 volume, which is not much. I take plenty of positions all the time with $50,000 volume myself. So you have to understand it's still not that much volume. But it's just for pre-market for me to see what starts popping up, what starts trading volume. Because in order for stocks to trade a lot of volume, first they have to trade what? Small volume, right? And that was kind of always my thesis. Like I'd like to watch it on small volume. And then it will make it much easier for me to figure out the ones that volume will come in, which has been the case over time. How do I track or journal trades, or do I? I used to handwrite the actual journal portions of my trades. I still will when I'm struggling. If I'm struggling, I have very specific things I'll fall back into, like journaling, like handwriting my journals. But the rest of the time, it's just a spreadsheet. The whole purpose of journaling and spreadsheets for me, the journaling portion was always for my psychology. All right. And to maybe pick up little gems that I'm realizing about myself over time. The journaling included obviously the ticker, what the trade synopsis was. I would just do a quick summary of the trade, but the important part was that I wanted to focus on when journaling was my mentality. All right. So the journaling portion would be a small synopsis of the trade. And then did I give into FOMO? You know, did I sell too soon? Did I stick to my plan and try to dig into like the different psychological problems that I was having at the time? That's what that part was for. The data part, which was time of day, day of the week, the ticker, the float, the percent gain, all that good stuff. Okay, daily range, dollar volume, just some of the basic metrics. The strategy name, that was really big for me. If I didn't have a name for the strategy, then I'm trading something random, right? Now, if it's something random that I've now traded the same thing twice or 3 times and I'm going through my data and I'm like, oh, I've done that 2 or 3 times now. Now you're looking at a pattern, all right? That's how I've discovered patterns over time, by trading random stuff. And then by finding out what patterns I like and not like, okay? First, it started by trading other people's stuff. Didn't work great for me. Then I got to Grottani and realized, okay, I don't want to buy where he's shorting. I didn't just start short selling because it's funny because my hero is Tim Grottani and I'm a long, and I never really switched to short selling exclusively. But what I did do was realize, wow, this is where these amazing people like Tim Grottani short sell. That's where I'm buying. Okay, I need to get way away from that, which meant what? Finding somewhere different to buy. If I'm going to sell there, then I have to buy it lower, obviously, to make money. That led me on the dip buying venture and it led me to where I am today, to where I almost exclusively dip buy. So that was really big, you know. Thanks, Faisal. I appreciate it, dude. Anyways, and then at a certain point, you go back through your body of work and you can see what time of day you suck trading. All right. You can see what days of the week you suck trading. Right. You can see which strategies you make money on. You can see which strategies are purely losers, and you can see what happens when you're trading random stuff. Because if I didn't have a strategy and I couldn't figure out a name for it, I would just put random and then give it a little description just in case it did appear again. Is volume more clear on the 5 minute? Everything's more clear on the 5 minute. Outside of the individual minutia of the minute price action, right? So that's the idea. Everything becomes clearer on bigger time frames. That's why the daily chart is so important to me, especially if it's been running. It's going to tell you most of the story, right? Short selling's great, man. It's just you got to, and I think everyone needs to learn about it and try shorting. Just got to be careful because if it can all be over. This week, for example, okay? You could be shorting this innocently into like the 25 resistance or the 40 resistance and blow up your account in one day, in 30 minutes, right? The one danger of short selling, if you don't know what you're doing, is that 1, 2, and 3 hours, this stock went from 15 to 80. Feel me? 15 to 80. That's a lot. So if you're shorting any, it could be a very minimal amount, you know, in a world of hurt. Vitali, that's fucking hilarious. You're not alone, buddy. I don't know what this little guy is, but small cap guys, small cap longs, riddled with dangers. Riddled with dangers. That's why everyone say they suck. But people just say they suck without actually understanding the dangers. And when you actually understand the dangers, it actually provides you with advantages. Like in small cap that you don't get trading large cap stocks against hedge funds. Okay. And against literally just computers all day, which we got algos and computers in small cap now too, but it's different, I believe. It's still a different ball game. Yep. T12s, offerings, you know, so many things, y'all. Best question of the day, my friend Tatty Boy said, what have I made of Arsenal's transfers this summer? I think we might win the league next year. I think it's good business so far. Declan Rice is awesome. When we played them last, you know, he's always been good, but the last time we played them, I was like really, really impressed with him. That cat we signed in defense is sick. I was watching him for Ajax and, you know, last year and the year before, whatever, really good. I forget what his name is. Julian something. And then Kai Havertz was surprising to me. I didn't realize he was 6'4", dude. Did you know he's 6'4" and one of the best headers in the league? He'll be really good for us, I think. I trust Arteta. That's all I know. He's given us no reason to not trust his vision, so I trust Arteta. That's all I'll say about that. Best hair in the league. Best looking manager in the league. I know Havertz was garbage, but he was garbage because you guys were garbage. He was your leading scorer last year. Did you know that? Only 7. Watch him be amazing for us. You guys are in shambles right now, bro. I mean, it should be rock bottom, which is good because there's only up, but you guys will be fine. You have enough money and stuff. You'll be fine. Just really surprising. It happens. Look at Arsenal. We sucked so bad 2 years ago. Like, so bad. I believe you. I wasn't super excited when I saw that we signed Kai Havertz, just because I saw what he did for you guys last year or didn't do, and I wasn't too excited. But like I said, I trust Arteta. I think he knows what he's doing, so I'm gonna give him benefit of the doubt here. Messi in Miami. I think it's great for the MLS. Yeah, you got Poch now. Poch is good. It's good for the MLS. I'm a CR9 man myself. CR7, I'm sorry. Actually, I'm a C9 guy. I'm a R9. The original Ronaldo was like the shit. But when it comes to Cristiano v Messi, I've always kind of taken the Cristiano route just because he proved it in the Prem and at Real Madrid, you know. I don't know. Plus Messi did steroids. That was my other issue. My favorite international team besides the US is France. It has been. Thierry is my all-time favorite player, and followed by Zinedine Zidane. So, all right, we've gotten away from trading, but it's okay. It's important sometimes. All right, let's talk trading now. Enough about the beautiful game. I am planning on coming to London this year for a boot camp this next season. So I may do a little Europe tour or something. Yeah, Henri played for Arsenal. Yeah, back in that's when I was back when we were really good. Can I please go through the process of a long-term swing like Ion Q when I think it's a long-term swing? What's my stop loss and profit taking? Yeah, it's just and it's having kind of a crappy day, but it's been doing this. Kind of a weekday going on. The idea is that Nvidia was going nuts, okay, and all the AI stuff and the computing power that is now being required for some of the things that, you know, the human race is now able to do with technology. The computing power that is going to be needed is growing greater and greater and greater, like it always has. If you look at computers from the inception of them until today, it is fucking crazy, you know? It is fucking crazy. So, and we've had to create new computers to keep up with the new demand for the technology and everything that's all been growing together. So now we got quantum computers, quantum computing, and that's all this is. It's a quantum computing play. AI's been going all year. This just trades volume, you know? It doesn't, so what I do when I'm looking for on swing trades are some sort of macro, okay? Some sort of macro that will give it legs. And the only way I know if it has legs is if there's consistent volume being traded. That's how I know there's consistent action kind of going through some of the smaller cap stocks. Then it's a matter of finding daily support or a good level to use, okay? So it's the same system that I use on a minute chart that I use on a daily chart to find a swing. I'm going to find some support. In this case, the level I was trying to use was this 875 to 9 level, 850 to 9, I'd say, as that support. I never really had troubles in this position. Okay. So that's the idea. When I'm looking to swing something, I'm looking for support pretty much. It's no different than than my intraday charts. I'm looking to find areas where even if it doesn't work and this doesn't break out, there's a potential breakout after consolidating. But I'm also still able to take a couple bucks a share if it doesn't work and get stuffed into highs, right? So for me, the swing trading particularly is going to be based off of a good macro and or a really good catalyst. Okay. What's my favorite catalyst for low floats? Whatever is moving stocks at the moment. But generally speaking, higher price, big money deals, any influx of cash for a company. At times it can be associations with like Amazon or your Apples or bigger companies. You'll see those move stocks. Biotech is all driven by phase 1, phase 2, phase 3 and clinical trial news and FDA news. Okay. Phase 1, then phase 2, then phase 3, phase 2B or whatever they have to do. Love when biotechs are running because you'll get a lot of catalysts that sound really, really good. Like phase 2 cancer drug, cured tumors, this and that, like cancer for sorry, one sec. So yeah, biotechs, those are generally the PRs, but you have to always beware. They need money all the time. So when they have phase 1 news, they got to fund phase 2, and they only fund phase 2 by selling new shares to you most of the time by doing an offering. So in essence, the good news is also their pump and their opportunity to bring in volume to dish shares out to you, because without volume, how do they dump shares? And if they can't dump shares, then how do they put money in their pockets? They can't. Okay, so that's a specific biotech thing. So biotech catalysts, I love. It can make stocks run really big, but I'm also aware that at the end of the day, they might do an offering or tomorrow morning or whatever else it may be. And that's why I have to look at the fundamentals and make sure that maybe they have some cash or that they don't need too much cash. And if they do, or if they're too dilutive, then I change the plan a little bit or I don't trade it. You know what I mean? Most potential of any of these right now would be, I guess, PRFX for an afternoon squeeze, only because it's holding up decently. And then, so my only plan, because I wouldn't really want to be chasing or buying PRFX up here, would be BDRX if PFRX really rips. Maybe trying to scalp and a decent scalp, so a nice decent scalp on something like BDRX. Which was trying to move in simp earlier today, but has gotten stuff since then. But if we see PRFX rip, you'll probably see BDRX at least push to high a day. Hell yeah, I hope to meet you, Tatty boy. We'll go to a game when I'm there. I've gotten a lot of requests to get out to London, or just Europe in general, so. This is a scans for the scanner, and then it just Schwab's Street Smart Edge, which is okay. It's nothing spectacular. But the charts, I like the charts. Charts work fine. I use them. I use TradingView for charting. I use scans for my scanners. I use dilution tracker for fundamentals. And to track reverse splits and stuff like that. Watch lists. I use scans for my news feed. My news feed is also scans. It seems to be pretty good and fast. I know there are other avenues. Sorry, I had moved the mic away for a second. Nice. Go ahead, grab some pizza. We'll finish when you guys get back.
Yeah, the ones that they have available to trade, I do take that into consideration and fit that. Shouldn't be any different, but I mean, you should be able to at least see it. It doesn't. It's not like a big hindrance. And the main one that I look at is the market cap and the audience, like find the stock. But let's just say that it wants to and it does. Did it work? Did it populate?
Okay. It's Street Smart Edge, buddy. Sorry if you couldn't hear me. It's Schwab's Street Smart Edge. I use them for I like their charts. They're fine. This is scans. If you guys couldn't hear me before. The past 5-minute percentage, that's because I'm on scans. It's just one of the filters. I just go to filter. I'm sorry. I just right click here. I can insert any of these: intraday change, percent change, 5, 10, 20, 30 minutes, dollar change as well, multi-day change, which sometimes I'll put this in as well, just to see, like, if I want to go to percent change 5-day and see what's up the most over the last 5 days kind of idea, you know? So, yeah. Scans, SCANZ. And if you're in my Discord, I think at the top we've got a link to it under helpful tools. Yeah, scans here. Trading View, these are the tools I use. Dilution tracker. And if you're not in, we got the free chat here for my free people. Where are you at? We got free chat here. When you guys join boot camps, you'll get a link to your individual Discord chat for the boot camp groups. That's just for the people in the boot camps. So right now we're doing, just for the stream people, if you're someone who's joining the stream, we're doing discount for you guys. It should be in the description below the YouTube video, below the stream. And we're doing some deals, I think, on yearly and lifetime as well. The lifetime people get one-on-one calls with me whenever they want. They come to all these boot camps for free. If you're an alpha member, you get big discounts to the boot camps as well. So if you're that's if you're just monthly, but if you're lifetime, the boot camps are free. Yeah, just a lot of stuff that we're doing. RXRX making a move. Why do I not use STT? I just haven't, man. Back in the day when I started, when I was buying a scanner and stuff like that, I was trading from a shitty laptop, and it just wouldn't work. It just wouldn't work for me. It would crash and use up too much of my CPU. So that was kind of the reason. Now I don't know if I don't know about the crashing. I think it's gotten a lot better according to what I've heard, but it's an aesthetic thing now at this point. Like, this is all I want to see when I trade is this scan, because it's what I've looked at for so long and I've not missed anything from it. When I was trying to use stocks to trade, there were tickers that I would just, whether it was the aesthetics of how it looked or something, or whether it wouldn't actually even come up on the scan. That was kind of the issue. I love scans, man. It just says I've not missed anything. There's nothing where a stock runs that day and I you know, and I didn't see it early. So I hope that makes sense. I don't know. Is the stocks to trade working for you guys well now? Yeah, I don't use it though. I don't use like Oracle. I don't use any algorithmic indicators. I don't use indicators outside of VWAP, you know, which isn't up on this chart right now, but and volume's not either. This might be the wrong layout. I don't know why there's no volume. Oh, it's because it's a new. You know, that's what my charts look like, man. And I've tried every indicator under the sun. I even restarted trying to use indicators about 8 months ago, some different indicators again. But mainly just anchored VWAP was kind of the only thing I was messing with. I was looking at some of these algorithmic indicators and stuff, and it's just garbage, man. Okay. If you need an algorithm to tell you, you shouldn't be trading because that algorithm not going to tell you shit. Nothing useful, you know? I'm sure there are people who have algorithms and indicators that do work for them and their strategies and they do certain things, but for me, it doesn't. And for small cap and stocks that are moving super volatile, every single indicator is too slow. I'll tell you when a stock's oversold before RSI will tell you. I can fucking tell you, yeah, it's just went from 12 to 5 in the last 2 minutes. It's oversold, and RSI will still be, you know, not give you the indication that it's oversold yet. So by the time RSI is telling me what it's supposed to do, and then it crosses like the MACD, that small cap trade's done. It's gone. You're chasing a breakout or something, right? So that's the idea. Street Smart Edge. But my favorite charting platform, I just don't have it up right now, is TradingView. Has anyone tried StockCraft? Is that still a thing? Dux's, I think Dux's scanner. I'll take a piece. Yeah, I'll take a slice, please.
Sausage, cheese.
Sausage is good. Thanks. Big sausage pizza. All right. From a trading perspective, I'm pretty hands off at the moment. I mean, the only thing I'm looking at is maybe Freak. Might get a little freaky. If PRFX can, for some reason, spike hard, you know, and have a nice Friday afternoon squeeze. Yeah, he's grabbing me one. Thank you. Only thing I'm looking for is PRFX to squeeze, and then I could buy some BDRX possibly, but I'm okay also just erring to the side of letting this week end, not doing anything stupid, and coming back next week refreshed. It's my first week back. I mentioned it earlier, and I protect myself. I try not to do anything stupid when I haven't been trading for a month, especially because process for me is so dictated by last week and last month, and I wasn't getting to watch price action for a long time. So that's And of course, the markets give me like the craziest action to try to, that's the kind of action where I do need to be sharp to be able to take advantage of like the hour spikes that we've had. Thank you, bro. Awesome. Perfect. Thanks, man. Yeah. So for those who haven't heard the story or want to hear it, Father's Day, on Father's Day night, we went to dinner. My family, me, my 4 kids, my wife, my brother and his wife, and my parents. We went to Texas Roadhouse in Phoenix because my brother, who passed away in 2019, that was his favorite restaurant, right? So we went there. Originally, we weren't going to have dinner that night. My wife and I were going to go on a date to our favorite restaurant instead. But it was really hot out. We couldn't get to we didn't want to go to the pool we were going to go to. It was too hot for the kids, even at the pool, it felt like. So instead we checked into Great Wolf Lodge. All right. I don't know if you guys know that place, but it's like a indoor kind of amusement park hotel thing for kids. It's got like slides and stuff, water park. So we stayed there, and because we stayed there, we decided let's do a family dinner. So we went to Texas Roadhouse, and dinner was fine. At the end of the dinner, I'd take my son out because he was being a little dickhead. My youngest son, he was getting tired. So I took him to the front. We were waiting like too long, so I went back to the back of the restaurant where they were, and my wife had been running out to get me. She's like, something happened. Your dad's on the ground. So he was sitting on the ground. There was a group around him. They had moved the tables, and he grabbed my hand. He was still alive. I was like, Dad, what's wrong? He managed to say Roland, and then he passed away. Essentially, I didn't know at the time. Right as the ambulance and fire truck, because my wife called them immediately. Thank God. We're pulling into the restaurant. So I'm like, Dad, the ambulance is here. And then he died pretty much. So the ambulance came, they threw us out of the way. Literally the second that happened, within 15 seconds, 10 seconds, there were EMTs there trying to do CPR. Then they put this compression machine on him and took him to the hospital because they couldn't get a pulse. He had no pulse for 40 minutes, and they told us that he was gone, essentially. After about 20 minutes, like, there's no pulse, and we're going to keep trying for 20 more minutes, they said. And a pulse came back. So 20 minutes later, they're like, we got a pulse, but it's been 40 minutes, so there's no brain activity. And there's no chance of meaningful life for him. And she was giving us this whole basically speech that, he's not gonna pull through. And then she got a text. She's like, I'm sorry, I gotta go. She ran out, and she came back. She goes, well, he's apparently moving like his limb or something like that, meaningfully enough for them to put this heart thing in for him. So they did that. And then after like 6 hours, they said they had to bring him back 10 times on the operating table over the span of 4 hours. And she doesn't want to do it anymore. And there's a 99% chance he's gone, and there's no brain activity again, and to prepare your goodbyes. So I go to the bathroom, like crying, trying to figure out what to say to my dad. And we walk in, and my mom, they've been together 50 years. My mom goes, she's called him Toots my whole life. I've never heard him say his name or anything else other than Toots. She says Toots. And he, swear to God, it was like the craziest. And he looked over at us. It was fucking crazy. And then it was total mayhem. There's like 10 doctors, 20 doctors and nurses came in, and they kicked us out again. And he's been alive since then. His kidneys had failed. His ribs were broken and lacerated his liver. But then they fixed his liver. He had to do 1 round of dialysis for his kidneys, and then his kidneys started responding. They did have to put a he got a tracheotomy a week ago because he couldn't come off the ventilator. And the main issue is he was having trouble coming off the sedatives and the drugs he was on. And he was just really uncomfortable with the breathing tube and stuff like that. So he got a trach, and now he's in a secondary care. So he was in ICU there for 3 weeks, and now he's in a secondary care hospital. He's down to just a little bit of drugs. He still can't talk or walk or do anything, but he understands my mom. He He understood who I was. Like, the doctor came in twice, the heart doctor, and gave us that 99% speech twice. The second time she said it, my brother was like, well, what's the 1%? And she's like, God. She goes, I'm not God. That's what she said. It was crazy, you know? So I just got the goosebumps, but he's here. He can understand us. It's a blessing. I got an opportunity to say things that I wanted to, and I'll have more opportunities to do that. So, if anything, it's brought my, I don't know the word I want to use, but a new sense of life, man. Life can just be gone anytime, and the people we love can just be gone. And I could be gone anytime, so I'm just going to work as hard as I fucking can and enjoy life, you know? Don't be afraid of anything. We all fucking die anyways. And go out and go get yours. That's my plan right now. I'm going to fucking go get it like no one's ever seen. I'm going to outwork everyone around me. And that's my goal right now, both as a trader and a teacher and a businessman and as a father and husband and son, is to just kind of maximize my time here on earth, you know? I've just been thinking a lot. I've just been in the hospital thinking, and that's where I'm at, you know? I'm taking it as a miracle and a blessing that he's here, and I got to see that miracle in my life. I want him to talk. I want to hear what he has to say about. I have a feeling he saw my little brother there. So, anyways. It was a crazy month, guys. Yeah, guys, you know? It's the ups and downs of life. I've had a lot of them. So, social media is funny because it just looks awesome. Like everyone just is so happy. And when I'm sure pretty much anyone, you peel back layers and everyone's struggling, have their own struggles. So I try not to judge too much, you know? Yeah, I lost my little brother, the closest person in my life. He was 2 years younger than me, in 2019 to fentanyl. He overdosed on fentanyl in 2019. I've still not recovered from that. I still cry weekly. There are a lot of music I can't listen to. Arsenal. I was a Manchester United fan, y'all, in 1998. In 1998, 99, I was a United fan. I loved Ruud van Nistelrooy. He was like kind of my idol then. And then my little brother was the one who just convinced me on the Gunners and a lot of things, man, you know? So, yeah. I've been homeless. I'm going to do a YouTube video on it eventually. On my kind of struggles after my soccer career, between soccer and trading, I was lost. And I got hooked on opiates because surgeries and stuff. So I was mentioning yesterday to my pack people, like I've lived behind a Walmart, behind a dumpster for several days, you know, squatting in an apartment, hopelessly hooked on heroin, living in a halfway house for a year, helping dudes, recovering my life. That, you know, that's back then. And life every couple of years just seems to throw, or sometimes more often than not, just throw a lot of challenges at us. And for me, from a personal perspective, man, yeah, since 2019, And I know it's not just me. It's felt like me. It felt like my brother died at the end of 2019 and the whole fucking world went to shit. To me, it felt like because he died, you know. COVID hit just shortly after that, and then just a chain of shitty events. So it's all good. It's all good. It's all good. But I was a forward. I was a forward. Forward in men's league now I play center mid. Oh, I agree, Jennifer. And thank you, Arian, man. Yeah, those anyone who struggled with addiction before, and then specifically like opiates and stuff like that, it's you just have no clue, man. You have no clue, you know, what happens to your life and the I heard the greatest so Andrew Huberman, who I really love. If you haven't heard of him, I would definitely recommend checking out Andrew Huberman. But he talks about addiction as the progressive narrowing of the things that bring you pleasure in life. And a happy life is actually the opposite. It's the progressive broadening of the things that bring you happiness and pleasure, which I loved the idea of that. And it is very true. But yeah, not, you know what? I'm lucky that I was dealing with my drug problems in the late kind of 2009, 2010 type times. I'm sorry, 2012 is when I was checked into rehab too. Or 2000, yeah, 2010, 2012, sorry. Um, there was no fentanyl back then. There was no fentanyl back then, other than, I mean, maybe there was, but it wasn't everywhere. You can't do coke these days without testing it. I have any of my friends from back in the day who still do cocaine. I'm like, just make sure that you have a test and you're testing every single batch of coke you get, because it's not a joke. One of my best, one of my roommates from back in the day died. He was a realtor in San Diego, and he went to do some coke with another realtor buddy, prominent realtors too, and they both just immediately died. This was years ago, but it's scary. But all those experiences, man, you know, all the shitty, and we were talking about this yesterday, all those experiences have helped me in my trading. I know for a fact have helped me, because I had to do so much work on myself as a person to get out of addiction. That those same processes that I use to try to help what we call in AA your mental defects, right? I have used that same idea with my mental trading defects. You know, it's kind of crazy, but it's true. Are you driving back today, Dennis?
Yeah, I'm driving. 6 hours? 6 hours if I drive straight to Austin. Oh wow. I'm gonna see if I can find.
It's a 35.
Yeah, 35. That takes me like 3. 4. I don't be there shopping and shit.
All right. Let me refill my coffee real quick and we'll jam.
Yeah, and even then,
For me, it's on 35. If I go down 35, it's rerouting me like around 35. Is that really what it is? 16 charts?
Why don't you go 281? I go on 281.
The bottom's the daily,
So
the top's
281.
the 5 minute.
So 281,
You're
all the
saying,
way up.
This is like my global setup.
That's how cool.
And then I'm like, I can go individual stuff. But yeah, I put like some charts up.
I can see it. So organized. Picture it.
I almost.
I'm wondering how long that would take. I mean,
The problem was like trying to
I
get
love
everything
seeing
straight
everyone's,
on. Yes, I totally get it.
I love seeing everyone's setup.
6 hours to get
Take
there.
it almost
It's
easy, but I
6
can't
hours
say
out,
yes.
and it's not even traffic rush hour
Yeah,
yet.
they do have.
Yeah.
Stand.
Possibly take 281. I would have to go to Fort Worth.
When are you leaving, Dennis?
But that's,
When are you leaving?
within the next 20 minutes.
Oh, we gotta do,
Go.
okay,
Like this.
I'm sorry?
we gotta do a group pick.
Oh. If we
Or
get,
just get a single photo of him now and we'll just paste his head in.
No, I need him, I already have plans for him, what he's gonna do and everything. No,
Paste his head.
I gotta do his hair and makeup in like a second.
Oh my
No.
goodness. And then just do
No, Dennis, we need Dennis for this. You're supposed to be my assistant. That's very nice.
All right. All right, guys.
Here, you just go.
Let's continue the camp. All right, we got 2 hours left in the markets, guys. So we're gonna do a live trader therapy real fast with the crew. All right, let me grab this. Let me turn this mic on so they can hear your
Dennis is leaving in 20 minutes, I'm gonna do it.
Okay, cool.
Fair picture.
Okay, sweet. We'll do that.
Don't worry, we got it under control.
Perfect. I trust you.
I already know, you're just gonna show up, we're gonna
Okay.
plan everybody, we're just gonna show
I
up.
got it.
Spots out.
He's my assistant, got it done.
Alright. Stand.
Yeah.
Oh, we're gonna make it, oh, it's 2:30.
What? We gotta make him go
Oh,
viral.
that's the.
That's my plan.
Okay.
I think I go all the way here, this spot, those four, and then go this way. I get to 281 and go down this way. I think I'll do that. If I'm gonna spend 6 hours in traffic, it might as well be scenic. Thanks.
Okay. Let me make sure that the video.
$0.37, 19 cents.
All right, y'all. All right, we're gonna do quick traders. Who has to leave in 20 minutes?
Dennis.
Oh. All right.
We can make it 30.
Okay, cool. So we're gonna do live trader therapy. I'll start it off just like we do every Friday. Basically, for those who are tuning in on the stream, every Friday we get together, the Wolfpack, and I get up on stage, and basically it's an opportunity for the people I mentor to get up in front of the whole group and tell the whole group what they're struggling with psychologically. Okay. Something cathartic about it, about coming out with their problems to other people. We trade by ourselves every single day. We're just alone to our thoughts and the habits that have formed our trading patterns. Okay. And because of that, it's really easy to have thoughts and just fleeting thoughts on what you're supposed to do. But I have found that by vocalizing it in front of people, it gives you a sense of accountability and relief when you find out that you're not the only one who's dealing with this right now. In fact, you're one of probably 1/3 of the group right now who's dealing with the same thing. And then by you getting up and kind of going through the problems, and then the two of us working it out together, other people are getting ideas on how to deal with their problems, and that you don't necessarily have to come up and talk to me. So that's the beautiful part. That's why I love when you guys do get up and talk to me, man. Oh, we got an echo. I got it. That should be better. Yeah. Okay. Anyways, it's an opportunity to get up and do that, to kind of come clean with everyone, and or maybe get an idea on how to deal with what your biggest struggles are psychologically. And most of the time, when you can overcome those psychological issues, your trading changes. The trading changes because everything's controlled by our mind, and we're the ones pressing buttons or not pressing buttons. So the goal of these Friday sessions is to get to root causes, of what our struggles have been. All right. I'll go ahead and start. Obviously, I've got a bag of issues right now, and what happens in our personal lives can and oftentimes will directly reflect in our trading. And I'm sure you've all experienced that, So we've gotten into childhood issues for some people, and getting into fears of, different insecurities about money built on childhood issues straight up. And some of those fears can go that deep. So that's the whole point of it, is like, let's try to get to the root psychological issues for why we're making mistakes when we know better. That's the key. If we already know these things, but we're still doing the same shit every day, that's because it's a habitual thing that we're not thinking about and taking action to correct. Okay. For me, the main issue, and I already knew it would be, because this happens every time I have to take a break, specifically for an emergent situation like this, it works two ways. For me, psychologically, like, I could not look at charts for about 2.5 weeks. They made me sick. I didn't even want to think about a stock or anything, I had a bag of swings that I had, if you guys remember, going into what happened with my dad. And the first day after, I kind of took most of them off because I didn't want to think about them. So after coming back, what I generally struggle with, and I did this week a bit, I did try RXRX purposely on the day one, which didn't work, but to force myself to not be too complacent since I've been not trading. But a weird place. I'm in a place where the trading, I just want to be in front of my charts to get away from everything that's been happening. Everything's kind of stabilized in terms of the emergency situation. So right now it's about getting my feels and stuff like that. And I was presented with a really crazy week of action. Okay. I didn't make any money this week. My swings made some money this week, but on specific day trades, I had 2 day trades this week, both on RXRX yesterday, both small losses. So I'll forgive myself for anything that happened this week, for my lack of trading and stuff like that. But it's really, for me, just about getting back on the ball next week and trying to dive into the work and the trading to the best of my ability. I don't think there's anything really psychologically that's going to throw me off. I'm not thinking about anything while I'm watching the charts, so I'm in a good place. If you're someone who's like, has all these thoughts outside of your charts and process and risk reward and catalyst, and you're not going through that every day, and it's like all the stuff at home and the money issues and all that, it's going to really make it very, very difficult, which we always talk about. So that's all for me. I'm in a lull. I already know. I don't really need too many answers to what's going on. I actually have been seeing things pretty damn well this week. I've been spotting things quickly. from a macro perspective, everything I've seen has kind of come to fruition. So I trust myself still. In other words, I've kind of taken this week to see if I can and if everything's working. Is it still echoing, guys? It shouldn't be. I don't think it should be. If you're still getting echo, I guess refresh. It shouldn't be. There's only one mic going now. What's furlong? Anyways, I want to be in a good mental state. So if you're dealing with tragedy or anything that's too heavy, way better off not trading. Okay? Way better off not trading. That was the issue for me. It's stabilized. I'm back to trading. It feels good. Taking the week off of being too active, and that's it. That's it for me. Any questions on like dealing with something like that? Because in my career now, you know, I had this happen with my dad. I had my brother die in 2019. That took over a month for me to even want to think about trading again. That one. So sometimes the answer is to just take the time off until you're ready, until the charts feel like your respite again, which is what it feels like to me, if that makes sense. After a month after losing my brother, I don't know what I would have done if I didn't get back to trading. I was so depressed, you know? For me, from a psychological perspective, okay, if I can look back at the day, and it's even better to know intraday if this is happening to you, but if during the process of the day, all that's crossing my mind are objective thoughts on charts, okay, the markets, risk reward and the patterns and all of those good things, the catalyst, like I said, the fundamentals, where do I risk? Where is that reward? Where do I need to cut? How I need to cut it? How many shares can I get to risk that amount? You know, the time of day, what sector is this ticker in? What have the runners been doing lately? Have we seen morning runners, or have they been afternoon runners or midday runners? All those questions that I have to whittle away at to get to where I need to get to and continuously put myself in the right stocks and places. That process, if you're dealing with heavy stuff, it's just not going to work out well. You'll forget things. You're not going to be sharp. So I like to err to the side of just don't trade if you're in a bad spot mentally. If you're in a really bad spot, it's not worth it. Risk mitigation, which that's pretty much been the theme of this bootcamp is, you know, whatever you're playing, do your best to mitigate risk once you get there. You know, when you have the ticker and I've done my process and okay, then it's about how do I get the best damn price possible with the least amount of risk, because I can get the best reward and I can get my biggest size. You know, it's twofold by getting good entries for me, and that size thing and getting nice and close to my risk, is a big deal. Yeah, it's a big deal. So when I have all those thoughts going on while trading, what are some ways I try to get my mind refreshed and ready to trade correctly? Time off is the only thing I can think of. If it's a problem that you're just ignoring, sometimes you just need to address that problem. If it's an emergency or something, you just have to let it run its course until you're ready to trade again. That's all it is. If it's a random intraday thing and I'm just kind of struggling psychologically and it's nothing major or anything like that, sometimes I'll just go work out. You know, anything to break the rhythm of my thinking, and put myself in a better place. Sometimes I just got to go work out or walk around, you know. Hunter asked, do I think taking super tight risk reward is easier on the long side? I always get run over trying it on the short side. Yeah. I definitely think it's a lot easier, honestly. Yeah, I do. I think it's a lot easier. not only is it easier, but when it doesn't work, I'm not exposed. That's the main thing. I'm not too exposed. And so there's super tight. So it's good if you're trading in sketchy areas or you're chasing, super tight risk reward is good because the downside is unlimited. You have big downside on big runners and stuff like that. But in the areas where I buy it, it's not stressful. And even if my levels break down, they're going to break down 10 cents or something like that. Okay. But when it gets down to support and supports forming and stuff like that, yeah, the cracks aren't as bad as the problem is when you're trying to get super tight risk reward as a short seller to highs, say you're just using highs, it's also potentially the start of big squeeze. So it's scary, you know. How did I get over PDT? One trade at a time, over time, initially. Now I can get over PDT much faster. You know, I've taken multiple accounts over PDT. The first one took a long time. Okay. First one took a long time. The new guide that we're dropping Monday has a whole chapter on PDT trading, a whole chapter on it with examples of the last PDT account that I opened in December and went from 5 to 15 or 17 really quickly, outlining all the trades. It's only like 25 trades. So if you're new, you get over PDT slowly as you learn. Okay. You can also get over PDT by saving money. I think it's more powerful if you can grow over PDT because just putting 30K in an account, I promise you'll get under PDT so fast it'll make your head spin. If you don't know what you're doing, you put 30K in an account and maybe you've been trading PDT and you think that PDT is your problem, I promise you'll go right back under PDT. I promise. And then once you've tasted non-PDT trading, see what happens once you have to go back under PDT. And you deserve to because you don't, but I promise that's the case. So if you could grow a PDT organically from 5, 4, 3 to 25 to 30, you can go 30 to 100. And that process of going 30 to 100 is way easier than the process of going from 5 to 25. So if you're able over time to get your account to grow that account from 5 to 25, okay, you've put some good things into place. You've put some good processes into place that you can trust now going from 25 to 100, right? So that's what I'll say about that. But I've got a whole chapter on it because it has such a profound effect on your trading under PDT. And you get used to it. And my PDT trading got better when I realized that those thoughts cannot enter my head. That just because it's my third trade should not affect whether or not I cut at risk. You see what I'm saying? Like I would get caught up in that all the time. Like, should I cut? Or, I don't want to take profits. It's my last trade of the week. Or I don't want to lose on my last trade. I don't get to trade for another week. Those thoughts all have jack shit to do with price action and what the markets are going to do. They mean nothing. All they're going to do is mask the truth from you, and you'll either get lucky and it's going to go for you, or you're going to take a big loss. So we talk a lot about PDT in it. All right, let's get to you guys. Who wants to start? Anyone? Yeah, what's up, Dennis?
Well, something that I'm trying to change. A few months ago, I saw a video, and something stood out to me. The guy said that the physical brain that you bring with you to trading is not the brain that can actually bring you success because it's how we're wired, and a lot of it is psychological. So I started picking up a couple books on changing your mindset or changing how you think, so psychology stuff. And I did post those books in the Discord in the book section.
Cool.
If anybody wants to check them out, they're really cool. And so they've been helping me, but they've been making me realize that I have I could have taken 1 or 2 trades that could have been good. So for me, changing daily habits is something I'm trying to do right now. I'm trying to wake up so my schedule is completely packed from the moment I wake up till I go to sleep because of so many stuff that I have going on. But one thing that I feel like would help me is if I change my habit to waking up at 5 a.m. as opposed to sometimes I literally wake up at 8 or 8:15,
Yeah.
15 minutes before the market opens.
Right.
And yes, I have got into a spot where all I need to do is look at 5 minutes on the scanner to determine whether there's an opportunity that I like or not.
Yep.
But even so, with like an unhealthy balanced schedule physically in this world, it becomes very difficult to like make your, I don't know, turn the wheels in your brain to work so you could actually like be focused on the trading itself. So that's something I'm trying to change at the moment. And then any other psychological stuff that comes up as I'm reading those books and trying to work on psychology. Over the course of the past year, I've overcome an enormous amount of psychological stuff that I've struggled with. And a lot of that has been that you miss or don't learn. If you jump on the account and go over PDT, and then you open yourself up to an enormous amount of risk, and you take stupid trades, and you do stupid stuff. Like a dumb thing that I did was, you know, when GME and AMC were doing all that stuff. Well, I was watching GME, but I was playing AMC, and I was taking huge positions, like 30,000 positions on AMC, and without like a concrete concept of risk. Like looking back now, there is no way I should have taken those kinds of positions. There is no way I should have like, you know. Yeah, I still am kind of one of those people. I'm still holding a big bag of Dogecoin. I was up enormously on Dodge. And I didn't take my, you know, I didn't take the profits, so now I'm just holding it. But yeah. If I could say anything else, that's kind of what I'm working on right now, changing physical habits in my physical world by focusing on changing my brain, like restructuring. We could get a lot, you know, other stuff down too. So can't think of anything else that I want to share.
No, I love it, man.
At the moment, that's it.
Dude, I've been watching you, and I remember in Austin a couple of years ago, year and a half ago or whatever. Just yeah, you've come a long way, man.
Thanks.
You really have, and it's really cool to see that. You know, the size that you're able to trade now and stuff like that is really cool.
Yeah.
It's really cool because
I could put on a trade for like 3,000-4,000 shares, and it does nothing mentally. Before,
that's money.
Would,
yep.
which is nice.
And that's magic because then you can start to take advantage of things without that fear always. But it's easier when you are doing what you do, you know, and you're trying to nail down entries, the size game's easier when you're able to mitigate risk. You know what I mean? It's easier to size up when you know you're not going to lose a lot of money. That's the problem. You size up, you take big losses, size down. Win, size up, take big losses, size down. But the idea is win, size up. Yeah, take big losses, bigger wins too, though, if you're doing the right thing and if you have dependable stuff that you're doing. So, dude, yeah, it's good. It's good to see you too, man. What else we got? Who wants to speak? Anyone? Psychologically, what are you struggling with right now? At home too. If you guys are at home right now, you guys can join in on this session. So if you're struggling with something psychologically, this is a psychological session only. We're not talking charts and stuff. You guys especially, you came to see me. Yeah, I know you guys are all fucked up like I am. I told you guys I was a drug addict and lived behind a Walmart. So you guys need to fucking tell me something. Facts. Thank you.
I mean, I'm pretty much okay with it, but I do go through these times where, like last year, and you mentioned something about last year with yourself. You know, last year, I mean, 20 years into it, you know, full-time trading, and last year I started to question, maybe it's over. Now, a lot of that had to do with because OTCs have changed.
Right.
Trade, but that's a really hard mind frame to get, you know, to deal with when you think that, okay, I've never seen a market like last year. Maybe it's over, maybe it's time for. So, like, what do you do? I mean, I know you talked about, like, what do you do with that? I'm sure that other people, you know, go through this. It's like, this year I'm a little bit better, but that's because I've been doing a little bit better, but I've also learned to just be patient with trades. But, like, how else do you handle situations? Because it's like it's almost like I started to think like the imposter syndrome, you know, like this is not even real. Like, I'm not even a trader. But you know your history.
That's really good.
Hard to deal with.
That's exactly what I dealt with last year. We were talking a little bit about it yesterday. You know, I had gone from just profitable almost every month, not all months, but years and years of profitability, to 5 straight months of not profitability and hardly trading even at times. Okay. You forge on, you know what I mean? At the end of the day, for me, if markets were great last year and I lost, you know, I was having a losing streak like that and we were having phenomenal markets, I would really start to doubt myself, I guess you could say, after being profitable for so long. You know what I mean? But what I've learned is that the process that I put into place has served me in all markets. I didn't fix my process last year. I could have adjusted. If I adjusted to, let's just make $200-300 a day, I could have done that. Easily could have done that. You know what I mean? But I didn't adjust as low as I needed to. It was a really tough adjustment. It was a lesson to me. This year, my plan was to be able to make that adjustment on the fly week to week. I've been trying to do that. Had a good year because of that. I've gone from like full turtle head, just the tip trading to from like 1 week, you know, to full blown YOLO ape, buy it all, hold it all tonight, all in on my account. Week to week, I've been able to turn it on and off like that. And it's actually served me so well this year. And I've only been able to do that because of the struggles from last year. I don't know if that makes sense. My trading got better because of last year. That's what I think. From the lessons I learned from that, you know, and it took me too long to learn the lessons. Do you know why it took me too long to learn the lessons last year? Because I was avoiding it. Because I was just like depressed. From a business aspect too, I had been just kind of sitting at a desk at Stocks to Trade, not doing much, and, you know, kind of depressed about business, depressed about my trading, and life in general. You know, I was just kind of upset. And so I was fishing a lot. Like we talked about, that was how I coped with it last year. That's why I continued to suck. I got way better at fishing, and my trading stayed the same, which was just not great. I didn't have a big drawdown at all last year. But drawing down month after month was just concerning to me, especially with everything else that was going on. That being said, you have to be objective. And when I objectively looked at the markets and what happened, and we can look right now at SPY of 2022, when I stepped back and looked, what was happening was I was still showing up to the market every morning. I was still going through my process every morning, and my process was telling me to just not trade anything today because there's no fucking runners ever, like never. You know what I mean? All my friends who traded small cap the last few months of 2022, none of them were trading at all small cap. They were trading the Qs and shit. They were trading SPY, like ETFs that were all they were trading. If you look at like Huddy and my friends and Jack and those guys that like in October of last year, because it was so desperate and there was nothing to trade, but there was decent volatile action going on with some of the index funds and stuff like that. That's what they were trading. You know what I mean? So I wasn't alone in the fact that small cap had dried up, and it's tough. It's tough to take hits in your confidence like that. But last year was a sucky year for the markets, and everyone I talked to and all my students, I was trying to let them know the same. Like it's rough. The main lessons I learned from 2022. When things get tough, you're supposed to work harder, not avoid it, which I already knew, but I had to relearn that lesson last year. I wasn't supposed to be fishing. I was supposed to be going through data and figuring out how to make my trading work better. So that was my mistake. But the other lesson I learned is that I will never again tell people they should ever quit their job and just be a full-time trader. I think if you can't, don't get me wrong, it is the best job. It is an amazing job. But last year made me realize some other things too. That what if this year looked like last year? Where would I be? You know what I mean? What if it was 3 or 5 years? What if I am at the mercy of a trader? I am at the mercy of the markets always, right? So if the markets aren't fruitful, what am I going to do? So it made me realize a lot of things, even as a teacher and just as a human and as a trader, that you really do have to make the most of the markets when they are there. You really do have to make the most of the patterns when they're there for you. When your patterns are there, you got to take them. You don't know what tomorrow brings. It may bring nothing, right? I don't want to sound all doom and gloom, okay? Because I also knew that things are cyclical and stocks don't go down like this forever. Okay? That's the other lesson 2022 taught me. So those 3 main lessons. Number 1, you have to work hard when your trading sucks. I already knew that. I've been teaching that forever. I've been doing that forever. That's why my trading stayed good, because I adhered to the process. I worked my ass off every day at trading. Anytime my trading slipped in my career, it's been due to a lack of work, usually. Once you attain that profitability and you have process that works for you and you're like 2 years into profitable trading, okay? That's kind of the point that I'm talking about. It's harder when you're just learning to trade and you don't ever really sense it, but you've made money in the past. You know that you can make money. So that's all it is. You know how, but your market's dried up. You knew how in OTCs, and they were kind of easy to trade back then, but a lot of people lost money trading the OTCs too. It wasn't everyone making money. Certain people made money. Some people made really good money. And I've told all the OTC traders who I work with now, because a lot of them have come to me since 2021 because OTCs dried up, that the same principles that allowed you to be profitable from a psychological perspective, from a discipline perspective, from a understanding your strategy perspective and execution perspective. Execution's different, but all of that understanding that went into becoming profitable there, you can translate. Just a way different beast. You have to understand how, because you know how OTCs work. You know what happens when A happens, you know what happens the next day. A plus B, you know what C is. And the listed plays, it's not always that. It's a lot more of that contrarian stuff comes into play, where what looks great and what feels great is often not. So it's kind of And then obviously the amount of volume, the level 2 is different. Level 2 on OTCs is pretty goddamn straightforward most of the time, outside of like the iceberg and hidden orders and stuff like that. But listed plays, I don't know. The beauty is that they're here every fucking day. I mean, they're not always tradable and stuff, but we have volume and we have stocks. So just be patient with yourself and understand those same principles that allowed you to be profitable there. You can take into the listed plays too. You just got to figure out what works for you. Those couple strategies that resonate with you, that work in certain markets. And the problem with listed plays, they change so much more differently. When OTCs are in play, they move a certain way. When an OTC is in play doing volume, it does certain things most of the time. You know what I mean? When a listed play is in play, it may look like a low float and then consolidate in like 50 cents all day on like 150 million shares. You're like, what the fuck is that? To me, that's usually algorithmic stuff and whatever else. But yeah, so don't beat yourself up, man. The markets have shifted. The markets don't go down forever.
Good point too, and I appreciate you saying it because you made me think of something that I never really understood how these people, it took me so long to increase my risk. But I'm very strict about risk.
Yeah.
It's the same
Yeah.
as in trade, so it's consistent. But I'm never one to really press when things get hot, and even OTCs, they've dried up. There will be, I can't imagine, it's not over. There will be, even if it's a few months out of a year, there will be times when they heat up.
Yep.
Get hot.
Yep.
And
Or it could be a
that's
sector too, and then you see some OTCs in the sector.
whatever it is.
Yep.
And those are the times that I need to really press.
Those are the only ones I tried so far this year were AITX. Yep.
That never really heated up.
No. There was another one.
Even that, I mean, there's a beautiful breakout right. Yeah, it is. Right before that huge volume, even that's a huge move. You see the day I'm talking about?
Sorry. What was that?
The-
Oh, yeah. No, I know. I was watching it.
Right before that?
Yeah, yeah.
That was, I would have bought it. Look,
Right.
that right there, that's a huge, that's a lot of money in that.
Yeah, yeah.
trade.
Oh, yeah. It was a lot of, that was big OTC volume for these days. And no, I get it.
All takes
I get
is
it.
a couple of months a year.
Yep. But we'll see. But it's just, that was like, one of those times that where someone like Jack made all his money. He made so much money, that changed his life in a couple months. But that was the culmination of years. That's what everyone has to understand. It's not like he just got lucky one day. So thanks, Tyler. That's right. AIAD. That was the other one. I tried them both. I didn't make money on either of them. Here's AIAD spike. That's still a decent OTC spike. The 004 to 2 cents is good. But yeah, don't beat yourself up, man. As long as you're putting in the work, beat yourself up for not working. That's when you should be hard on yourself. Like if you're just letting life go by, shit pass you by, and you're upset and you're not getting better, but you're not doing anything, that is the issue. Like not the trading part of it. Not that you suck at trading. You suck at trading because you're not doing any work most of the time. That's my opinion. I don't think that being said, I did hit one point a couple days last year. I'm like, God, I literally didn't like trading anymore at all. I didn't want it. I was like, dude, I'm like, the fire's fucking gone. Because the fire burnt so strong when I was learning. And then for up until, the first 3-4 years, the fire was so strong, dude. Like I was just a degen. Now I got good at trading. Now degen meant just sitting and watching charts all day, not necessarily trading, being a good trader, but I was behind my charts all day. There did come a point where I'm like, I can live life. I can go golf and I can teach and do other things too. But there came a point last year where I didn't even want to look at it at all or teach. And I didn't really want to teach because I didn't want to trade. So how am I going to teach if I can't trade? That was the whole thing. The problem with teaching is that like, if you're sucking at trading, you feel like a hypocrite. You know what I mean? And that's what I felt like every day, just coming in. And granted, I wasn't pretending like I was making money or anything, but I would just show up at the markets and be like, oh, there's 5 stocks on my scan up 4% at one point. You know, I was seeing scans I had never seen, so low volume, nothing, crickets. So yeah, there were very good lessons learned from 2022, and they're all in the new guide. That's why I learned a lot. I was very, and this happens with everyone. Anyone who comes in and they make some money and they want to teach, teaching's a skill. But also, if you've been trading for like 1 or 2 years, you don't know fucking anything. I'm sorry, in my opinion. I mean, you can know way more than other people, but until you've sat and I was one of those people, I was like a year and a half in and I started people wanted to learn. People started approaching me. Be the Trader was for my first ever student. Alex Bustos is the first person I ever taught. Is that the craziest shit you've ever heard? In 2017, he came to me, and he was my first student. He spent a week with me in Phoenix, like at the office with me. We played some golf and had some fun. And we go way, way back, me and that kid. So I got a lot of love for him. But yeah, so that's how that started, because he came up to me. That's why I teach at all. It's because of Be the Trader, pretty much, which is kind of funny if you think about it. But yeah, so you got to put the work in, guys. You got to put the work in. If you're not, I didn't start getting better till I started working extra. And then once I realized the impact of that extra work, I'm like, well, what if I work even more than that? Like, how much can I fucking learn? I became so obsessed with trading. That's the thing. And now the obsession has subsided. I'm not like 24/7 thinking about trading anymore. I don't have to. And it's not healthy, Now I try to put more time into my kids. I put those, and I remember telling myself in 2016, 17, I'm going to put these hours in right now because my son is 1 year old and my daughter's not here yet. So my son doesn't remember shit. He won't remember shit, even though I'm convinced he does, because he's kind of got a crazy memory. He dropped some shit from like 2 years old where I'm like, you're not, like he's kind of a special boy. But that was I told myself and I told my wife, like, listen, babe, I'm not going to be around much this year. Like, I have to get our daughter's on our way and I need to get this thing. So, so I figured I'd sacrifice my memories of his first year a little bit for his memories of me when he's 8, if that makes sense, and 7. He won't ever have to be like, oh, daddy's working all day again. He can't come to my baseball game or some shit. And now that we're here, I remind myself that, like, oh yeah, don't work right now. Go, you know what I mean? So that's kind of the goal, and just grind until you get to that point where you can step back and say, oh shit, I have an idea what I'm doing. You know what I mean? And then grind harder until it's ingrained. And then when you start to struggle, you go right back into that. That's what I needed to do early last year. Well, it was about May or June where my struggle started last year. So good lessons, man. The hard times will provide lessons in life for us always. And I think the trading, that's what I'm going to take away from last year, is that I didn't do everything in my power to be good at trading. The market sucked, but I didn't do everything in my power to capitalize, because I've traded sucky markets in the past, really slow markets. In 2019 and 18, there were some really slow times where the scans, I was saying last year, I haven't seen scans like this since 2018 and 2019. Some of the scans we were getting, because they were so low volume and such little to trade. But I was making money back then. Even during the slow times, I was grinding out a couple $100, $500, $1,000 a day. So that was kind of on me. Not kind of, 100% on me.
Because you brought up, you made me think. So this year I did, and I told you that last meetup a few months ago, I had spent the beginning part of this year figuring out a different exit strategy.
Yeah.
And
Right. I remember that discussion. Yeah.
If I had used that last year, I would have done fine. I would have paid my bills and everything.
Yep.
But it was that extra work that I didn't do last year that I did this year.
I get it, man.
Yeah.
Same with me. We're in the same boat, bro. Yeah.
It didn't work, so
It's funny like that.
I appreciate that. You forget about these little
You
things,
forget.
like,
Yeah, you
would've been
forget.
fine.
That's why these discussions are my favorites, because we had the doubts that creep in affect our trading. And then in turn, because even though we shouldn't, we attach ourselves to our professions and stuff, and now you feel kind of worthless, and then you're depressed. That's what happened to me. I'm like, I am trader, I am Roland Wolf, the trader, you know, and teacher, and I can't do either right now. So who the fuck am I right now? I don't know. It made me think back. I don't know if you saw the documentary on ESPN about Tom Brady, or if you've seen the video of him about when he got drafted, because he didn't get drafted till late. You know, a bunch of cute quarterbacks went before him, and he called his mom and dad, and he's like crying. He goes, "I'm not gonna have to be an insurance salesman." He thought he was gonna. He's like, "That's I literally, that went through my head last year, and I thought it was hilarious because of that." An insurance salesman. I was thinking that at one point last year. I'm like, well, what's next? Seriously, that's the worst thought I've had so far in my journey. But it was super, super, super fleeting. It was just in a moment of weakness and being a little pussy. You know what I mean? We do. Well, we're being pussies, you know, like we're being depressed and wallowing. The answer is fucking work. Always, to me. I always have to remind myself, even right now, man, like I have a reason to have depression and shit, but no one cares, especially the markets don't give a fuck about me or my dad or your PDT, you know? So really when it comes down to it and I get behind these screens, I have to be as cold-hearted and ruthless as possible. I don't need to give a fuck about anything else except trying to be on the right end of these fucking bars on this chart for me. You know what I mean? And if I'm not doing it, then I have to figure out why. And you can. You go back through the charts. You go back through your trades. You find the patterns that aren't working for you. Maybe you're not even trading patterns. You got to go do shit like this so that you can sort yourself out mentally, you know? And then come back Monday and let's do it again, but with a different set of tools. Hopefully. So, yeah, man. This is a good discussion. What you got going on over here? How you been, dude? What are you struggling with the most? Okay.
Everybody's issue.
Yep.
One person.
Yeah. Awesome.
You know, I just I get into, I guess, random trades. Once I have the first loss, it's over. All moves are out the door.
Oh shit.
But
yeah, I got you.
I was getting good until yesterday. I'm getting.
Yesterday's sitting right in front of me?
Trying not to react to it, so. But yeah, so but I let probably like 2 run past what I wanted to risk. But for the most part, I was getting good at it.
Okay. So your main issue right now is cutting losses then? Is that your main and revenge trading?
And revenge.
Okay. So those two so those two together, you're fucked. Right? Totally fucked, dude. I get you, man. Totally fucked. Okay. So number 1, can't cut losses. Set a fucking stop until you can. Unequivocally, that's my recommendation. That's what I do with myself. If I find myself letting shit slip a little bit, because I've always been good at it, but if I start letting it slip, I've had certain times in my career where it happens because I'm a human. Maybe too much conviction on a trade or whatever else it is, you know? Start justifying that. It still happens to me. Stops. Period. Okay? That is under your control, man. And if you don't have to worry about that, that's a huge thing. Okay? So stop losses. Yeah, it sucks when you get stopped, dude. Of course. But it sucks worse when you don't get stopped and then you just let it run. And then next thing you know, it's like a 20-30% loss or something. And you're drawing down big on an account. When you didn't have to, you could have lost $5, you could have lost $10. You could have cut it down 2%, but for some reason, you could have cut it where you made your plan. If you can't cut it where you make your plan, you can't trust yourself at all. Then you can't build confidence. So if we're not cutting losses, where we want to cut them, we take it out of our hands. Simple. Really simple. I still do that from time to time. Sometimes I'll do it randomly too. Like if I just am trading, I'll just put stops sometimes. You know what I mean? I don't always have to sit there. A lot of what I did and a lot of the reason people don't set stops is because people told them not to set stops. You know, somewhere they read, myself included, and you could probably go back in my material and find somewhere where I told people that I don't set stops, nor do I recommend them. I'm sure you could probably find me saying that somewhere back in the day, because that's what I was being taught too. I had been taught that market makers are going to hunt your stops, which they will. Not saying they won't, but if you understand that game, there are better places to play stops and stuff like that, which is a little bit of a different thing. Okay. But at the end of the day, if you're trying to be stopped somewhere, you want to be stopped somewhere. You know what I mean? So that will take one half right out. And I promise you it's freeing, because you're like, okay, you take your trade and that's under control. You don't have to worry, because right now maybe you're not worrying about it consciously, but subconsciously you're 100% worried because you don't control it. You don't have any semblance or sense of control. But if you control downside, then you can start to work with everything else. If you're able to control your downside, you can test any pattern. You can try anything you want. You know, you can try short selling eventually, like do whatever you want to do if you can control downside, which means cutting losses quickly, which means setting stops, but also understanding all the nuances behind that, you know, the volume and making sure it's liquid enough that you're going to get stopped at the right place, and the levels you're using if you're going to get stopped, you know. And that's why almost every other level than low a day, you're likely going to get stopped at some point within a trading day. You know, between low a day and high a day, I've stopped kind of using arbitrary levels, including VWAP. I don't risk VWAP or anything like that. So that's one. Number two, the revenge trading. Also a simple fix. Take an L, shut down the screen. Two simple fixes. And that one's a little easier said than done. The stop loss, you should just make it a habit right now that you don't place the trade until you have a stop loss. You can even do like conditional orders conditional orders where you're placing your order and your stop simultaneously. So there's no fumbling around, like dicking around. Oh, you know, like, it already, you know, that whole, I get that game too. Like, I didn't execute. I got you. I'll do that at times. You know, I love conditional order, especially when I'm trying to build swing trades and I'm trying to do a bunch of different tickers at once and stuff like that. It's easy to forget things. And then, it's easy for it to go, I can go piss and be like, oh shit, I didn't set my stop. And so boom, set a stop. And two would be that shutdown if you're losing and you're feeling revenge trading. It's okay to lose, you know? Yeah, totally wrong. Yeah, dude, but that's okay. So that is 1,000,000% gambling, right? We were talking about the difference between gambling and trading yesterday. No process, no control. Don't know if you're going to cut it. Don't know what you're doing. Revenge trading. You know, all that stuff. When you're basically a poker player on tilt. You just took a big hand loss, and now you're like, fuck it, all in, all in, all in. You know what I mean? Like, I'm not saying that's what you're doing, but that mentality where you're just trying to make it back with it. The next one being a bigger position, and the next one, shit, down 500. Well, let's try to make 1,000. We need to take this much size. You know what I'm saying? Super dangerous, dude. The number one for me, you're violating my the two worst things that I could do as a trader is what you're violating right now. And if you're doing that on a daily basis, of course you're going to have no confidence, right? And you're just always going to be in danger of that next trade taking you out, being really big losses, right? So two pretty simple fixes to the two worst problems that you could have as a trader, which would be after a loss, maybe two losses, make sure that you give yourself that max kind of period where you say, okay, you know what? You just close it down, go take a walk, dude. You know what I mean? Just make sure that you're not now like you, and I get it because it still happens to me from time to time, not too often, but it's that you take the L, you get stopped out, or you take the L and they're immediately on to the next. You're like, okay, it just will barrel roll you into a bunch of stupid ass trades and you don't know what you're doing. So process, man. Cutting losses quickly, you can take that out of your hands And then revenge trading, you can also take that out of your hands. You know what I mean? Those two things. And the more you start to do it, the more you can start to trust yourself again. You'll be like, okay, you'll see that you got stopped. Okay, I analyzed this trade. Why, how did the trade go? But you can trust it at least. You know what I mean? Then you can now go through data, your trades, your spreadsheets, and trust what you're seeing, because what you're seeing on your spreadsheet on the strategies, if you're fucking them up yourself, you can't trust the probability of that strategy actually working in the future, because you're the one, it's user error. Got me? Yeah. So I got you, man. And I've been there. And there are times where I also am revenge trading and not cutting losses quickly, but it's very fleeting. And it has to be. So you're going to fix this right now. Okay. You're going to fix this, and it may take a little while to fix completely. 2 sticky notes I want you to put right on your computer, nothing else, just 2 sticky notes. One will say, set a stop, and the other one will say, shut it down, or whatever you need to do to remind yourself that if you're 2 trades or 3 trades in and you're feeling that spiraling downward spiral, that you close your laptop, or your computer, you turn it off for a little bit and go for a walk. Those 2 things, that will protect you. You won't revenge trade. You won't have to worry about cutting losses quickly. And we'll talk next week, and we'll talk the week after. I guarantee you it'll be the thing is, if you don't have to worry about that, then your attention goes somewhere else, right? You're not worrying now about that. It clears up a portion of your mind to actually be productive and figure out what's going to work for you. You have to be able to trust yourself, right? And if you can't trust yourself, put the tools in place to do it for you until you can. And I learned that directly from Tim Grittani. Okay. That's Trading Tickers 1, baby. He started taking big ass losses. He put his ass in timeout, and took it out of his own hands, started setting some stops and hard stops and doing what he needs to do. He sized down, set hard stops, make sure he could get out of positions, and then once he was then able to control it and see all his trades working, and that he could regain his confidence, basically discipline. You got to build that discipline, right? And consciousness, which we're doing right now. You've got to build that consciousness that you have this pattern of behavior, these habits that form. When you take an L, you do this. When you're supposed to stop out, you do this. Okay, so those are really bad habits. So we got to fix them. So we have to be conscious. So we use a couple this is my process for every psychological flaw I've had. And I've gone them at them one at a time, but I forgive you for using 2 sticky notes, because they kind of go together. They're really bad together. So you want to eliminate both of those at once, right? And then we'll figure out where else you're fucked up and work with that, right? But those 2 things alone, man, you do those, you're going to be able to focus on other worries. You'll figure out what else you're worried about now. Okay, let's see how we fix this shit too. And one at a time, man, you're going to feel that fog clear up. You're going to start to trust yourself, and then you'll feel confidence for the first time. You'll go on winning streak for the first time. And then you're going to revenge trade again. And then you're going to fucking, stop cutting losses quickly because you took back power again. And then you're going to fucking dust off those sticky notes again, and start setting stops again. You know what I mean? That's the process for me. That's what's beautiful about it, is if you can fix your problem once, you can fix it twice. So, and not only that, but the second time you should be able to fix those problems a little bit faster, because it's just that consciousness, right? This is like the magic of trading to me, by the way, is this stuff. It's not the patterns and shit. Patterns come and go. Today's pattern, if I could be like, this is the best fucking pattern today. Tomorrow, nothing. We've seen that this week. Some of them work, some of them don't. These patterns are really crazy. Gap and crap reversal, my all-time favorite daily bread and butter pattern, has not been great for a couple months. It is what it is. My man, yeah, take off, bro. Love you, Dennis. Take care, dude.
Likewise, this was really good.
Yeah.
If you guys want to take a picture, I will take a
Yeah, we can take a picture real quick. We'll be back in 3 minutes. We'll be back in 3 minutes to talk some more psychology and market close.
Set you up.
Market close. We're in power hour, 50 minutes, so we'll keep going. For those who have to take off or whatever, I believe is there a sale going on in our? I don't know. That should be under the YouTube video. There should be some info for those of you who keep asking. Been getting some DMs and stuff like that, but Give me a sec. We'll be right back. Quick group picture.
Yeah.
All right, all right. No problem. All right. If y'all at home are having psychological issues, we're gonna hit you. We're gonna get to you guys as well. We got another 45 minutes or so for the stream and for the markets and for the week. Lewis said his biggest struggle right now has been letting outside factors influence his pull of the trigger. For example, this morning on Freak, I was 15 minutes early from my ideal entry. Yeah, I mean, that's super common. It's really, really common, and you don't even realize it's happening. You know, that these things, whatever it may be, is actually affecting you in your trade. So I suppose it's gonna depend on what those factors are that are influencing you. You know what I mean? You have to kind of get to them, and then for me, if it's something that needs to hold weight, then I'll pay attention to it. But if it's something I can debunk and it's like a random fear that's irrational, which most fears are, then I have to get over that. And in terms of if I'm having issues pulling the trigger in any form, okay, my answer is always the same: size down, press buttons. Size down, press buttons. If I'm struggling to pull the trigger, okay, and then what's the context behind that? You know, are you not seeing setups correctly? Are you not seeing any setups? Are you brand new and you're just afraid? All of that's fine. All right. If you're more experienced and you're just not seeing setups, then you're probably doing the right thing, not trading, right? If you're new and you don't know the setups and you're just trying to trade and you're just afraid, first of all, we have to lose to figure out where we can win, right? Second of all, size way down or paper trade. Size way down or paper trade. Watch yourself be right with small size to give yourself the confidence to go ahead and lose those fears. The goal for me always is if I have fears, a lot of it will have to do with size. If I'm size too big and there's too much of a risk for a big loss in areas where I shouldn't be doing that, that will negatively impact me. But the answer is always size down and press buttons. In other words, if I am seeing setups and missing them, if that is the scenario, if I am not seeing setups and then missing setups that are there, I have to figure out what those setups are that I'm missing and then see if I can't take those setups. Okay. But if I'm just not seeing setups and I'm not making money, that's fine. That's what I'm supposed to do when there are no setups, right? If I am seeing my trades, if I am seeing setups and then not taking them, that is when you have to take action. That is when, if I, like, say, for example, yesterday I saw a gap and crap reversal, a perfect one, and I didn't take it because I haven't seen one in a month. And then I see one this morning and I didn't take it this morning because I haven't seen one in a month. It is my job, if I see one on the third day, to try, okay? To at least press buttons. So size down and press buttons. That's always my answer. If you size way down, you can gain that confidence. If you see that you're right, that is how we gain confidence, by seeing our thoughts and our process and the stocks that we choose and our ideas come to fruition on the chart. That is the only way to really build confidence. Unless you're someone who just struggles cutting losses, like we were just talking about, it builds confidence once you start cutting losses appropriately. Even though you're taking L's, once you realize you can control trades, then you can work with that. But if you always have that fear, like, oh, you're really scared all the time, it's because you're not controlling them. You don't have a plan. You don't have a process, all that good stuff. Just going through comments. We already went over stop losses. I just spoke about those in general. I'm not I don't always use them. I don't use them too often. But sometimes I use it every single trade. If I'm struggling with that thing, it's so easy. The easiest fix ever for people who struggle to cut losses quickly is to set a stop. It's so, and I get it, you know, it can be really frustrating and stuff like that, but it's a really, 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 really easy fix. And it's one of the most important fixes that you can make if that's your problem. You know, you can't fix your trading or even come close to doing what you need to do if you're having issues with cutting. You'll end up holding bags. No bueno. Brian said, been forced out of trades when using stops just to see it rebound to where I was certain it would go. Tough call. Yeah, but you know what's funny to me? And I bet you if you go back and look at your body of work, you'll come to the same conclusion. That's just what you remember. You're just remembering the ones that went without you, I promise. How many times were you stopped and it went lower? We have selective memory, I promise. It's same with me. I remember those ones where like, oh, I got stopped and then it went $10. I remember that. But you don't remember the one where it stopped and then went down another buck, which is most of those other ones, okay? Or it went, 15% or 20% further than your stop, and your stop actually did save you. So for me, it is a trade-off, of course, and as you get better, you can kind of go case by case scenario as to where you set stops and don't if you want, as long as you have control of what you're doing. There are times where, yeah, I'm not setting stops too, most of the time, I guess. But I got to go pee, I'll set a stop. I want to go golfing and I'm trying to swing a stock, I'll set a stop. I took half of my position already into strength, set a stop on the rest of it. Ideas like that where I can be patient. I don't mind that, and I don't have to sit at the computer. So so I hope that makes sense too. I'm not saying to set stops all the time for anyone. Everyone can do whatever the hell they want. I'm saying that for me personally, I set stops if I'm struggling with cutting. And if you're struggling with cutting, that's not something you should have to worry about. It's just not. Maybe you need to put your stops in different places. Here's the other thing. I have no problem being stopped out. And I actually, when I'm being stopped out, especially like morning reversals and stuff like that, because I'm playing second, third legs down in the morning on morning fades, maybe that fourth leg down comes and stops me out. I watch it like a hawk the second I'm stopped out to see if I've just been stopped out. And I will re-enter and sometimes get better risk reward on the re-entry after cutting. So I don't mind being stopped out at all. I don't hate it. I love it. It's what is supposed to happen. It's what protects me over time. If you can get to the point where you enjoy being stopped, where you're like happy that you cut, to me, that's so important. It doesn't matter. I'm either taking my profits where I'm supposed to, or I'm cutting where I'm supposed to, or somewhere in between, but not on the other end of that cut. As long as I'm cutting where I'm supposed to, I'm maintaining the integrity of the risk reward of my setup over time. And that's something you have to understand. If you're trying to get 1 to 5, 1 to 6, 1 to 7, 1 to 10 risk reward across some of these small cap setups like I do and better over time, it is the cutting, it is the stop loss and the cutting that enables that reward to stack up over time and enables me to keep that 1 to 5 and 1 to 6 and 1 to 7. If I'm not cutting where I'm supposed to cut, I'm constantly cutting lower, I'm not actually getting the risk reward I want, which I talk about. There's actually what happens and there's the plans that you make in your mind. So you're like, oh, this was a 1 to 5 trade, but you cut it and it was actually 1 to 1 where you cut it if you look at your entries and exits. Okay. So maintaining risk is the game to me. As long as we can get risk under control, which means cutting losses where we're supposed to, entering areas we're supposed to mitigate risk, sizing like we're supposed to mitigate risk. Everything to me in the small cap game is the mitigation of risk that enables me to enjoy the fruits of the fact that these stocks can go 200, 500, 1,000% in a week. And I don't even have to have that much capital or too big of a position. And oftentimes I don't want to have too big of a position to make good enough money, So that's the idea. Especially if you're someone who buys breakouts and shit. If you're like a breakout buyer, okay, a high a day break buyer, you know, all those really dangerous spots where you're exposed. If you're doing that kind of stuff, really kind of weak close, it looks like, for the most part. Oh, damn. Oh, that's because I'm on percent change 5 minute. That's an interesting chart on KSCP. Shorts will be chomping at the bit on that one soon, if they're not already kind of being squeezed. But let's see. What else, you guys? Anything psychologically right now? Anything? It doesn't even have to be psychological. Anything. We're just opening it up to trading questions and whatever.
Logical. I don't know. I go through periods where like I'll have like 3 or 4 good months where I'm consistently profitable, and then I'll have like a bad month.
Yeah.
I mean, nothing earth shattering or anything. In general, overall, I'm still up. But I was always one of those people where I've always picked things up super quick. I was one of those kids that everyone hated in school, where like I didn't have to like show up. I didn't do any homework. I didn't do any studying, and I was always like making straight A's.
Yeah. I didn't
get so
I didn't go to class, but I didn't
I never did anything. But I did what I did enough. I put in enough work to where I could succeed. It's stuff that I didn't care about succeeding.
Right.
But I do care about this, and like I said, I've been doing it since 2020. Like at the beginning of 2020, I knew nothing. So I started like completely from scratch from 2020, and so I got 2020, 2021, 2022. So like basically 3 full years, and I'm like, I don't know, with what I'm used to, I'm kind of like, man, maybe I'm just like not good at this.
Yeah.
But I mean, at the same time, I've only been doing it 3 years. So, and it's not a thought that I have oftentimes. And I mean, it never gets to the point where I'm like, man, I'm going to quit. I'm good at this.
Yep.
But I just get, I guess, maybe overly tough on myself, thinking like, man, like, why can't I get this faster? Because I'm used to getting stuff pretty fast. So I don't know. Do you think that's a reasonable thought to be having, or?
Yep.
Doesn't make sense to me.
Yeah. So I don't know. I'm just like, I don't know. Like in 3 years, I would have liked to be further. I have like higher expectations for myself, so then I get hard on myself for that, and I'm like, well, maybe I'm not good.
Here's what I'll say first off, from my vantage point. Okay, if I started trading in 2020, I would be fucked right now. I'm telling you the truth. Okay, just because how everything transpired and the lessons that were learned in 2020, if you were learning to trade then, and the habits that were ingrained into you from what was working, is what wiped everyone in 2022, wiped them. And now the people who are left with a set of tools that don't work. That's the problem. That's the problem I've ran into with every 2020 trader, is that I have had to. It's easier to work with a trader from scratch, believe it or not, because I can help start ingraining habits early and not breaking old bad habits, if that makes sense. It takes a while. And so for the 3 years or 2 years that most people were just buying random dips, and I don't know what you guys were doing, but buying breakouts and just buying momentum because it was so good. It was good. Is not the same. And because of all the new traders, like algorithms took over big time, a lot of algorithmic trading, which is why stops get taken out like that too, you know, at key levels and stuff like that. And why after the stop gets wiped, it goes all the way back to high a day. And why I've been preaching for about a year and a half now that the only levels that matter to me in the morning after any period of time are low a day and high a day, is because of that. And watch what it does after it breaks low a day, because if it just holds immediately, probably high day, you know, if you're getting a bear trap and stuff like that in the right circumstances and markets. But I would take the fact that you've now been 3 years through some of the craziest markets, that you started in the craziest bull market, and 1 year later you saw the craziest bear market that you could imagine. Okay, back to back. That's rough. I wouldn't beat myself up, but take the fact that you've got all this experience now. You've been through a couple market cycles. All right. You've seen sector momentum come. You've seen patterns go and come. And it's a matter then of what do your trades look like? What does your body of work look like? Diving into the data, really understanding things, and then honing in now that you've been trading for 3 years on what you think that you'd be best at, you know? The other problem is that it changes so fast. Any minute the patterns are gone and it's like, God damn, you know, and you got to learn new patterns and stuff like that, or just wait. So
Yeah, that's one of the frustrating parts because, like I said, I'll hone into it well.
Yep.
And I'll be doing good for 3 or 4 months, and in my mind, I'm like, fuck, finally got it.
Right.
And then the next month, it goes, shit.
you never get it. That's the problem. So you will never have it. You'll have it like, I mean, don't get me wrong. I have it for like weeks at a time, you know, but I'm always chasing it, figuring it out still to this day. You know what I mean? It's not ever, there are times where it's very straightforward. All my best trades are, okay. All my biggest trades have been like, I just see the chart, my process takes me to it and I trade it and I have high conviction and things happen. Okay. The rest of the time I'm just trying to balance risk reward to the best of my ability. And find where volume is going to go. All right. Find where the most potential is tomorrow. That's all that matters. And if you're on that hunt and you're using the clues, because all I can go off of are the markets and my scans and the tickers. I have nothing else to go off of. So I've been in this perpetual hunt for so long. You know, it's second nature to me to when this happens, I look for this. When this happens, I look for this. When this happens, I look for this. And I don't look for stuff until something happens. You know what I mean? It's kind of one of those weird cause and effect things where I understand the effect of EDTX. And now I'm looking for GGAI, you know, or GGAA. And the next one and the next one and the next one. And that's been my life for however long. It's exhausting. It's been, if I wouldn't put the whole, I've been doing this for 3 years, I would not give that any weight. Okay. That now is the time where I'm supposed to make money because of how the markets have been. You know, they've been really fucked up. But you take that experience, you put it on your back, you know what happens in a bear market. You've seen that. And just push forward to the best of your ability, man. You know, do stuff like this, bro. I'm telling you, opening up, getting together, forming a network of people, is invaluable. Sandra crossed 100K a couple months ago or whatever. When I met Sandra in Austin a year and a half ago, this was a year and a half ago. She had been trading a couple years already too. And she was exactly at the point where she was thinking about either quitting because she's not sure if it was for her. She knows she loves it and she wanted to do it, or continuing on, you know? So she came to the boot camp. She told me that was like, she came to that to partially to make a decision. She came to the next 7 boot camps in a row. She was at every single, I'm not kidding you. Every boot camp I would be there, there's Sandra. Seriously. She crossed 100K a couple months ago, you know, and you guys have seen her in chat. She's on vacation or whatever, their family right now, but go back and watch the interview I did with her. Because when I met her, she was downtrodden. And the last boot camp I went to, when we did our cocktail party, she mentioned to me that she had just crossed 100K. She has to upload her trades. How cool is that, you know? And she directly credits like the boot camps. And it's not even just what I say. It's from meeting some of the people at the boot camps and exchanging ideas. And she formed her own trading strategy. She doesn't she doesn't hardly trade anything I trade. I don't even know what Sandra's trading. I'm serious. No, I'm serious. No, but she has a system that works for her. It's not my system, but she has told me she took the psychology. She took parts of my process, parts of other process to make her own little plan every day that worked for her little time frame. Cause she also has to raise kids and stuff like that. And she does a lot of work on mentality and she does a lot of journaling. She went on, if you watch that interview, she went on, Fiverr and found someone to make her this spreadsheet that she could use, you know, like she paid him like $20 and the dude made her a special spreadsheet with everything she asked. Okay. You don't have to be technologically advanced. You don't have to be the smartest person in the world. You don't even have to know too much at all about that kind of stuff. And she found a site where she can find other people to do stupid shit like that for her. But that will help her trading. Outsourcing. It's really smart. Really smart. Creative. You know, she's proactively trying to figure out these little ways to help her trading, which we are all doing now, you know, so. But a great example, stuff like this is, to me, the best. These little groups especially are my favorites because it's just a couple of us. We get to actually get into your issues, you know, stuff like this. Confidence is a big deal, man. That being said, if we're getting to like year 5, 6, 7, you know, then maybe I'll be like, I don't know, bro. You should just do this for fun, you know, which, you know what, is fine. If you love trading, you can trade and do anything. You can trade and do a job. I don't trade all day. We're all day here today because we're streaming and doing a boot camp, but you guys, you know, I trade the first couple hours and the last couple hours and some days not at all. So, but at the end of the day, once you're getting into 2-3 years, you're starting to get a body of data that you can then go back on. All right. Even if you haven't been journaling or spreadsheeting, you can still go back and get all the data you need from your trades, put them into spreadsheets. You could probably do it on Fiverr. You know, you could probably find a guy to help migrate everything for you, whatever you want to do, if you don't know how to do it, and start getting into that. And then give yourself time. Still give yourself time. This is about the time where a lot of the traders I know just started taking off. Like literally just started taking off. Like literally didn't make any money for 3-4 years, you know? So I think if I were you guys, I'd be excited that you're in a kind of a sweet spot right now where you've got a lot of experience and time on your belt. And now it's a matter of refining everything you do and figuring out exactly where the issues are, both in your data and then psychologically, or if your knowledge is wrong or your entries or whatever it may be. At 3 years, sometimes it will take some kind of other shift because you're so set in your ways too, you know? So that's all you got to keep giving it time. Don't beat yourself up, especially because these last 3 years have been really schizophrenic, really tough with big macro things and the market's changing like you've never seen. So yeah.
So I have a follow-up question to kind of what you just touched on.
Mm-hmm.
So you've been teaching for how long now?
5 years, about 6 years, maybe.
Students.
Like actually in my groups.
In your groups or personally coached?
Oh yeah. So that would be, I don't know, 500 people maybe. Yeah. It's a very small comparatively number. It's a pretty small number.
So if you could narrow down just from that body of work of yours, what was the common thread where you saw either the light switch on and things turned around for you? What would you say that thing was that they all changed or they all worked on?
It's always been a mentality thing, I think. A mentality thing, psychological thing, which is why I want to do this trader therapy every Friday. Discipline, work ethic, tracking. They know their data. They know where they're good at and they know where they're bad at. And they've been doing it for years. So they're really starting to hone in on exactly what they're good and bad at and what times a day and all those things. Granted, the markets are always changing, but they start to hone in on setups where they know they can make money. And when the setups are then there, they are starting to able to make money. That and the understanding, a big jump point for a lot of people is that risk reward understanding. That over time we have to get that and then maintain it. And if we can do that, it's kind of hard mathematically to not be profitable because I can lose more than I win and make money. That's what that is from a mathematical standpoint where we have to get to where, and then you lose the fear of losing. Cause I know I got to lose 4 times to win 6 times, or even I got to lose 6 times to win once. And that one will wipe out my 6. We get onto that kind of, it will snowball. I promise. If you can get to that frame of mind where every trade, that's how I'm thinking, and then I don't care about losing. I cut, and that cut of loss, I followed my plan. It was a good trade, right? Because that's going to enable, if I win tomorrow, that's going to put me 5 of these trades ahead. I can take 5 losses, you know. That's a big, huge deal once people realize that. And then there just comes a point that I have found where it snowballs. All the knowledge that you have attained, all the setups that you have played, align with the markets, and those setups come in, and the markets are there for weeks, and you change your life over the span of a month or 2 months because you're going hard at a pattern that you're confident in and that's producing and fruitful for you, and you're sizing up. You'll take some big losses along the way, but you've gotten so far ahead. Happened to Jack, happens to everyone, you know. Even some of the bigger losses I took, I could withstand bigger losses. It was part of the plan, you know what I mean, to be able to do that. It changes the game. So I find most traders, there comes a point where it just starts to pick up and you don't even realize it. You know what I mean? You just, the culmination of all the work and your understanding of the markets and the patterns and what works for you and what doesn't work for you. And then when they come in and out of play, and that perfect macro event that has that sector and all that good stuff, and you're able to push buttons all in on my accounts, which was what that looked like for me when I was trading like Bitcoin stocks back in the day and swinging them. And once I understood sector momentum, I would take, you know, my growing account at the time, but still smaller, way smaller than now. And I would have it all in across 5 or 6 stocks, like you'll see me doing on AI stocks and some other stuff. Jack and Dom and those guys, you know, those guys came to me in 2018, I think, because they wanted to start to learn listed stocks back then. And I'm like, cool, let's do it. So I brought them in. They were both good at cutting losses and good with risk reward already. I'll say that, you know, they kind of understood those principles and were disciplined about that. But at the end of the day, I told him, listen, guys, like, you're really good at OTCs. You know, Dom, I went through like his early trades and stuff like that. I'm like, this is sick. Make sure when OTCs are there that you guys take them for all they're fucking worth. That's what I told him. And I tell people this all the time. When your patterns are there, press. You have to press. It's just like blackjack. When the count gets to where it needs to be, you know, you press. You put the chips in. When the time's right, when the probabilities are highest. And then you put less chips in when the probabilities are worse. When there's setups that you don't know, when there's setups that aren't working, when the markets aren't fruitful, you don't risk as much. You're not going to make as much, but you're also not risking as much. And that's the whole point, you know? Yeah. That's all I have to say about that. Okay. Good questions, though. This group here, it's not really, we're not noobs, you know, it's years of experience in the room. So we'll get together more one-on-one too for some, you know, for you guys who have been doing this for a while. Maybe we got to kind of look together and see if I can't help find a pattern in your trading or something, you know. That's what I'm here for. So we can kind of get into that stuff, but I'm not doing it unless you're fucking doing it. You know what I mean? I'm not looking at your trades unless you first have gone through all your trades and you can tell me what you fucking think about it. You know what I mean? And that goes for everyone in the pack, you know. I have no problem going through bodies of work, you know, but I need direction too. I'm not going to look through it and shake, and have to Sherlock Holmes your shit. You know, it's like, I'll be Watson. You got to be Sherlock for yourself, and I will be Watson for you. Cool? Yeah. Anyways, quick check on the tickers. EDTX is still halted. That sucks. KSCP's on this 4 or 5 day run. Good volume too, actually. Nice multi-day run. This is a fucking bottom bouncer. So this is the pattern that when I say bottom bouncer that I am talking about from back in the day. Okay. From the 2018, 17 era guide, where I would see these stocks go from 50 cents to $3. and this one's already at 2 now. And it wouldn't be intraday, it'd be a week, 2 weeks, but these kind of swing moves I was seeing, and I'm kind of upset because I've seen a couple of these charts now where like some of these charts had bottomed out and the start was with big volume. So some of these bottom bouncers I would watch these days for big volume and possible multi-day moves for breakouts. All right. Yes, I said that, breakouts. I'll be watching for multi-day breakouts on bottom bouncers going forward next week too. A lot will be dependent on the markets. You know, if we get big pool in the markets, then, you know, we'll get those ebbs and flows in small cap too. Let me get back to the chat. I haven't looked at it for a while. Asa said when it comes to big positions, I'm losing again and again. Total loss 60K already for all these years. About to quit. Yeah. You know, I'm never one to say quit or don't quit. If you love it, then you'll figure it out. With the right guidance too and the right ideas. That's the other issue is like just all the ideas are the same that I learned and early on. And if you're chasing strength and you're chasing breakouts, you're going to lose over time. You know, there are certain markets where you win, but not only are you going to lose, but you're going to lose big when you're wrong. My whole goal is when I'm wrong to not lose big. That is just my goal. So that's what that low a day entry shit, half of that is so that if I lose, it's just not big. And if for some reason I don't get stopped out or I don't stop out or all the dumb shit that happens to people, it's still not big. Okay. That's the whole point is like, because I'm so fallible as a human still, you know, I try to avoid putting myself in shitty positions, like trying to buy micro floats that are up 400% on the week. You know what I mean? That's a poor decision. Okay. But if you're just losing, first of all, you got to size all the way down. That's the first step. Second of all, you have to forget the 60K. All right. You're probably trading on a 60K red day every day. You know what I mean? Tell me if I'm wrong. Asus in the chat, but you're probably trading that 60K every day as a revenge trade. You know what I mean? So there are probably a lot of issues. I work with a lot of people, man, who are in holes much bigger than that, actually, believe it or not. Who I've seen a couple people recently over the last 7 to 8 months get to break even who are down like 60, 70K. So it's totally doable. It's just a matter of you need an abrupt shift in a different fucking direction, bro. That's what you need. An abrupt shift. If you're thinking about quitting, you need different perspective. So no, Sandra's not on YouTube. She's in my chat. And I'm going to try to get her to do some more information on my site for people. She doesn't really want to do that, but I'm trying to get her to. I agree, Chase. Chase said go ahead and stop for a bit, take a quick break. It's okay to take a break and clear the head. I totally agree with that. Taking a break always helps. But taking a break will not solve your shitty trading. That is the problem, you know? Taking a break can help you reset mentally for the day or for the week, but it won't solve your shitty trading. The only thing that's going to solve your shitty trading is work and a shift of some sort, in whether it be your habits, your strategies, your entries, your psychology, whatever it is that you're doing, your stock selection, your pattern selection. And most likely it's a mixture of all of that, you know? So that's why I kind of say it sometimes takes a swift kick in a different direction. But it's also good to take a break. Take a break, but then when you come back, you have to know that you can't just do the same thing or you get the same results. It's a definition of insanity, trying the same thing over and over again and getting the same results. And that I also learned in AA. Every speaker would say that. Okay. We're going to be wrapping up here pretty soon. We got, for those who just tuning in, we got New York City next Thursday and Friday. We've got some seats left at New York City. And then 2 weeks after that, we're doing Miami. And then those are the only boot camps I'm going to be doing for the next couple months because I've got some family stuff to attend to. And I've just been traveling all year doing these. So I'm going to kind of give my wife a little break and whatnot. So we've got that. We got New York City next week if you want to come down. Then we've got Miami the week after that with a couple of special guests that I'm bringing to that one. If you're looking to join the pack, we do live trading every single day, every morning. Pre-market prep live every morning. Power hour prep every day. Trader therapy on Fridays. If you're a lifetime member, you get my cell phone number and you can hit me up. Monday through Friday market hours. Like a true mentorship, man. Kind of like a little family. So anyone who wants that information, I think it's under this YouTube video, or you can just hit rwtrades.com. I think we got a coupon code under the video too. So it's just for you guys. But would love to get more of you in and, help change some more perspectives and get you on the right path. Okay. What else? We got 10 minutes left, man. 10 minutes. PRFX took the old dumpski. Again, we're talking about a first green day, sick first green day bounce, right? But at some point, if you're holding it at 20 and you're like, maybe it's going to get to 20, you're going to be cutting this like when it doesn't get there. You know what I'm saying? I would be, at least. I'd be like, oh, it's almost there. Bag holding's not fun. Who here's bag held? All of us, right? Yeah, all right. So you know exactly what I mean. Just like they will capitulate at some point. So that 16 we talked about earlier ended up being it. Sweet move. Sweet first green day. And they're still 100% gainers. So I'm excited going into next week too. Even though your EDTX and your GA got halted. Put a damper on things because I don't know what EDTX was about to do today. It was probably going to get fucked, but. Okay. Questions, y'all? Yeah, anything, man. And we're just hoping. We only got 10 minutes left.
There is some interesting numbers I've come across using TraderView.
Mm-hmm. I like TraderView. I haven't used it too much, but I've heard good things. And
so, like, I was just looking at the last year and a half, and literally, from what I took out of the market and what the high point of the trade was, like if you took the highest,
right.
which you never can, but the difference is about 15 times. And I've never been able to figure out, and this goes for every single year, like, if I could figure out an exit that took a percentage of that, you understand? That's better than what I'm doing. Like, how would you go about it? I feel like, I don't know, is it somebody that knows how to code or something? Like, who could figure this out? Figure out, because I could give you all the trades, and I could say, hey, figure out an optimal exit. That's really what I'm looking for. Because the dollars.
I see what you're saying.
Yeah.
Like taking your data and trying to figure out. Yeah, I gotcha.
Yeah.
I've thought about it. There's a company called Scripts to Trade. Have you heard of them? They've reached out to me to do some things back in the day, some promos and stuff, and I was just busy. But I know Gratani has endorsed them in terms of data and stuff like that, and being able to do some cool stuff with it. So I would just, yeah, I would outsource. I would try to find that would be, and let me know, man, because that would be pretty cool. I've thought about taking the data that I have, and some ideas that I have and trying to get some, and just having them scrape for me and get, some more concrete statistics, I guess you could say. And the only issue I have with statistics, and this is my issue with backtesting strategies for small cap, was like the backtesting strategies does not take macro into account. It does not take market sentiment into account. It doesn't take what's going on with SPY into account. I'm sure I could probably pull numbers from the overall markets and cross-reference them to figure out exactly how inflow, NASDAQ, like all that good stuff. But I'm talking about runners because I'm not an investor. I don't care about long-term stuff. I'm talking about what's running today and tomorrow and the next day. Volatility. The volatility comes and goes so much that the same setup that would be fruitful today and tomorrow and the next day wouldn't do shit next week. You know what I mean? So in other words, the numbers when I'm back testing don't take what those market conditions were into account. So it will spit out a number for me that generally this is the number, but in what market condition are we in and what conditions does that pattern work or not work in the best? You know what I'm trying to say? And I'm sure I know there's a way I could cross-reference data and stuff. I don't want to do it. I don't need to do it because that's not the game for me so much. And I don't necessarily, I mean, I do. I know what my personal statistics are per setups and stuff like that, but it would be cool to know. I'm going to do it at some point. I've been planning on it for a long time. So I thought kind of duck style statistics on long setups, I guess you could say. But it'll be tough. I know people do already have statistics on first green day gappers and what they do and breakouts and stuff like that, which you could probably find. Yeah. Let me know. That's who I was going to use for my first batch of data that I was going to try to get. Yeah. Anything else? Anyone have any questions at home? Thanks for joining me, by the way, especially you guys in person. And we're all kind of close, so we'll get together more here in Texas. And for everyone who joined from home for the day, I appreciate you too. It's been a good respite from all the kind of madness in the personal life at the moment. Good lessons this week. Good lessons, giving me some hope for next week as well, to have some decent volatility again. So I find usually if Friday is okay, like we have runners on Friday, Monday will generally, I expect some runners on Monday. If we don't have runners on Friday, I'm not going to expect runners on Monday, and I'm going to sit on my hands on Monday. So this Monday would be the example of a Monday where you might see me being a little bit more aggressive than you normally would see me on a Monday morning, where I'm usually just trying to get my feels for the week. PRFX, big fade for now. Freak looks like it broke that level. No, still holding. Freak still holding 65, 64. And still being rejected in the 70s for now. I wouldn't be surprised to see this gap up. Big ATM, remember, if you remember from this morning. But all right. Do I ever take profits too early? How many attempts to reach target do I give it? Yeah, I always take profits too early, like anyone, you know, but my goal is always to take at least a portion of my position off too early. I size out almost every trade if I can. So I don't mind. I don't mind taking off a couple of my shares too early, a couple of my shares too late. Some at the top, some on the way. You know, that's how I do it. I size out into strength. It used to fuck me up when I did that. If I would just buy a position, sell it too early, that fucks you up when you see it go $1 million. You know what I mean? Of course it does. When I started sizing out, it helped that a lot. You know, because I could take 5,000 shares, I could sell 1,000 too early, but still have 4 in the game. I can sell one half, you know, into the next strength and one into the next strength and still have skin in the game. I used to buy it, it would spike more, and then I'd buy it again higher, you know, chase it higher after I already sold and had a decent single, and then have inverse risk reward in a high a day, and then it would go back towards low a day, and I would give it all back. So that was a psychological issue that I noticed in my data through my trades, tracking my trades over the span, and I forget how long it took me to realize that was happening. And it specifically happened once I got over PDT. It is a specific PDT problem that I had. Just to let you know, like, and this is in the new guide too, but I got over PDT and I found myself having still good trades, but then giving back gains a lot because I would be able to re-enter. You know, I sold too early, but who cares? I can re-enter. And that, you know, I had to learn how to deal with that. So. All right. 1 minute. We're going to wrap up the stream. Thanks everyone again for joining. I'm not sure if we're going to be streaming anything from New York or Miami. I'm pretty sure this is going to be the last stream for a little while. But I hope you enjoyed. We'll get it up on YouTube for you guys as well to watch the replay. So hope you got something from it. And we'll catch you soon. If you're not in the free chat, you can join the free Discord. If you want to be in the Wolf Pack and trade with me every day, you can do that. We got a discount code below. Dallas, New York next week, Miami a couple weeks after that if you want to come see me in person, and new trading guide dropping this week. So really stoked, really glad to be back with you guys. Thanks to everyone again. And we'll catch you guys all soon. And you guys, man, thank you so much for seeing you guys again. You know, like I said, we should get together more. I'm down if we get together like once a month or something and just trade and kick it and have some fun. I think that'd be cool.